wants to see a countdown where we got this volatility coming in on gold? Welcome. Welcome, my sweet children, to our journey. To our journey towards profitability. Right now, I'm short gold. I should be long. I went long this morning, made some money. Now I shorted gold. Why? I'm closing the trade. No, I'm not. I'm waiting to break even. I'm waiting to break even. It's a small loss for man, but a big risk for humanity, but a big potential profit for humanity. So I will wait and we will let it play out. Good morning, everyone. I hope you're doing fine. We're trading gold. We're making money. Look at this, guys. I'm up almost 4% on this account. I was 1% away from losing the account. Now I'm almost 4% away from, well, yeah, about 4% away from hitting that target. Let's go. Dump it. You can see here this morning, I took a quick long on gold. I actually long this breakout for a quick 2R. Let me just adjust my camera a little bit. Give me a second and I will fix that. All right. Here we go. Here I am. Okay, so again, I'm short gold here because I'm thinking that we might see a move back down to the breakout area. This is obviously on the 5-minute right here. Yes, not in profit until it closed the trade. This is interesting comment, and I will choose to ignore it. My unrealized profit and loss is telling me otherwise. What is this? A $5,000? Yes. That's right. It's a 5K high stakes evaluation account. And, you know, I'm of the opinion that I'm just going to try to go all in on this account. I'm going to try to really put the risk to the very limit here. See, how much can I press it? How quickly can we scale this account? Okay, you're having very, very good questions right here. Risk management is basically, I see a trade, I go all in. No, not like that. I'm risking about 1% per trade on this one. If everything goes well, if I'm getting into drawdown, of course, I'm going to start limiting that risk and maybe take a little bit slower. Lot size on gold, I got this lot size is 0.13. The lot size on Euro AD that I have open is 0.29. I think everything is looking somewhat good here. Can you drop a link how to have similar box order? I don't know what you mean by box order. Do you mean this position size calculator? All you have to do is you have to Google position size calculator for MT5. And then you're going to get a link to a place called Earn Forex. All right. Let's see what we get. Gonna hit that TP. Let's see. Maybe we can push this account today. Maybe we can get this to target today. Highly unlikely, but very possible. Very possible and highly unlikely. That's kind of like my trading, my favorite quote in trading. It's highly unlikely that you'll make a lot of money trading, but it's very, very possible to do so, right? Okay, so what do we have here? We have currently unrealized profit and loss. We're up $230, which means only that unrealized profit and loss is halfway to target. How can I post an account and give away someone through code? No idea what you mean. How many pips minimum should you play stop loss? Doesn't matter. Pips, I don't care. All I care about is structure. All I care about structure, right? It's if structure is telling me put stop loss 5 pips away from entry, then that's what I'm gonna do because the structure tells me so. It's all about the structure. I don't look at pips. I don't care. All I care about is what's the behavior of price. I want you all of these rules that you might have. Oh, max lot size. You can't have a stop loss that's bigger than 5 pips or 10 pips. Take all of that. Take one of these. Take one of these. I got something right here. You take one of these. You take one of these. You take all of that, and then you drop it just like that. That's my headphones. I'm not gonna throw them away. It's an experiment. Example. It's all about price. It's all about price. If market structure is telling you that you have, for example, let's say if this, okay, I'm gonna close this one, closing that one to break even. So if price, hits this level down here, I want to go long. Okay. Now, where's the invalidation level for this one? We go back down one level. Okay, what's the next level below? It's going to be that level right here. Okay, something like that. So we want our stop loss below that level. That's going to be the stop loss. Do I care how many pips that is? No. Why should we care about that, right? Why should we care about that? Because the number of pips on the stop loss doesn't matter. All that matters is the structure that we're trading. Okay, so we put the fibs on here. We want to make sure that we're buying like the reload zone. So the reload zone is actually right here. So this is actually a really good level to. I really like this level as a potential long for gold. Now, as we know with gold, sometimes it's just going to break all the rules. It's never going to have that perfect retest. It's going to, it's going to react to the level right above that level. By the way, guys, do you want a free account? You probably do. If you do, first of all, write so in the comments and then like the video and hit that subscribe button and notification button to make sure that you get notified whenever we do go live. Because this Thursday, we're starting with our Thursday live streams and we're going to do a little bit of a celebration of the fact that we're starting with the Thursday live stream. So we're going to do some giveaways. And only people that are subscribed to the channel are able to get in on those giveaways. So subscribe. How do you target your TP? So how do I pick a TP? So okay, well oh man, you're not supposed to be spamming the chat. God damn it, guys, you know this. Well, you're out of here. You're gone. I'm gonna throw you in the bin as well. Where are you at? Right here. Right. Well, spammers have, I wish you an instant stop loss on all your entries. All right. See what we get here, guys. So we get a good level below here on gold. I think price is definitely reacting to a support level right here. You do see that my confluence is I see number up, I long. That's my confluence. Okay, so we're in the 5 minute right here. Let's look at the 1 minute. Yeah, okay, this is a long. We're going to go long here. We're going to go long. We're going to go long with a short, with a tight stop loss. And we're going to be targeting the highs. We're going to go in with 2% risk. 2% risk, guys. Because why? Because I can. That's number one. And secondly, if this hits TP, we can celebrate. If it hits stop loss, I will switch. I will simply switch screen to another market. And we will talk about something else. What is the other pair running? The other pair is Euro AD. We'll look at that. So I'm currently long on gold, 2% risk. I don't think this is against the rules of the 5ers. This is what's against the rules of the 5ers. Too big of a lot size? No, can't be. I'm not break. I am the master of risk and a slave to volatility. I'm not breaking rules. I'm creating rules. Just waiting for risk department to send me an email like, God, dude, you gotta chill. You gotta chill. Gotta take it easy. Take it easy with the lot sizes, man. And I say no. Never. Louis says, stay short on gold. Well, I'm long. I am long, and I will be staying long. I will be exiting this trade up here for a win. No, you can copy trade. What's hedge? How is this hedging? I'm taking a position long. I don't have it short. How is this hedging? Hedging is when you take two positions in and then you take a short and you take a long and it's not hedging, man. Yeah, you can copy trade. We're not officially recommending copy trading. We're not officially recommending a copy trader, but as you can copy trade, no problem. As long as you make money. As long as you're profitable, you can copy trade as much as you want. You can hedge. I mean, I guess you can hedge. I don't know why you would want to hedge though, because I don't think that's a valuable strategy to be using. But if you want to hedge, then go ahead and hedge. Okay. Okay, Euro AD. Let's take a look at Euro AD. This is the long that we have on Euro AD. Stop losses at entry. Now, if TP hits right here, if TP hits on Euro AD down here, then I will pass the challenge in one trade. Okay, one trade. I'm currently between entry and TP. I'm halfway there. Look at the daily. Look at the daily. Are we finding this is frustrating? Because there is, of course, a chance that prices is going to go all the way back up to entry and take me out. But that's okay. That's okay. I'm going to look for another trade like this one. There was a gap on the 1 minute earlier today. Doesn't it have to be filled with at least nothing has to happen, That's the thing. Nothing at all needs to happen. There's no rules in the market. The only rule in the market is don't be stupid. Just make a plan, follow that plan. If you feel like 2/3 of that gap needs to fill for you to go long on gold, then that's what you need to do. For me, I couldn't care less about gaps. Gaps is not in my vocabulary as a trader. That of course it's in my vocabulary, but not in my I have a very weak vocabulary in general. Okay, so this is looking good on gold. Could be better. Yes, you can trade with an EA with the 5ers. Just make sure you're profitable, man. Just make sure you're profitable. These EAs, they can take your money as quicker as you bought them. Position size calculator, you can go to Google. You can Google position size calculator, MetaTrader. There you have it. How did you decide to take a short in all-time high? Can you explain, please? Thank you. That's a really good question. Okay, so what I did was I think I had to go over to TradingView to actually show you what I did. So let me just quickly go over and show you what I got on TradingView here. So this is the first long position I took on gold this morning. I believe I closed it up here for like a 2 hour. And then when that long trade, where's TradingView here? Okay, so this is the first long position I took on gold this morning. I went long up here, and then I shorted. I believe I shorted somewhere here for a move down. Did I make some money on that? Let's go to the history. Yeah, I made a small amount of money on that one. And now, and I basically, you know, I wanted to go long down here, and I saw a top formation here with a breakdown. And then, of course, if you want to go long lower than current price and you see a top formation on a lower time frame above that level, why not just short into the level where you want to go long? That's the way kind of that's the way I try to trade when I'm trading lower time frames, when I'm scalping. Just follow whatever you think the price will do in the next short term, okay? And if that's a short and all-time high, so be it. Is it a good idea? It's a good idea if you make money, and I did make a small amount of money on that one, so I guess it's a good idea, right? It's all about making money. I don't care about being right. I don't care about being wrong. All I care about is what's my bank account like, the number in my account. Do you care about being right? Well, then you're gonna be losing a lot of money. Is platinum tradable with the 5ers? Why you want to trade platinum? That's a better question. Not sure it is. I think it is. Maybe it is. Yeah, I'm just gonna go in and I'm gonna adjust the long tool here in TradingView with the correct settings. Okay, so my TP is up here. I got my stop loss down here. That stop loss is good enough. Good enough. I think it's good enough. Is it good enough? Yeah, I just said it's good enough. Now I'm talking to myself. Do you ever talk to yourself? I feel like as someone doing these live streams almost every day and recording videos, I'm just down here in my basement, just basically talking to myself, which imagine that I'm getting paid by talking to myself. Actually quite a wonderful experience. Yeah, that's right. If the final results of whatever you're doing is not profit, then whatever you're doing is not is meaningless. Okay, meaningless. We're not analysts. We're traders, right? Now I do love technical analysis, but that's right. That's right. Shavla. We are all lonely. It's a very lonely in this trying dark times. But with the adrenaline pumping through through the entries in scalp trading, we can at least feel something. You know, that's why we do this, right? I trade with a tight stop loss is to feel human. Have I opened a short on 80 USD? I do think that. I have? Do I have an open? Do I have a trade on 80 USD? Yes. I have a long trade on 80 USD. I have a long trade on 80 USD, up 80 pips on that one. I am currently up in total, I believe 300. I got stopped out on gold. God damn it. Up like 300 pips on 80 CAD. We're up almost 400 pips on NCD USD. We are up 100 pip on Euro AD short. I'm hoping that we can find a resistance somewhere. Somewhere entry. I gotta have to keep this one open. Yeah, okay, gold breaking down. Let's switch over to MetaTrader, and we can take a look at Gold. Let's see. Okay, gold coming down. I'm still going to long this, obviously. I'm still going to go long on this. So I'm going to open a new position. Is it 2% risk? Yeah, I mean, yeah, definitely. This is best possible entry right here. This is best possible entry. Where's my stop loss at? Down here? Okay, I got to move that down. I got to enter quickly. I can't, like, what is this? Okay, stop loss down here, 2% risk. I am in. Let's go. You don't risk it, you know, you'll never make money if you're not risking money. You gotta lose some to win some, right? That's how it is. Okay, we're in profit. We're $15 richer. Actually, no. Oh, I'm not even showing the chart. I'm just showing myself. There we go. That's trade. Okay. All right, let's see what we get here. Euro AD not looking beautiful. Not looking beautiful. But I don't care. You know what? You know what I find is you know, super important in trading, and I guess I assume you can all relate, is, you know, you just have to stop caring, you know? Like, really, you have to stop caring about your open P&L, your open risk, your unrealized profit and loss. Like, just do not care. Like, just disconnect from any emotions that does not have to do with your plan of the trade. My watch just broke. You see, I don't care. Move on. Throw it in the bin. There we go. Motionless. And I'm gonna cry myself to sleep. How we do it over here. I feel like gold should move higher here. I feel like that's something I would like to see. All right. Let's see what we got on Euro USD, because now gold is feeling like it's the best thing to do when you feel like your stop loss is going to hit. You go to another pair. Right. So on Euro USD, we have a strong breakout right here. Are we creating a top, or are we creating a continuation pattern right here? This is actually quite a nice flag, isn't it? You have the flagpole, and then you have the flag, and you have a breakout. Okay, let's go long on Euro USD just because we have a flag. I'm not even gonna look at the higher time frames. I'm just gonna go long. And where do we put stop loss on the flag? We put it below the pattern, below the low of the pattern. And target, are we even gonna use a target? Why is the target all the way down here? Okay, target is the measured move. Okay, so I'm going along here. Let's go. Let's do this. Okay, can I go long here? Yes, market. Yes, trade. Is it Euro USD? Yes, it is. Okay, let's go. Okay, so what's the measured move of a flag pattern like this one? Well, what you do is you look at the impulse move from the low of the impulse move to the very high that created the high of the flag, and then you take that and you double it. Yeah, stop loss is going to be down here. Yeah. Okay, so you take that and then you double that on the breakout. So that's going to be our TP. Okay, so TP is going to be based on the measured move, and it's going to be up here. That's going to be the TP of this trade. It looks like a 2.5 hour trade. Looks like a 2.5 hour trade. Is it? Maybe it is. Let's take a look. Yeah, 2.14 or 2. Round 2. Let's go with that. Henry is shorting your USD now. Well, I'm gonna have to mute you. No way I'm gonna let you decide in which direction it's most likely. I'm the master of risk, not you. Gold is in profit, although quite weak. Quite weak. Your USD is not very much in profit. I got that low. What if both of these trades are gonna stop me out? I will lose so much of what we've gained here over the course of the last last weeks. I've been disciplined, and now it's just, you know what? I don't care. I don't care. I don't care. Why you have both position of sell and buy in your USD? What's your intention? My intention is to make money. That's it. That's all. Okay, we're long on gold. Gold is looking good. If we break these highs on gold, then we are going straight to TP, straight to the promised land. The where it's just filled with golden fields of gold. Apparently a room that is a box that is 20 times 20 meters can fill all the gold in the world. It's going to be a relatively small field of gold, but it's going to be a field of gold. I imagine myself as, what's that? What, when, the gladiator, when he like walks in the field and it touches the wheat, like I imagine myself walking there with my 5ers hoodie and just touching the gold bars, and just every time I touch them, it's like a sound of a market order executing in the MetaTrader terminal. And then I come to the house where there's like a trading station with 200 screens and an EA that just trades automatically. You just joined. Welcome. Did we check the high time frames on the 1 hour? Well, I know that we're at all-time highs, and we have, it's basically, I would think that if we zoom out, we would see just a straight line to the upside is what I'm thinking. Let's take a look at the 4 hour. Yeah, look at that. It's just one big move to the upside. On the 1 hour, yeah, this trade right here is not based on the higher time frames. This is a trade based on low time frame volatility and momentum that has not yet to be shown on the higher time frames. The fractal nature of price action, the fractal nature of market structure tells us that whatever happens on the higher time frames will always happen first on the lower time frames. Which makes more money, scalping or swing trading? Yeah, so this is actually a good question, an interesting question. I would say that long-term swing trading is going to make you more money. Short-term scalping is going to make you more money. The problem with scalping is that maybe just 1 to 5% of people trading can actually trade, scalp long term. I've never met a long-term successful trader that started scalping and is still scalping today. Never. Usually what happens is you start scalping, you day trade, and then you go into swing trading because you realize that you're able to make the same amount of money swing trading as scalping, but you're looking at the charts, 10% of the time. Okay. I mean, what I'm doing with my personal account, I'm swing trading on my personal account, right? And I make a good amount of money on that. And, yeah, exactly. Saul is one of the few people that is doing this long term, He's one of the few people that I've seen is actually still scalping to this day, which is like crazy. All right, gold is breaking out. We are currently in good profits on gold. Let's go. Can we hit that TP? Let's see. That TP means a 2% profit on the account. I'm currently down on Euro USD. Let's look at Euro USD. It looks like a potential fake out on Euro USD, but do not fear, because the breakout will lead us into the path of righteousness. We will see the light at the end of the flagpole.
Boo.
All right, what's up, Dirk? How's it going?
Good. I just saw you are all by yourself here.
Because I don't have any sound on. Now. Okay, now it's all good.
Okay, okay. I thought it's my mic again. Yeah, I just saw that you are all by yourself, you poor soul, you. So I thought, before I have to get to my next appointment, I can join you for 10 minutes.
Nice.
What's everybody doing? Is Jonatan trading well today? Or
I am.
He losing? You are.
I think I'm trading quite well, but I'm looking at Euro USD here. I might close this position on Euro USD because I'm trading a flag breakout here, but it seems like there's no real momentum in this breakout. So I might close this position if we break below this low time frame area right here. I also have a trade open on gold.
Nice.
Which I quite like.
Yeah, it has really established itself over 3K now. Yeah, crazy.
Yeah, amazing.
I actually did a little short trade earlier on gold.
Yeah, me too. I actually
27 to 21.
Nice. Yeah, that's about. I think that's about the same trade as I took. I actually shorted that move as well. I went long on the breakout, and then I shorted the rejection.
But it looks like it's gaining momentum now again, breaking through the moving averages now, and then on the pullback I would go long as well.
So what do you think? Is there any? I'm thinking about removing my TP on this one. But then I look at the 1 hour, and then I look at the 1 hour, and I feel like it's probably in for a correction.
But I mean, it makes sense, no? That's like the strategy on every gold trade for the past days, really.
Yeah, look at this. Look at that like breakout.
Just keep your long position, have your stop loss, and let the stop loss trail without having a specific. I mean, what do you want to choose as a take profit anyway? We're in uncharted territory, no? Maybe you can work on something like this extensions.
I'm just looking at these very, very local highs up here, for a TP. And I'm risking 2%, so it's quite a big position.
Okay. Oh, your equity is 5-1 now on that account. Nice.
Yeah.
How much do you need to pass the evaluation on this one?
400, so 5,400.
Nice.
Yeah, I'm definitely getting there.
And it's like so much nicer, with a small account where you are you can just try out things, without having the fear that you go down by 1K or 2K or 3K on a big account. I'm thinking of doing that as well, but then again, I'm also doing crazy things on my gold evaluation account sometimes.
But what I've done is simply, I've just forgot about everything, and I'm just telling myself, okay, whatever I look at price and whatever I feel is most likely to happen, I will trade that. And it's surprising how well that works when you're on the lower time frames, because for me it's like the less I think, the better I trade.
That is very true. Yeah, I was just recording a podcast with a friend of mine that we do once a week, and we were talking about like how to approach the markets like they are at the moment. Everything is a bit chaotic. Everybody's waiting for the next tweet of Donald Trump, which moves the markets then again, and how to deal with it. And I said, well, so I was talking about the gold trade yesterday, and then in terms of cryptocurrencies, I said, like, I was staring at my charts yesterday the whole day, and I ended up taking one trade because I am really always waiting for my crypto trades, that is, for the stars to line. So I want to see multiple of my strategies pointing in the same direction, because I always have in the back of my mind, oh my God, Donald Trump is going to wake up soon, and probably he's going to grab his phone and tweet something that's going to move the markets. I just went long gold, by the way, as well. And I'm just,
Nice.
I have a 0.5% risk on this one, so I'm going to trail that one now and just keep it open for maybe the next couple of days. Let's see. Probably this is the top now, then, of course.
I don't know. I kind of want to keep. Well, I always say, I always say, I want to leave my gold trade open, but I feel like I don't want to give. I don't want to give the. I don't want to let the market decide too much.
It depends also, no? If you're working here on the very low time frames, so of course makes sense to have your take profit pretty narrow there as well. And taking profit is fun also. It's a good feeling, no? When you have you judge the market right, you're on the right trade, eventually you want to reward yourself with a profit.
Yeah.
You don't want to see things like, I'm up 2% on the trade just to see it coming down then again and ending up with a loss.
I'm moving my stop loss close to break even to these lows here, and then I'm just going to let that one run. Looking at Euro USD, it is consolidating a bit too much here. We also have a lower high here, so as long as I'm actually going to limit the stop loss on this one quite a lot. So I will actually move my stop loss all the way up here, right below current price, because I want to close this trade. But sometimes I feel like it's better to put the stop loss right below, because this can be the low, right? So instead of closing this trade, I'm going to tighten the stop loss a lot, and then have a similar type of loss than if I would close it at market.
Mm-hmm. We have some news also later, no? Housing starts coming soon. That's still 2.5 hours, okay. And inflation rate in Canada also today. Oh, they are down to 2.1% there already. And then Thursday we have interest rate decision. But that's going to be not a real event. I think 99% expectation for interest rates to stay unchanged.
Right.
How much risk did you take on the gold trade?
2%.
2%. Yeah. I have a 0.5%. I can actually up my risk well. But you know what? I'm going to wait now if we really see the breakout. And then I would maybe even add to that position and try to let it run and not get the clickety-click fingers later to if it's up by 100 or 200 or something like this.
Yeah, it's really difficult. But I think, I think I'm just reading a message I got here. Just give me a quick second.
And I have to remember
to
stay hydrated. I always forget to drink water a lot.
Yeah. Okay. I'm stopped out on Euro USD, as you see here. So breaking down. So I think that was a good stop up. Oh wow, it's really breaking down heavily now.
What was that?
Yeah, I'm wondering the same. So I probably want to short this now, because that volatility is obviously quite big. I'm gonna look at a short here on Euro USD, looking for. I'm gonna take that trade here, because now obviously with that move to the downside and that breakdown, I'm thinking we might have a rejection here. I don't know why this happened, but what I'm seeing now is a possible lower high around that area. So we'll see. I'm short on on EU here, and I will be looking to take it down to this area. Getting bought up quite nicely here, but probably we had a lot of people being long here. That looks like a liquidation cascade or whatever that's called, when you have a lot of orders in the same place and just taking out all the orders. If that's the case, then we're probably going to move higher, but we'll see what happens here. We got gold about to hit that TP. We're going to move TP down a little bit just to account for the spreads. The spreads did widen here, so I'm not sure what happened in the market. I'm going to take a look and see if I can find anything.
Cannot see anything even.
No, we did. Right. We had the German economic sentiment came out, and we also had the Euro area. The German economic sentiment came out, and that was
much better than expected.
Much better. Economic sentiment much better than expected, and the current conditions worse than expected. So that obviously caused quite a nice move. So I'm gonna close gold here. It's so close to TP, I might as well close it. So that's gold, and then we have your USD. The short looks good for a short. Got my TP down here. Let's see. I might add a position to this. No, I'm gonna wait. That's not a good idea. That's the trade. I'm gonna limit the losses a bit on this one because now it looks like it's gonna. I'm gonna wait just a little bit. All right. Well, things are looking good. Got gold. Gold hitting that TP. We got stopped out on Euro USD, but it looks like we might have a break lower on Euro USD. So that flag pattern that we traded obviously got invalidated.
As long as gold is not doing what it did yesterday first. That was crazy, no? It's like I was sitting here, I cannot believe it. I was on the brink of taking the loss already in that position, and then suddenly it started moving. Actually, I should have stayed longer in that trade, but in that case, I was just so happy to get out of the trade with a tiny little bit of profit. I think I ended up making like $50 on that trade. So let's see. But I have a feeling today we are on the right side. I have a feeling we are going higher later in gold.
We have a question here from Jack. Will my account get terminated if I take trade now with you? You shouldn't copy my trading. Like I trade. You're not going to be able to trade like me. You're not going to be able to follow my execution. Like we have a question here. What's the entry for TP and stop loss? Well, I've just closed that trade. So the gold trade is just closed. I think it's very important here that we don't copy. We can't copy each other, right? It never works. It never works. So, and if we have like everyone just coming in and start trading based on my trades, and we see that in the back end that we have like copy trading going on, then yeah, that would be your account would most likely be flagged for copy trading, group trading. Group trading is not allowed, obviously.
It's also not the goal of these live streams. We want to inspire you how you can approach the markets, share our thoughts about the markets. We are also doing a lot of stuff here maybe that we normally would not do for the sake of doing things here. Nothing is more boring than watching a live trading stream and not seeing live trades for 2 hours or 5 hours or 6 hours. So if your takeaway is that, hey, there's like this bit that Jonatan does, which I like, which I want to integrate into my own trading strategy, or another bit what Dirk does or Victor does, or all the different persons that are live here every day on the streaming, then this is what you should be aiming at. Because what would happen, if Jonatan stops streaming tomorrow? Then you cannot copy his trades anymore, and then you're back to square one.
I'm closing Euro USD here. There's no momentum here. I wanted to see the momentum continue. So
you are on fire, sir. at the moment.
Yeah, so we did see the momentum here on the 1 minute coming down. Now this is a sign that your USD will most likely move higher. So now I'm thinking about going long, and that's exactly what I'm going to do, because the momentum that we had previously is no longer there. So I'm taking a smaller position here on your USD, and I'm just gonna trade the low time frame range here for
Are you shorting
trade.
it now, right?
No, I'm going long here. So I was short,
okay,
but now what I'm doing is I'm taking a smaller position as a long, because I didn't see that we had the momentum. We can look at Trading View. If I open up Trading View, you will. I'm going to show you what I mean.
Good comment here from Bakerson, I suppose is the name. Biggest challenge is dealing with stop loss on gold since it spikes a lot. Yeah, that's really something. We saw that yesterday again, the huge spikes, especially around news that we tend to have in gold. That's why I always say somehow gold behaves a bit like Bitcoin. It's heavily, Bitcoin and gold are also heavily correlated by 0.82. But you have to kind of live with it, take that into account when you plan your stops. So gold for me is not an asset where I like to have a stop of, let's say, like $1 or $2 below or above the current price. I always try to take into account that we could see huge spikes, which leads to me drastically trading a lower position size than I would do on other assets, for example.
Okay, so let me walk you through the reasoning here of the trade on EU. So we can see here that first what happened was we identified a potential flag pattern, with this being the flag, something like that, and this being the flagpole. So that's the flagpole, and then we wanted to see a move up here. Now we got the breakout above the flag, which is all good, but then we reached a resistance area and we started consolidating after the breakout, this is not how you want to see a breakout of a flag. You want to see something like this. You want to see the breakout out of the flag in the same way that you created the flagpole. Now that obviously did not happen. What happened then was I had my stop loss here because I said that, okay, well, if there's no break to the upside, I will place my stop loss here and I will get stopped out if there's a move to the downside. And then we get this candle. And now I'm thinking, I see this and I'm thinking, okay, now this is a strong volatile move to the downside, and we had a lot of stops being taken out here. When you see a move like this and price comes up to this level, there is the chance that the break area will be retested and then you continue to the downside. So that's the short. That's why I decided to short here with stops above here and then TP, I believe, down here. Now what happened was we had the retest of that level, so I shorted that level. But then what needs to happen here is you need to have the momentum follow through on the lower time frame. So in the next few minutes, you have to break the level, because if you're not breaking the level, well, then guess what? You now have a support level right here. So what happened on the 1 minute was you started forming a support level. And now I'm in a trade where I'm long here, and I'm simply just looking to take it up here for a 1 hour trade, because the momentum of the short was not there. This was a news driven move, and it didn't. I hope I didn't trade during the news. I gotta look that up, but never mind. This is on Euro USD though, so it was not on that pair. But now what we see now is a clearly defined range. So the flag pattern is invalidated, the momentum breakdown to the downside is invalidated, and now we simply have a range. And if I get stopped out on this trade, it's time to flip short. And my target for that would, of course, be this level, the breakdown level below. So it's all about, for me, it's all about trying to catch the moves that I think price might be might be doing or might be giving us. But as soon as we break below this level, I do think that there's a high chance of seeing a move back down here. And the idea would be to hopefully make back what I lost on the previous trades. Let's see what I'm currently up like 1.5% today. So even with this being stopped out, I'm still in profit on the day, and hopefully will be adding some profits on the break to the downside. Henry says, would you call that a double top? No. No, not really. Maybe. I mean, it is a double top. It's just that the right top is okay. So I got stopped on that one. So now we're breaking down, and I have to wait for the 1 minute candle. Now this is going to be risky, but I am definitely looking to short this. This will be my last trade though, because otherwise, if this one gets stopped out, then it's just basically just if this one gets stopped out, then I'm basically just flip-flopping between in a range, you know. But now we're breaking down. Looks good. Okay, so I'm in a position here. I will add all the orders here on this trade. So I got my entry. I got my entry here.
Sorry, man, I gotta leave you again now.
Okay.
Next appointment is calling. Let's see if something exciting happens. Maybe I have some time popping in later again. Other than that, all the best. Take care, everybody. Bye-bye.
All right. Thanks for joining. Take care, man. Okay, so where's the TP here? The TP on this one. Take a look. Where do we have the TP? Should be placing the TP up here. Take profit. Okay, so this is the TP. Okay. Which is right on that high. We switch over to MetaTrader so you can see in action what's going on. All right, there we go. So now you have a confirmed breakdown. I think this looks fairly likely to continue lower. Going on the 1 hour, you do see a very clear pattern on why I have the TP for why I have the TP here. It's basically on the retest of the breakout level on the 1 minute and the 15 minute as well. And it's a good level on the 5 minute as well. And we do have structure right there on the 1 minute as well. Now, what we're doing right now is we're reacting to this level here. So we do have that structure on 1 minute, but as soon as that level breaks, we should be seeing a move to downside here on USD. I'm just going to front run that level just a little bit. I think that's good. Isn't it overtrade? As long as you make money, I mean, as long as you make money and you calm while doing so, then it's not really overtrading. Overtrading is something personal. I mean, for me, overtrading is when I'm taking trades. When I start taking trades based on emotions, and I might be taking a little bit too many, you know. But you know, the way I'm trading now, like I could not care less if this trades hit my stop loss. Like I don't even remember the last trades, the trades we've taken today. I don't remember what trades those were, if they hit stop loss or they hit TP. And the reason why I don't remember is because I don't think about them. I don't care about them. And my previous positions, my previous trades doesn't matter at all, because now all I'm focused on is this one trade and the current structure that we're seeing. I like how you're using words like that was obvious. I would love to see you, tell me where price is going. You can do so right now. Look at your USD. Tell me if price is going to go up or down in the next hour, and tell me exactly where price will go to. And then I will tell you if it's obvious or not. Using words like, absolute statement in trading tells me that you haven't been trading for very long. It's very important that you distance yourself from any type of ideas of what the market is going to do. That a certain pattern is obvious. Everything is obvious in hindsight. But if you tell me that your USD is going to move in a specific way to a specific area, and you're 100% sure about that, and it does that, then we can talk. I mean, yes, it might go up, but why wouldn't it go down? Like, why would it not go down? Look at this. We have a breakout area right here. Get a breakout area right here. We have a top formation above. Like, why wouldn't it go down? You're telling me it's going to go up and it's going down. It's the most obvious short in history of shorting the euro. Do you not trade SMC? Like, get out of, like, SMC. What is that? Smart money concept. It's smart money concept. I trade technical analysis. Okay. I trade using technical analysis, and call that if you want to call technical analysis smart money concept, then go ahead and call it smart money concept. But the smart money concept community has robbed the technical analysis profession of words like accumulation, distribution, and they've put in fancy words like manipulation in there. It's all the same, guys. It doesn't matter. You can buy a course for $100 or $1,000 or $10,000. I don't care. It's all the same. It's technical analysis. I don't care if it's smart money concept or dumb money concept. It's all the same. Don't fall for the marketing gurus. That's right. SMC is just a fancy word for market structure. And market structure is just a word for price action. Price action is just a way for us to look at price on the chart in different ways. Your USD is about to hit my TP. I would like to thank everyone for watching. I would like to thank my dog. I would like to thank my mother. I would like to thank my grandmother for tuning in. I would like to thank the people creating this water, because water is very tasty, especially when you add bubbles to it and taste of peach. Very nice. It's not that I'm dismissing ICT. I'm dismissing everything that tries to reinvent technical analysis. Like, you want to reinvent technical analysis, create an indicator that has not been created before, or create a candlestick chart that has not been created before. Give me something unique. Don't come with that bullshit like, oh, smart money concept, distribution accumulation. Charles Dow talked about that 100 years ago, or even longer than that. You're not creating anything new. Unless you're creating anything new, it's all the same. But if you come to me and say that I've created a combination of Japanese candlestick and Renko chart, where you can also have the ADX and blah 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 blah, and it's never been created before, and you have statistical proof to back it up, then I'll be listening. But if you're saying like, oh, the fair value gap, yeah, it's a fair value gap, it's a breakout. Well, like it's a break of a level. And then you're retesting a fair value gap. Well, guess what? That's the break and retest strategy. It's been used for before ICT was born, right? Ridiculous. Exactly. There is nothing new under the sun. You can trade ICT all you want. I respect ICT traders. I mean, I don't think SMC, I don't think ICT, it's not a scam. It works because it's technical analysis. Yes, that's right. It will continue to be bearish until it reaches the fair value gap. So where's that magical fair value gap you speak of? Let's take a look. I agree. ICT was never born. It was created. Okay, fair value gap at 0.9200. Okay. Okay, so there's a fair value gap here. Could you explain why? Why is that a fair value gap? Is it because it's a breakout? Is it because it's, you know, okay, so I see now. No? Okay, so it's an untested level. It's a naked level. Oof, it's moving back up. That's a strong reaction right here. Okay, so I will have to pay close attention to what happens at the entry area, because as you can see right here, my entry area is where we will also get a possible break and retest right here. And then we're reacting to this level right here. Okay, let's see. That's a bearish rejection reaction right there. Very good, very good. Going into Euro AD, taking a look at that one. Finding resistance, that's great. Very, very good. I want to see price below this level. What about gold? Gold is coming back down. That was a great trade, guys. That was a really, really great trade on gold. Now in the 5 minutes, we have our first clear lower swing high on gold, which means that we might want to take gold lower. Okay, so now we have a top formation happening on gold, and it's of course not broken until. Can I get rid of this tool? How do I get rid of the fib here? All right, like that. Okay, so this is the level that needs to break. If we break this level to the downside, then shorts on gold is back on the menu. At least I would think so. Okay, Euro USD breaking lower, perfect, very, very good. I'm just gonna I don't know what I'm gonna do. I want to see a break to the downside. What am I gonna do with this one? What am I going to do with this one? If we Okay, let's look at the 5 minute. What is the 5 minute telling us? When is the 5 minute closing? Where's my watch? Okay, I threw that in the bin. Okay. What's time? What time is it? 37. Okay, so it's gonna close in 4 minutes. Maybe less than 4 minutes. All right, I'm supposed to have Pedro in here. I forgot to give him the link. Forgot to give him the link to the live stream. Okay. We got the 5 minute right here. Okay, we're hitting. If we break out here, then I'm gonna have to close this one. Yeah. Okay. I'm gonna close this. This is a bottom pattern happening on the lower time frames. I think your USD will break this high and move higher. Okay, let's look at gold. What do we have in gold? It's reaching a support right here. This could be a good level for support for gold, but not very likely with the higher lows right here. So these are the daily trades right here. How many trades have we taken today? 1, 2, 3, 4, 5, 6, 7, 8. 8 trades. Okay. Okay, are we gonna go long on gold here? Can we go long on gold here? Where is this the okay? So hit the 0.618. Do we have a long opportunity on gold here? Yes, we do. Okay, so let's see. I'm gonna show the lines. We're gonna go long. Where do we have the lines? Okay, so we got the stop loss. Where's the TP at? We don't have to add TP just yet. But if we do form a structure here and then start breaking higher, we might look at a move up to that level. It's going to be a very tight stop loss. That should be the TP. Okay, I'm gonna try with 1% risk here. I'm going long. Let's go. Okay, so we're long on gold here, looking for a move up to that level right here. Spread is gonna take spread into account here. I have to lower the stop loss a little bit, and I probably have to lower the TP a little bit as well. So this is a 1-to-1 risk to wood. Let's go. Let's go. Now up here, we're looking for a rejection, and in that case, we might want to look for a short on gold. Okay, we got the breakout on gold. I'm increasing my TP a little bit. Henry, when I'm trading, all right, Pedro, let me know if I can add you. All right, let's go. What's up, Pedro? Welcome. Henry, by the way, the way I'm trading like this, I don't want to be adding EMAs because I feel like when I'm trading like this, I only want to look at price action and EMAs and indicators, and the more stuff I add to my chart is just going to confuse me.
Morning, everyone. Going, you're on fire today.
Yes, you're on fire, I gotta like, I feel like after this session I gotta take a nap, like I'm exhausted. Trading like this is really,
I'm getting tired just watching you behind the scenes. You're fighting the market, you're fighting ICT and the smart money concept, like you are in full fight mode.
Yeah, that's right. Fighting the market and ICT. I haven't even had time to drink coffee. That's what a disgrace.
Well, I'm up that without coffee. Oh my god.
I did drink coffee in the morning, but this is my second coffee. I always drink coffee in the morning, and then I have my second coffee during the live stream. Oh wow, okay, gold is moving lower. Ah man, let's move that stop down. Let's see if I let's see. I gotta take spreads into account here, so I gotta price gets close to your stop loss and then you just lower it some. Someone said short gold. Yeah, you might be onto something. I hope you make money because I'm not. I'm most likely lose my. Look at that wick. Look at that wick. What if I didn't move that stop loss? That's a powerful wick right there. Okay, let's see what we get here. Come on, push it. So we took out the lows. Look at that. We took out the lows, creating a nice little wick here in the 1 minute. Hopefully we can create a wick here in the 1 minute. Oh, make it bullish. What if this is going to close bullish? That would be such a... Oh, look at that pin bar. That is beautiful right there.
Yeah, we'll see.
Yeah, we'll see. What are you trading today? Are you trading anything?
I'm thinking a little bit more of a slow approach comparing with you. I'm looking for... I'm trying to see where the reversals may happen. So in the last couple of days, we had finally some momentum in the market. So I'm trying to see if the US indices are ready to start showing some weakness after Friday and Monday showing some
bullishness. Shit, it's gonna hit that TP. Look at that.
Sorry, Pedro. No, it's okay. It's a good demand zone where price is reacting. So let's see if it goes to that level. How much money do you need to pass the challenge?
Like 4% or something. Oh my god. Okay, I really feel like I need to close this, but I'm not. I'm just gonna... Okay. Wait.
Yeah, just take a deep breath. It will get there.
Yeah.
Yeah, guys, I'm Portuguese, Rafael. Welcome everyone. I can see obrigado in here. Expect that everyone is learning Portuguese at the same time.
This is an interesting question. Price action versus backtested strategy. Well, like, so backtesting is like, you can't trade without backtesting. Like if you never backtest your system, like you're not trading. Like when you say backtesting, you probably mean discretionary trading. But discretionary trading is also based on backtesting. You know what I mean? You have to have ideas to be discretionary about. You know? So what oh, okay, I'm gonna close it. Close it. Oof. All right, good. There we go. There we go. So what I'm doing here is I'm trading, obviously, I'm trading discretionary, but I'm trading based on ideas that I know work because I've backtested them. So I can show you, for example, here we have, if I add the fib from this low to that high, what happens is price comes down into the reload zone and then pushes higher. If we go to this level here, add the fib from that low to that high, price comes down, hits a 0.618, creates support, and then pushes higher. This is you know, this is something that I've tested many times. I have data spanning back, centuries. Maybe not centuries, but it's a long time. Long time.
In reality, what you're doing is not even just strategy. It's actually all your knowledge accumulated in the moment. Like it's basically
and it's based on
6-7 years that you are trading. It's everything now. I believe that eventually the trader is the edge. So like all the strategies that eventually you develop or you studied or you backtested, it comes up to yourself, and trader becomes the edge. So it gets into, let's not call it common sense or intuition, but it's still intuition, which is basically what you are doing right now.
Okay, so I'm now looking for shorts, and the idea is the same. Price comes up into the reload zone, and if we have a rejection here, I want to short it, because this would also be the third. Like you have the trend line here as well. This would be like the it's a good level to short, basically, and that's why I'm gonna sacrifice 1% to short this, and that's just going to be the final trade for me today. I can't take it anymore. Where's my TP
so again, how much do you need to make, or what's your profit now?
Like 5.
So you are halfway through,
yeah. Okay, I'm shorting here. We get a good rejection here, so we're taking that lower. Okay, let's see. This is just going to be a quick trade probably down to that level. Say minus risk to reward. Let's see. Guys, you got all the links to Pedro, and no, do I not have that? Yes, I do. We got the link to the Portuguese community in the description, and we also have Pedro has his own YouTube channel, so make sure you go in and follow him as well. Okay, we are up $112 today, which should be a little over 2%. And if that's hits TP, I don't know.
Yeah, basically what we are basically trading a wedge now, right? It's getting smaller and smaller. Your entries and targets getting smaller and smaller as well. Hopefully it continues to bounce within that level, and you're making money out of it, which is it makes a lot of sense. I cannot do that, to be honest. I will struggle if I was about to trade like that, but it makes a lot of sense.
Well, I think I do struggle. No, I wouldn't say I'm struggling with this way. So what I've started doing is just I've worked a lot on mindset. You know, I've basically just been really focused on not putting too much emphasis on the trades or putting too much emphasis on the account, and thinking that, okay, a 5K high stakes account, it costs me like under $40, I believe. And it's like, I don't care. I can lose it. Doesn't matter. I'm just gonna make sure that I'm. You know when you're looking at the markets and you have this feeling of that looks like a good short, and you don't take the trade, and then afterwards it's like, yeah, that was a really good short. So as soon as I have that idea of like, okay, this looks like a good short, I'm gonna enter the trade without really thinking, and any deeper than that. I'm just gonna, okay, this is a good short. I'm gonna enter the trade and make sure that at least most of the time I'm having on average a little bit higher risk to reward.
Exactly.
Okay, I'm closing this one.
Yeah, that's totally possible, especially for someone that has already experience. Again, that goes into the trader himself in this case is the edge. It's not the strategy. It's actually you believing on what you are doing and having good risk management. Because one of the worst case scenarios it will be, okay, now you have 2 or 3 losses, and which you start over trading or getting on tilt and start risking way too much, and yeah, that could lead into losing the account. As long as you stay disciplined within that approach, it's totally possible. And then there you go. Sometimes you start having that feeling. Yeah, this looks like a really good short from this level, or good long, whatever it may be. It's just my style. I'm always waiting for the fake out. So I actually like to see a pattern working, but then I want to see the fake out of the pattern, and then that's the moment I'll try to get involved. In here, you are trading, hoping that the pattern will continue to work between the ranges and capitalizing on up and down. So I would like to definitely to be able to trade like that. It's just my mind at this point. I'm always looking for the fake out before anything. But it's again that you need experience to be able to start trading like that. Unfortunately, many people do exactly what you are doing, but without any experience, and that's why they don't even know what you are doing. They're just reacting to what candles are doing, and then start risking more, and then there you go. They go into this cycle of losing.
I would say, Adil, today I'm very disciplined. I would say that I'm actually very disciplined today. I've been able to take all the trades I wanted to take, and I've been able to limit the losses on the trades that didn't go well. So I would actually say that today I've been very disciplined, even though I'm taking many trades, and I'm up 1% on the day. Trading 2 hours or 1.5 hour and up 2%. Is not too bad. What strategy am I using? So I'm not using a specific strategy with a specific name, but I have in the past developed a strategy called the RLZ method. But basically, what I'm doing now is it's very simple. It's basically I don't know how to explain it. It's like everything I know about technical analysis, I'm just applying it to the chart. So if price hits support, I want to go long. If price hits resistance, I want to go short. I want to make sure that at least I try to trade with the overall trend. And it's not about, for me, it's not about specific strategy, even though if you look at my trades, you would see that they experience a similar similar style and similar characteristics, but it's basically just buying support and selling resistance.
That's what I mean. You are trading Jonathan's strategy. You are trading yourself.
Yeah, exactly. And this is quite discretionary, of course, as well.
Yeah, we'll see. Yeah, gold may continue and may break the highs again. Like, who knows what's going on with gold? The tendency to be always to continue to break new highs. But yeah, in the moment, who knows what's going to happen?
Yeah. Oh man. Okay, we're supposed to have Victor coming in soon because I do really need a break here. But it does look like gold wants to push higher. Looking at this right here, I think if we have a retest of this level down here, and then we came up, and now we're retesting. We have like a higher low, and we have a clear resistance level here. So what I'm thinking now is, it looks like price potentially wants to break out, and if we have a breakout here on gold, we could be seeing a continuation of this daily move, this daily breakout. But it is like, what I want to do really is just take a long position and then just hold it, because there is the chance that gold is just going to continue for days and days. I mean, we've seen it in the past. We've seen it for the last year. Gold breaks out and it just continues. Could continue that breakout more or less for 2 weeks. And
it's about getting a good entry in that sense, because we are going to have volatility tomorrow with FOMC and the rest of the week. It's about being able to survive those retracements. If you do that, then yeah, you are in a good position to go in. In there.
Okay, so okay, so now when I start thinking too much, it's time to kind of like move to another pair, because now I'm really thinking about entering along here for that breakout, and then trying to hold the position for more of a long term. I mean, looking into 50-minute, we do have a really nice retest here, and what bothers me about this one is that if I don't enter along here, then I'm gonna look back and say that this was obvious,
But I think you did enter there. Wasn't that your long? One of your longs wasn't in that low.
Yeah, I went long here and then I closed it up here.
No, I think before that, like today, already opened a few trades on gold. I think one of them was actually one of those lows.
I had a long open here.
Exactly. And then you close at the top.
Yeah. So that's the thing with scalping or low time frame trading. It's like you take 10 trades and then you look back and like that first trade, if you just held that, you would have made more money, And that's why I'm more into swing trading. I do enjoy swing trading more, because it's less work and a lot of times more money, Yeah.
Sometimes that's the situation. That's nice. And that's actually, even the other day, I think I made a video about scalping. That's one of the main goals then, is the ability to review their trades and try to see, like, especially there are two types of possibilities in this when you are scalping. Like, it's either you are scalping a range, buying the top, selling the top, buying the bottom, trying to catch always that move within a range, or perhaps you're trying to find some continuation pattern of looking for momentum and keep adding into positions when price is trending. So then it's basically the ability to, when you're reviewing your trades, to see if there was kind of a key level or potential zone where you could actually have the trade to hold it, and then all the rest to just keep scalping on the way through. Because that would be important to do so when reviewing the trades.
I'm gonna take a quick break, Pedro. I'll be back in just a minute. I will add your chart here. So I'll be back in just a bit.
Okay. No problem. Guys, what pairs do you want to look at? Let me know in the comments. I can see many Portuguese people in here, which is quite interesting. Maybe some of your questions. I don't have the ability to bring your questions to the chart, so I can see that you guys, Henry is talking about the situations of macro in terms of Russia and the Ukraine. William is mentioning that swing trading, you don't use the same percentage of trading values, or that's a question for Jonathan. Most likely not. I think maybe it's reducing the risk when scalping. Henry talk about. Ashi is mentioning about dollar yen, so we can take a look at dollar yen in here. Before I look at dollar yen, I always like to look at the yen index. It's basically the index that agglomerates all the yen pairs. That was something that we started to look at a couple of weeks ago. Basically, since we had this break to the downside, that we started to look for shorts on the yen index, and we are looking for shorts on the yen index. Basically, the individual yen pairs are going to do the opposite. Okay, so yen index down, euro yen, dollar yen, and so on. In theory, they should go up. So we had that move. Okay, price reacted from a nice supply zone in there, basically faking out this top in here, and then you start to look for the reversal pattern. And this, for anyone that likes to trade quasi-models like Vitor and myself, this was basically a quasi-model that happened in here. Okay, and we had that move where we basically have the left shoulder, then price goes down, we have the head, price breaks the structure, breaks this wall as well, and then basically retests into this level and starts moving to the downside. So we had in here the reversal pattern. In addition to that, there was maybe already a few other signs that maybe price can even go even lower. So for that, you can start looking at potential breaks in here to the downside on the way up. And basically, we had that move. So finally, price followed through and starting to approach this next structure, basically this low in here. So with that being said, so if we're already looking for shorts in here, then that was the moment to start looking for longs on the yen index. Dollar yen, of course, is also attached to the dollar, so we need to pay attention as well what the dollar is doing in here, okay? Because if the dollar is moving just in one direction, the yen is moving the other direction, then dollar yen is going to be something different. So this is what we had on the dollar yen. Basically, if you guys actually pay attention more or less to the date, so this was the 10th of March on the low in here on the dollar yen, which is basically 10th of March is exactly this left shoulder in here, in the right shoulder of the quasi model. So exactly at the same time that the yen index stopped, basically dollar yen created the bottom in here. And it was also reacting from a really nice demand zone. So it makes completely sense to start looking for longs in here on the dollar yen. So that's a little bit how you can start using correlation to help you to look for confirmation on your setups. And since then, basically price starting to break highs. You can see that price was slowing down a little bit already, maybe breaking some highs on the way down, and then finally confirms and start looking for longs in here, breaks new highs, good reaction. And now most likely, I think dollar yen can maybe get a little bit closer to this level in here at least. Yeah, it could maybe continue to go a little bit more to the upside, at least towards that level, or even a little bit higher, to be honest. But at least somewhere around here, I think it could go towards too. So maybe you can continue to look a little bit for continuations. For that scenario, maybe if the dollar turns, this can help dollar yen to go there. And if the yen index continues to move to the downside, maybe this one can help as well to move higher. Nevertheless, when you're actually, just a tip, when you're looking at the yen index, for example, you want to imagine that you want to catch this move to downside, which means that you're looking for a yen pair to trade to the upside. You can then try to look across different yen pairs to see which one can actually be the best one to trade. Okay, maybe it's not even the dollar yen, because if the dollar is doing something else, maybe I'm not going to trade it accordingly. For example, Aussie yen, it was a great one. Okay, Aussie, as you can see in here as well, 10th of March, exactly the same day that the yen index reversed, and it's actually reacting nicely from this from those lows. We had already broken some structure in here, and since then, as you can see, a really strong move to the upside on the Aussie yen. So that maybe would have been a better trade to trade instead of the dollar yen. Just as an example, I'm now looking to trade a little bit into this level, and at the same time, we have Aussie dollar moving up. We have our Euro Aussie moving down. That Jonatan was involved in that trade as well. So that's just a way to look at some correlations in this case. A clear move, for example, comparing with dollar yen in here. Well, many pairs in here. Okay, US 30, Euro dollar, pound dollar. Okay. Django is saying if we can show how to use TradingView to trade. No, we cannot do that. So on the 5ers, we can only use MetaTrader 5 to execute trades. So TradingView, you are only using.
You can if you have a copy trader, you can open an account on a broker that has, you can, for example, you can have a demo account on Oanda. You connect it to TradingView, and then you connect the demo account to a copy trader, and then you copy the trades to the 5ers. But the problem with that is, for me, it works good with swing trading, right? But scalping, then prices can be quite different. So if I'm trading lower time frames or on day trading, I need to do that within MetaTrader. Otherwise, I run the risk of being stopped out at all the different prices.
Exactly. And that's exactly what I do. For example, I do use copy trader as well. However, to trade US indices or to trade maybe gold, like something that we know that there are maybe a bigger difference in terms of spreads or price, where price is, I don't use that copy trader. But Forex, for example, it's easy to use, no problem whatsoever. Basically, the spreads will be quite similar. The price is going to be quite similar where they are. But for the US indices, I usually don't use a copy trader. I need to open the trades manually on the 5ers and the other accounts. Enric is mentioning about Nasdaq. What do I think about Nasdaq? If it is a buy, that's a good question. Not entirely sure, to be honest. It could be, maybe from this level, maybe we can have still a continuation. I think as long as price may continue to be above this level, we can potentially look for a continuation in here. The price is maybe approaching also an interesting zone. So this is one of the situations where it's a bit tricky, because we can still see that price overall is in this kind of bearish move. Nasdaq in particular, because you know that you attended the stream in Portuguese, Nasdaq may still have a little bit of space to go further down. However, it could go higher before that as well. I don't know if you want to use some Fibonacci to try to see which up until where maybe can have this retracement. 38 is here, 50% will be around this previous level support resistance as well. So not entirely sure if that's something that you are aiming for. But maybe as long as it continues to hold this level, I think it can go. If it starts breaking below this level, there's maybe the chance that it can retest a little bit closer to this lows in here. So I could see different scenarios playing out in here. Which is in terms of the US indices, I think it was about time to have some retracement. We were looking for this as well. So basically 2-3 weeks of bearishness. S&P dropped 10%, which is a big drawdown. Nasdaq dropped 14%. Everyone now is talking about potential recessions, potential bearish market. So when the mass media starts talking about that, maybe that's the moment where you can start looking for a bounce. But I don't really think that the lows are still in place. So eventually you can have a continuation to the downside. Victor, good morning. How are you, man? Welcome.
What's up, Victor? Guys, I gotta run. Victor is here to take over, so I will see you guys in an hour, I think.
Yeah, take a rest. You are.
All right,
bye, Jonatan.
See you later, Victor.
Hello, hello, everyone. Hello, Pedro. How are you doing today? How is the Portuguese speaking community of ours doing?
Yeah, there's been. I can see many Portuguese people in here, which is interesting. So I invite everyone actually to join the Portuguese channel as well. So we go live Monday to Thursday at 5 p.m. So feel free to join. I think the links must be in the description. Yeah, just basically trying to see what can we expect now from the market. So we had a big move in the last 2 weeks, basically both on the indices to downside, on the euro dollar to the upside. And now we are having a little bit of a bounce. So it's trying to see what we can have in the market, basically. So we'll see. What is your take? How are you doing, Peter?
Yes, actually, the market is I would say with this week, with all the interest rate decisions coming out, you have the Bank of England, the Fed, the Bank of Japan. So I'm and the Swiss National Bank as well. So you have a lot of things shifting. You can see the Kiwi moving very aggressively beyond its normal ranges. So I'm a little cautious, with in terms of risk. It's not an input in my strategy. So having a week like this is not something that I back tested and I know I need to lower or do something differently. But I know as a trader that these are the moments where prices can do like weird stuff. Do the not the unthinkable but the unlikely. and you would need to be prepared for that.
Exactly. It's going to be a really interesting week in terms of how those interest rates that you just mentioned. In terms of the Fed, most importantly, everyone knows that the interest rate is going to remain the same, so that's not going to be the catalyst. However, in this meeting tomorrow, they are going to also announce the projections. Okay, so that's usually a little bit that can move the market, or mostly what everyone's going to be paying attention to is through the economic projections, which is basically what is the Fed view until the end of the year. They even mention next year and the year after that, but basically where they project how many rate cuts they are anticipating until the end of the year. So they announce this basically every quarter. So it's not in every meeting that they announce these projections. And it's going to be interesting because at this point, if you take a look at what market is pricing in, by the end of the year, on the 10th of December, basically in 2025, we can see between 3 to 4 rate cuts. No, basically 2 or 3, because this is where we are now at 4.5. So anticipate the first rate cut to be somewhere in June. Okay, so in June, I think is the first rate cut, and then maybe in September we have the second one, and then by the end of the year we may go into the third one. However, in December, the Fed announced, or the Fed in the projection, it was just one rate cut in reality. So this is where the divergence starts to happen between what the Fed said 3 months ago and what the market is pricing in at this point. And this is where it can occur a big movement in the market. Is by any chance on Wednesday when the Fed announces the projections, and maybe they say maybe just 2 maximum, like what the Fed is looking at this point is only maybe another 2 rate cuts or even 1. Like that's going to be a big divergence from what market is pricing in, and maybe that can lead into the movement in the markets. In my view, if the Fed continues to be more conservative, maybe announcing just 1 rate cut until the end of the year, I think we are going to see the indices falling, because I think the market is looking to see when the Fed is eventually starting to rate cuts to create better conditions in the economy. If the Fed kind of goes in alignment with what market's already pricing in, maybe then you can have a positive sentiment in the market for risk-on assets, and maybe we can see the indices moving to the upside. Maybe we can even see crypto as well moving to the upside as well. So that's, in my opinion, I think that's the most important thing from the meeting on Wednesday. It's actually based on the projections how many rate cuts we're going to have in here. You could go ahead, sorry.
How much of I think this is very important as forex traders. This is the fundamental side that moves these currencies, right? That's where everyone is expecting where the Fed is going to go, and that will be the driver of longer term movements. But how much of what is, because what you're showing here on the tables, right? The histograms. This is real time, right? This is today,
this is real time.
Real time. So this is already everything that Trump has done, whatever your opinion might be of if it's good or bad, but everything that he's done is already baked into these numbers, right?
Exactly.
But how much did we already hear something from the Fed, like after the trade war with Canada and Mexico? Did we get any statements lately from the Fed, like how does the Fed, because this is the market, right? This is not the Fed, this is the market.
Yeah, this is how the market participants start to price in what the Fed may do. Like this is the possibility of what the Fed may do. Yeah,
exactly. That's the market anticipating that's the expectation of the market, basically.
Exactly.
But have we gotten lately, like in the last couple of days, any statement from the Fed? Like, are they concerned? Are they changing their views?
I think the Fed Chair Powell spoke. I don't think it was this Friday. I think it was the Friday before that, some conference in Chicago, and basically said that the Fed at this point is on hold, trying to see what the Trump actually is going to do in terms of the tariffs, and until they have a clear path of the measures and policies that the Trump is going to implement, only after that maybe they're going to start taking a more decisive decision in terms of what to do with the rates. In the sense that I don't think they are going to just see, because the Fed also needs to see how the market actually is going to react to it. like all the inflation, because that's why the indicator of the inflation at this point, in my opinion, is the most important, more important than FP, for example. It's because we need to see how the market actually is reacting, or the inflation is reacting to what's going on with all these measures. And we actually had a lower inflation report last week of 2.8 instead of went from 3, was expecting 2.9, it came up at 2.8, and that's why we had a little bit of a positive feeling in the market in the moment of the news. So if the inflation continues to stay lower, the Fed and the Jerome Powell may not have the urgency to start cutting rates. If the inflation, yes, starts to, that's a tricky one. So this is something to pay attention. This was like, for example, one clear way that we could see this playing out, it was actually 2 years ago, on the beginning of 2024, just before the Fed starting to cut rates, because there was a big expectation that the Fed would start cut rates straight away in January 2024, or even then March, and the Fed delayed the first cut until September last year. So there was a big adjustment in there of basically almost 6 months that the market started to adjust. Because one thing is what we may assume that the Fed may do, but then the Fed comes up, because the Fed has the last words in this case, right? And then the market needs to adjust every single time to what the Fed is actually doing in here.
Yes. Actually, I'll be right back. I'll take a very short break. I'll be like in 2-3 minutes. I'll be back. So I really like this conversation. Let's continue this when I'm back in a few minutes.
Okay, I would analyze. Someone asked for, thank you, Victor. Someone asked for, okay, Django said that he has the feeling that the Fed will cut rates. It might. The question is when. If it's going to be is in June, for this Wednesday, for sure, is the Fed's not going to cut rates. Actually is sharing that the most important area of the FOMC will be the press conference 30 minutes afterwards. It's true. Actually, that's usually the most important point, especially when there is a kind of agreement on where the cut is going to be. In this case, there's not going to be any rate cuts. However, when we do have these announcements of the projections, that's something that the market is going to pay attention. So you may see a little bit more volatility exactly at the moment of that announcement. And then, yes, then during the press conference, that's going to be always a different moment. Usually, actually, if you're asking me how do I trade the Fed news, usually I don't trade the moment of the announcement of the news. I actually trade during the press conference. And usually it's after Jerome Powell finishes the speech, which means that when the Q&A actually starts. So basically he reads a statement for 10 minutes, mentioning everything that is how we're seeing the economy, and 10 minutes after, usually that's when the Q&A starts, and that when the hard questions come in and he has to answer them. Usually that's when you have the shift, especially for me that I'm looking for reversals. That's when we can have those reversals happening in the market. So that's how I trade usually the Fed news. But you are correct. Usually the press conference can be the most important. Thank you, Abdullah, for your comments. I don't. If I trade gold, I'm not really active on gold. To be honest, I don't like to trade all-time highs, especially on gold. I do like to trade all-time highs on the US indices and DAX, but I'm not the biggest fan of trading all-time highs. And again, I'm a counter-trend trader, so even though gold doesn't stop moving to the upside, I'm actually thinking, how can I short this market? I wouldn't recommend you to do that. Okay, don't do the same as I do. The most reasonable thing to do on gold is find ways to buy it and try to trade your stop. But that's just how my brain works. So I'm usually looking more for reversals, in this case shorts. But I don't really like to trade gold in that scenario. The moves are quite aggressive, and I don't really see sometimes the confirmations of the price action in there. When I trade indices, for me it's a bit more clear when you start having that weakness that can lead into the reversal, even though we may be trading at all-time highs. Maybe DAX can start being closer to a scenario like that in here. So basically already managed to break all-time highs in here on the DAX, and I'm going to be looking for a specific price action of maybe waiting for price to continue to break a little bit more to the upside, and then looking for some kind of weakness until we may have another move to the downside. Something like this is actually quite a good example. And you can study, like if you want to actually look for reversals when you're trading all-time highs, just study the previous times that price kind of moved to the downside around these levels. Look at the price action around there, and then you can maybe try to see what you want to look for. And someone asked us about pound as well. Pound for me is quite clear. Just to give a quick analysis, I'm looking for pound, or I'm waiting. Actually, I've been waiting for pound in the last couple of days, or basically 10 days, for the pound to go a little bit higher. So I didn't really like where price or the pound was reacting inside here. Just to give a little bit of my analysis. So I didn't like where pound was reacting in here. So yes, we could see a little bit of some reactions in here, price moving a little bit to downside, but we never really kind of had a bigger turn. Price kind of kept respecting this previous structure as well. So I'm looking for the pound to go a little bit higher, which could be within the supply level. I think this may be a level that is still fresh around this level, at around 1.3. Okay, it's actually a nice round number, even though I don't really care too much about round numbers. Otherwise, price actually can continue to go, and then maybe can start aiming for price to go a little bit higher, maybe even towards that level as well. But we could have maybe some bounce inside this level. So that's basically what I'm tracking. I'm tracking pound to see when eventually we get to that zone for a potential short. The price action is quite nice. It's in a kind of a compression. What I mean by that is price is starting to slow down a little bit. It's not just a really strong bullish candle or something like that. No, price is actually starting to slow down a little bit. Maybe we can even see some breaks of lows, which is nice. But I would like to see then price getting closer to that level before a turn. At least take that high, which hasn't done it yet. After that, I may start looking for shorts. First target must be around somewhere in here or in here. And if start breaking more, then maybe can even look for something else. But I'm waiting. So on pound, I'm waiting. I'm waiting for price to go into that level first. I don't know, Victor, what's your take on pound, but that's a little bit of what I'm looking for.
Yes, maybe we can discuss that for sure. Let's do that. I'm gonna show my chart. I'm coming to before I left with that short break. I wanted to ask you a little bit about the Fed, because of course, do you think I'm sure you're much up to date with everything they say, the statements, and of different governors and things like that. But do you think that in the statements that we have had so far, that they have they were taking into considerations what is actually happening like these days, the rhetoric between Canada and Mexico? You have different things happening at the same time. Where do you think they are up to their statement so far, has taken into consideration this kind of scenario, or do you think they did, or they didn't? I mean,
the situation with the Fed is that they usually are more reactive than proactive, so they need actually maybe to see the indicators showing a specific direction. You can even talk about inflation or unemployment or something like that. They usually don't overreact after just one announcement. They may want to see kind of 2-3 months of something being released before taking action. And it's like I think the Fed at this point is literally waiting, like everyone else, to see what the real impact of all these tariffs is going to do into the market, in particular in the inflation. And I think only after that we are going to start seeing something happening, or the Fed taking a more aggressive approach, or starting with a clear path, because that's the question. Like, there is not a clear path at this point of what the Fed may do. Basically, the Fed is waiting for the inflation to see if it's going to be more stable. The situation with the unemployment is quite steady as well, at around 4.1. This kind of historical lows, which means that there is no pressure. There may be a little bit of an uptick on the unemployment because of potentially all the situation with the Dodge. Maybe many people are getting fired with the situation that they are doing in there. So we may see a little bit of an uptick on inflation, on unemployment. I don't know when that date is going to be reflected. It's going to be next month, 2 months from now, 3 months from now, who knows? It's a little bit of some uncertainty at this point. But the main point is the Fed usually is more reactive than proactive. Sometimes that can be a negative, but usually that's how they act. They don't try to anticipate. They like to see something happen and then they act.
But and you said about the you think the inflation is more important to be looking for as economic indicator instead of jobs, NFP, and so on. But that's the tricky thing, because inflation, of course, is it's telling us what's already happened. Almost all these indicators do, and what we're expecting from the Fed is looking forward a little bit, at least, right? Because they, even though they are reactive, they're still acting based on their projections, meaning still looking forward.
Yeah, and what I mean by that is mostly what I'm trying to anticipate on or to see which indicator is most important is actually trying to position myself as the market, in the sense that what actually the investors are paying attention to. And you can see you had the NFP on the first Friday of March, maybe 7 or something like that of March, and the movement was almost non-existent. You can see actually based on the reaction of the market that there was almost no movement. The data was kind of, there was not a big surprise. Actually, the data was kind of as expected, but you already see many times in the past that when whatever the data was on the NFP, and you saw a really big momentum happening after the NFP. So that didn't happen, and it didn't happen either in February. So you can start seeing that the market is not really paying too much attention or concern about the NFP. That's one way to anticipate that, or you can start looking at. And what is the main factor at this point for the Fed to actually start cutting rates? Is the inflation. Because it's actually based on what is the biggest uncertainty at this point is tariffs that can lead into the inflation. So that's where the Fed actually is paying attention, and not just the Fed, but the market as well. That's why when you had the CPI last week, there was a little bit of movement, even though maybe then it was rejected straight away, but there was a much bigger kind of or reaction in that moment, in those first 5 minutes, opposite to what happened on the NFP. There was almost no movement on the NFP. If you look back, basically it was, I don't know, a range of 30 pips, and price just stayed there. There was no movement whatsoever. So that's a way that you can, just based on that, you can see, okay, this is what the market is looking at. You can use that information.
Yes, yes, indeed. All right, let's look at the pound, because we have been getting requests for looking at a pound, among others. So, and we are always happy to, fulfill the wishes or the requests of our audience. If you have any other pair you want us to be looking at, throw it in the chat. And while you're at it, hit the like button, subscribe to our channel as well. All right, let's look at my screen. This is
Peter, do you like to trade the yen pairs or not?
I don't typically trade yen pairs, to be honest, but if I see something that is perfectly aligned, then yes, I would trade them. I would trade any pair, any forex, any of the 28 pairs. If it's right in my face, if I did everything according to my plan, yes, I will. But typically, I don't start my day looking for opportunities there.
Okay.
I only look for
just because there was.
Go ahead.
It's because there was a clear quasi mode on the yen index, which is basically the index of the yen pairs, to potential shorts, which lead into a potential long then on the yen pairs. That already happened kind of on 10th of March, but it was such a clear quasi mode in there that there you go. If you're paying it a little bit more attention, I think you would have been looking for longs on the yen pairs in these last 2 weeks, basically, 10 days.
Nice. And we have Alex. Alex joined us. How are you doing, Alex?
Welcome.
Yeah, I'm doing very, very well, gents. I'm actually long euro pound at the moment.
Okay.
Euro pound.
Euro pound at the moment, yes.
Would you like to show us your entry and your reasons?
I literally just got in here. I actually missed the trade this morning, and I've been waiting for ages, just trying to get it on there. I'll show you right now. So that's basically the setup. So I got in at this level here at 84175, which is exactly there. Basic setup was, I was looking at it this morning and it was down here, and I tried to get in. I tried to get in here, tried to get in this this area here, but it didn't come down to my entry. So I actually ended up, I had my entry at the 50 level. It just shot up, missed everything, and I had lots of FOMO. But finally, it's actually come down and retraced. And I still think that we're going to complete this type of break, retest, continuation type of trade to take out these highs. That's what I'm actually planning on. So just this type of, that just standard old pattern that we have here. I'm just waiting for it just to take out, these highs right here. So that
awesome.
That's
I
it.
like your trade. I like trade because if you go to the daily and you zoom in a little bit, you can see how today the market actually yesterday tapped into that daily fresh order block, meaning you have higher time frames backing you up, pushing pricing much higher, either today or tomorrow or the day after. It doesn't matter. But these days you are in the positive drift, if you will, on the lower time frame. So I like when you have that, even if you don't have a daily target. It makes a lot of sense to me. I could, if I have a setup on this pair, I could hold this longer, or at least hold a portion of it, half of it, a quarter, for a runner, because these are the the setups that run when you have the daily and the weekly. I'm telling you that it can still continue to go some more.
Yeah, I made the mistake yesterday trading pound. I didn't make the mistake. Pound was a really, really, really nice trade, but it was in the plan to actually hold the trade for it to break these highs. Like the plan originally was for that trade, and instead I actually was a wimp and ended up taking that. So I'm learning my lesson a little bit today, that I'm just going to let the trade do its thing. And it is just a really nice looking trade, because if you have a look here, it's come back down to its 50 area. It's found support. And, we've had these really nice impulsive candles like here and here. And all of these candles, which are 4-hour candles, there's hardly any volume. Like it's taken 1, 2, 3, 4, 5, 6, 7, 8 4-hour candles to go half of the way that two candles went. So for me, the upside is on euro pound, and just that break, retest, continuation. That's what I'm looking for. So the only thing is, how long has this 4-hour been open for? We're gonna have to wait maybe a little bit, because it's still playing around this area. My stop's here. So we can play around this area until it wants to move, or it takes me out, I guess.
And you're targeting the high of the day?
I'm targeting up here for it to take out all of these levels.
Oh, I see.
So it is quite an ambitious target, but there's a lot of momentum, and after we've had a lot of consolidation from this as well, I'd be looking for the next place for it to take out all of these different highs here and here. So
I wouldn't say it's too ambitious, though. It is, of course. We have on the higher time frames. We do have actually on the complex. Maybe I should show my screen to show what I'm meaning. What I mean by it. Let me put mine on. So you're targeting, if I'm not mistaken, you're targeting this high, right? So this is your TP.
Yep.
I don't think it's too ambitious, because if you we do have we have a daily order block that has already been mitigated, so I don't expect too much of a reaction. We already had that reaction from it. It's the second time around the price is going to be interacting with it, so you can expect at least a little bit higher than this high, because it's the second one. That's one thing. The other thing is that if we target if you look at let me check. Currently the ATR is at 54. So if we use that to get an idea of what is realistic for you to reach, or price to reach today, we can 54 is a little bit higher. Yeah, 50. That's about 57. So that's perfectly above. I mean, your TP is. I mean, the ATR is above, but this is the line based on the ATR of today, and so I think that's a great. Let me go back to see it. That's the ATR for today. So I think it's your TP is very nicely, and of course, you will see this high work as a magnet for price. So it's great stuff, man. I like that.
We'll have to wait and see, because I don't think, it's in the middle of the day. It's lunchtime in the UK around about that, so we haven't got the push that I think we're going to get. But once we get into New York, I think we're going to finally see an actual nice push up.
Another thing I like
sometimes with the it's just one of the concerns sometimes with Euro Pound is that they tend to range quite a little bit. That's the only concern. We never really know when it finally is going to move. When it moves, but sometimes it's just because if the pound dollar and the euro dollar are actually moving, then the Euro Pound just stays in the range, not even going anywhere. But if by any chance I'm actually potentially looking for a short on the pound dollar, that could lead into Euro Pound to move to the upside. That could be nice. I'm still traumatized with my missed trade on Euro Pound like 2 weeks ago from the lows. I missed out the move to the upside, so buy a pip. So I'm not really looking at Euro Pound. It is
honestly, mate, it's the most frustrating thing in the world. I got really bad FOMO today just because I wanted to get into this. I wanted to be in and out of this trade already, but I've ended up getting into a trade on the 15-minute instead of on a 5-minute. So it's going to be a longer span trade. But mate, honestly, it's the most frustrating thing, especially if
Yeah, it was literally at the bottom. Like I missed out the move to the upside because I've been looking. Because in my view, in the bigger picture, I think the Euro Pound can actually go even higher in the future. And we already had a break of structure on the left side on the daily time frame. You can even go higher. But yeah, now we know. One thing is that on Thursday we are going to have the Bank of England, so for sure there's going to be some volatility. Hopefully, it's going to be before that, but on Thursday specifically for the pound. Something that I like to look, for example, when I trade Euro Pound, is to look for specific news regarding the pound. Can be inflation, unemployment in the UK, or the Bank of England, because that definitely creates volatility on the pound and not on the euro. So that can move the market. I'm super
bearish on everything to do with the UK at the moment. Just the state of the UK. So,
I still live in here, so thank you very much for that.
We left Europe and now we're in. So it is what it is.
Coming back to your trade on Euro Pound, Alex, there's something I wanted to point out, that on Friday we had a very nice that impulsive move, right? We had that impulsive move, and if we what I like to see is when we have whatever target I have, is it realistic within, not only within the range, but also well in the the typical legs we have in the market. And if we measure from the bottom of that initial the bottom from that impulse, and we extrapolate from the lowest we've had today, or not today, this is yesterday, but that low we had after that impulse, your target is within reach for the next leg. So I that's another reason I think your TP is looks nice to me, like very reasonable.
One particular thing is that if you actually look where Alex placed his stop loss, and you can see that small rectangle where you actually have that order block in there, I think it's basically on the same level. That's I don't really understand how Alex and Jonatan sometimes where they place exactly their stop loss, because for me it's kind of a level to look for a trade. Like if Alex is about to show his chart, I think that's exactly where he has his stop loss, and that's maybe where you are looking for a long, which is interesting.
Yeah, well, maybe you should. Where's your stop, Alex? I think it's much higher, right?
No, my stop is literally that level, man. my stop is 84086.
86. Actually, it's above it.
Well, it's above. It's that level.
Okay. All right. I suppose you have your reasons to put it there.
I don't. I don't think if it comes down to that level, then I don't really want to be in the trade. It just shows weakness, to be honest. I really don't think it's going to come back down to that level at the moment.
But if there is a demand zone in there, that's kind of. I understand. I understand your thought, like maybe trying to buy to buy it on retracement, and if it goes a bit deeper, yeah, maybe there's not enough sellers. But this may be where actually not enough buyers are. That's maybe where the buyers are, maybe waiting for it. Who knows?
It wouldn't be an attractive buy if it came down there for me. I wouldn't want to buy it after it's shown that it's tried to break the highs and it's failed. So it's like taken the highs and it's failed, and then it's failed to go up. I wouldn't be wanting to buy down at that level. But I'm happy to buy 50% of what it's done right now, you know? So So that's the idea why the stop loss is there, really.
Yeah, I don't want to make you feel uncertain or insecure about the stop loss.
Victor, you're making me feel insecure about my stop loss, man. Don't do it. I want to close it now, mate. Oh. And why is Alex holding his mic? Because I don't actually know. If I put it down, I don't think you can hear me. Can you hear me?
Not as good, not as well.
Yeah, there you go. So that's why I'm holding. Who is this guy anyway? I'm just going to ban him. I can't actually ban him for some reason. No, he's immune to being banned. There's no.
Ooh, he has immunity. All right, so the great stuff. If I were to go lower time frames to see your on my, let's say, I see your why you put your stop. It's because of this order block. I get it now.
See, there you go. That is exactly what I was looking at. That order block.
Oh, I see. So it's something on the lower time frames. Now it makes sense to me. Okay, so I let me. I'm gonna change this to an hourly so we can still view it on the hourly time frames. Now it makes sense. It's not an hourly. It's a 15 minutes. So it makes sense to me now. Your structures are just on the lower time frame. It's not on the H4. So it makes sense to me now. Good stuff, man.
But it's ranging. Does somebody want to turn it on? Somebody want to just press the button so it can go up? Because it's not doing anything right now.
Gold is breaking highs again. I don't know if Jonatan was still on the trade. I think Jonatan closed out his long trades.
You know what? I think he got stopped out before it made that move. So,
I mean, this is gold is raging.
Oh, he's long.
He said it is long.
No, look. It's in price discovery, man. Like, you know, it's going to go up and up and up further than anybody actually would have thought, and then it's going to come down eventually. Yeah. But I don't think anybody thought, you know, that it's going to hit 3,000, come all the way back down, hit 3,000 again, come all the way back down. I think a lot of people were shorting it, thinking it was going to go down to a ridiculous level, but it's just stayed trending this whole time on the 15-minute. It's just trended. So,
and we have enough reason for safe haven buying. So I wouldn't expect the gold to be less bullish than it is right now, right? Safe haven buying is such a thing lately. I mean, look at all the uncertainties we have with our good grandpa Trump, but also everything that's happening in Middle East. Things are, tensioning is increasing.
Yeah, all we need is good old Trump to open his mouth, and then we can see some more volatility. That's what we want. We want more volatility.
All right, so let's look at gold to show scary future. You mean Hamid? You mean the future as in price action for gold, or your future of
geopolitically? I think he's talking about geopolitically. That it's just taking all their money from risk on and putting it into gold. Yeah, I guess.
Yeah, I understand, and that's why gold is so strong and has been and probably will be for some time.
Yeah.
All right, let's.
I'm actually more looking. So I'm actually more looking into silver in this case because I'm more of a counter trend trader. So if by any chance I'm looking for any kind of shorts, at least silver is not at all-time high, so I still have some structure to try to play with. But it can break now this most recent high, and then maybe can react from something else. But it's for me at this point as a counter trend trader, it's easier to trade silver than gold. I'm not shorting gold for sure at this point.
Because it's not its all-time high, as you said. Yeah,
I just don't like the spreads on silver. That's the thing.
Yeah, they're not the best, to be honest.
The spreads are awful on silver.
Yeah, I think it's silver is more for a longer term because of the spread indeed, and I mean if gold can be very volatile, we know that gold is the beast sometimes, but silver can also can be very volatile because it's it's akin to gold, but sometimes it doesn't follow the same rules. It can exaggerate as well, even more than gold. I think it's you gotta do it on the higher time frame just to mitigate that risk.
He's drunk too much coffee today. He's drunk way.
Did you see him in the morning though, Alex? Did you see?
No, I didn't.
It was on fire.
He was on fire.
Like he opened like 20 trades, like up down, like he was following up every move of the candle.
Really?
He was even fighting people on he was even fighting people on the chat talking about ICT and the smart money consult. Today was Gent was on fire today.
Okay, so what did he have for breakfast?
It's not breakfast. That is just Jonatan. He is the most ADHD guy that I know. He's like, if he does not hold himself, he's all over the place. Go! No.
But he was profitable, so it worked. Whatever he did, it worked. He was profitable. He's almost close to pass the challenge, so everything goes well.
There you go.
Yes, I totally agree with this this viewer. It is. I've traded silver a very long time ago, and it's you gotta be very careful. All right, but we were just about to look into pound as we had a couple of requests. So let's do that. On the higher time frames, I'm going to do that very quickly. We are in a quasi on the higher time frames, right? This is the left shoulder, according to how I break down the quasis. This is the left shoulder, the head. That's the neckline. We broke through it, so we have a bearish reversal pattern. But it's very important, the fact that we are currently in an entry order block for short, right, on the weekly time frame. But it's very important not to think just because we are in an area of interest that the market is gonna, automatically, instantaneously reverse and start going down. You have to listen to the market, let the market PA on lower time frames tell you that it is actually respecting and reacting to that order block, that entry order block on the weekly time frame, that bearish one that we're currently in, which is this one, right? So before we think, oh, I'm gonna be looking and have a bearish bias, we just need to be sensitive for any signs, any cues, any indication that maybe structure is breaking, we're creating quasis on the lower time frame, things like that, right? So that is the kind of the technical background where we are currently. We are in a supply area, but let's not jump the gun. On the higher time frames, we only have we're coming from a monthly. I know I'm going backwards from weekly to monthly, but normally I start with a monthly. We're leaving a monthly time order block behind, a fresh one, automatically. In this time frame, what I'm thinking is the market is leaving one station and we're going to the next station ahead of us, which is quite still ahead of us, beyond that weekly structure we saw, right? So that's on the monthly and the weekly. Not the weekly, but the monthly is telling us that this could continue to go much higher. The weekly, of course, we are in a bullish order flow by creating and not even retesting or mitigating these order blocks, and we haven't created anything. So the weekly is also still in a bullish PA, while on the structure as I indicated, we are in an area where we could see some selling coming into the market. So, but it's still, the PA is obviously order flow. If you look at the leg that we're currently in, the buyers are completely in control. Looking. Go ahead.
Sorry, mate. No. Carry on. When you're finished, I've got something to
Okay.
show you. You're gonna love it. Absolutely love it, mate.
All right. So we have if we go lower time frame, we do have this order block here, but it's not as significant as it perhaps might look, because we have way too many order blocks in this quasi. It's not a valid it's not a good order block to be trading off. It is there, so we might see some selling, but I don't put too much weight on this or that order block. I'm not going to be taking any trade for sure from that structure. What we can see is that the buyers are still in control. Look at those order blocks being created and not even being retested. That should tell us something. The buyers are in control, and that's the direction we should. That's the easy way, the path. That's the direction we should, or at least, well, not we should be trading. That's the direction that has the higher probability of working out. All right. So we have this order block below us on the daily, which is not being retested. We might get some retest in the future. Maybe that's going to be because we have the Bank of England rate decision this week. We might see some, volatility coming in, and it would be a great idea to look for that buy as that order block is being retested if it happens. And on the lower time frame, we have let's see, on the H4, even though we aren't in a daily order block being retested, so we don't have that daily yet, we do have an H4 order block being retested as we speak, which is this, right? This order block, it is being retested as we speak right now. We are in it. It is an immediate retest. So I'm interested in any reason on
it is the master of risk and the slave to volatility.
Who's the slave to volatility? Oh, you're the. I've got to show you guys my new sound effect. Can I show you my new?
What happened with Pedro? Is he looking so small, Pedro? What are you doing? What happened with your camera?
I don't know. Wait 1 second.
All right. While Pedro does that, and sorry,
probably shorted gold.
You interrupted Victor in the middle of his sentence, but since I've got this time, I am going to show you guys my new sound effect.
Technically, you're interrupting Victor now.
We have a quasi in its natural habitat. We have a quasi.
You love that, don't you? Don't you love that, guys? I can't hear it for some reason.
Natural habitat.
So there you go. We're going to name that the quasi in its natural habitat every time.
Oh, that's wonderful. Oh my God. Okay. Are we rich yet?
Are we?
Are we rich yet? I'm down, actually.
What's happening on gold? It's supposed to break out. Now it's like not breaking out.
This is the natural habitat of the quasi.
Do you know what? If I was making fun of that 4 hour order block and it comes down and he takes that order block and then goes up, I'll be, I'm gonna.
All right. So Quasimodo, did he actually live in Notre Dame, or did he work there?
I thought he lived there, right? Didn't he?
So he lived and he did the bells and everything.
Yep, I think that was his natural habitat, literally.
But I wonder how long when did he actually move in,
I think the quasi habitat is on. I can't even speak. I can't speak. Let's forget everything that I just said. Okay.
How long, has he always been like that asymmetrical?
I think he was born like that.
He was born like that. Yeah.
Yes, it's a congenital asymmetry.
Oh, look a pound. Euro, he's absolutely smashing it.
The up or downside?
Downside.
Ooh.
Euro pound better find support right now. Otherwise, I'm going to be deep.
Oh man. Yeah, I shorted that. I shorted EU this
If
morning.
you shorted that, I doubled down. I'm only joking, didn't double down, but I've got a nice bit of risk on here.
And I feel like, yeah, I don't feel much.
No,
I feel
I've got
like
a nice
taking
2% on this.
Alex, you gotta let me
Euro.
speak, man. You gotta be quiet. It's like you don't
I'm
listen
not
to
gonna
me.
let you speak. We're not allowed. You're not allowed to speak.
So what I feel like, I have, you know, I do have feelings, and I would like to express those feelings to all of the audience here. So I do feel like sometimes I'm taking a lot of trades, you know, and then you look back and like, what if I just held that first trade, you know?
We talked about
Sometimes
that before.
What? Yeah, we talked about that. Yeah,
like
yeah.
holding the first thread instead of the scalping in between.
Yeah, exactly. Like I took a long trade on gold, right? If I would have just held that long trade on gold and closed it now, I would have made more money than all the 20 trades I've taken over the days.
What about the short on the euro as well? You short the euro at the top.
Yeah.
And look at the euro. If you look at the euro as well, you would have made more than the.
That's ridiculous. That's the problem. That's the problem with scalping. You know, it's like
Very
you
inefficient.
get in and out of positions.
It's very inefficient. Scalping is it depends on, of course, the market condition. But if the market is ranging, then it's okay. But if it's really trending, scalping is you're only getting a slice, right? You're scalping the market, so you're only getting a slice of the move. But the move can be, of course, because it's trending much higher. But the other thing is that scalping, you can have a higher frequency. So if you do it well, you can have not just one slice compared to just one big move, but you'll have like dozens of slices. Yeah.
It's boring as well. I mean, I'm going to be trading live here. It's like, okay, guys, we're going to be scalping. I enter one trade, and then 4 hours later, I'm going to close it. Like, what are we going to do? You know?
Accumulation, manipulation, distribution. I take that. AMD, yeah. Is that where are we looking at this manipulation?
Goddamn smart money concept, man.
I don't think accumulation. I don't think
that.
that's a smart money concept.
It's not, but it's not. But they say it is, right?
Look at that.
It's not.
Isn't that beautiful? Isn't that such a beauty?
What is?
That is fantastic.
It is, right?
I mean,
I think it should go up now.
some high
Play
heels
with
on
it.
that candle, and we're ready to go. Looking good.
Go on, make. We need Steven to pump up the price.
Let's look if we have a reversal pattern on the lower time frame on Europe here, Alex.
Thank you very much,
Let's make
Victor.
Alex happy.
I
This
am
is the
almost done with
structure
all
under
the videos for ABL. That
have
let's
a lot more as
celebrate
well.
with what?
We do have a lot more.
Yeah. For me. Do you mean for me?
Yes.
Oh really? You want me to record more stuff?
Steven is selling. He's selling. Hold on a second. We've got loads of people in here.
Oh wow, go Griff's coming in.
Griff is coming in as well. Griff, give you a thumbs up. Oh my God. Go on, baby. EG. That's what we want. Yes.
All right.
Yes. Whoever says you shouldn't trade with emotion is all wrong.
Oh,
Just
look
trade.
at that
All right.
move.
Well, let's pull a Griff. Can I get a thumbs up if you're ready?
Yes, he did. He already did.
Buddy,
All right. Let's go. Welcome.
before
Hey,
we do
guys.
this one, sorry, mate. We're just gonna have to do.
Go ahead.
I do apologize. We're just gonna have to do this. Okay.
Look at that. Oh, this is it's not embarrassing at all.
It's not embarrassing.
No.
We're done with it.
High quality professional traders. So Griff, did he actually? I'm looking at the schedule, and actually, you're supposed to come in 1 hour later. No? Did
Am I?
Yeah, I think I sent you the. I sent you an invite, didn't I? For 1. Isn't it 1 p.m. GMT?
Jonathan.
But Griff,
Confusing
don't worry.
everybody.
We are happy you're here. We are absolutely happy you're here.
Confusing us all. Jonathan tells me to come in. Says, it's just going to be me.
I guess
and Victor.
America had time zone change. I don't know. I thought 12 to 1 today. 12 to 1 Tuesday.
Let me look that up. Let me look that up for you. See if
Yeah, no
well, it doesn't
worries.
matter.
It's okay. It's okay now. We've got.
I actually, you're right. It's 12 to 1. That's my fault. God damn it, Alex, you're right again.
All right, so I'm going to take my break. So I'm gonna come back, and I will be. I'm coming back, and I'll finish that pound analysis you guys interrupted me from.
Don't put me in the same. Don't put me in the same category as this guy down here. Okay, I was waiting patiently. He came in and he was
what? What are you saying? What are you saying?
I'm saying that you interrupt too much.
In any case, I'll be back, and I'll see you guys. Have fun while I'm away. I'll be back in about 1 hour.
Yep. You know what they say: when the boss is gone, the mouses dance on the table.
That is exactly what I think.
Oh, yep, that's how it is. All right, Griff, how's it going? We got. By the way, everyone, welcome Griff. Let him know that he is very welcome, despite me. The schedule. I don't know. I'm tired. Sorry, guys. I've just been trading low time frames here all day.
Morning, right? Yeah.
We can give you a break. So I do interrupt people quite often. I do. It's definitely a very bad. It's a bad habit of mine. It is a bad habit of mine. It really is. And I'd like to apologize
as well.
for that.
I'm actually doing it now. We spend too many times now interrupting each other because we're both in a bad habit of doing it.
Well, I actually think that you've always been interrupting people, but you've realized now that you've felt how often I interrupt you. You felt that, oh my God, it's such a horror to be interrupted all the time. So now you figure that, okay, I'm doing the same thing to everyone else.
That's true. Yeah, that is true.
I do the same. I mean, I get really excited when I'm talking about Forex, and I often I just throw myself into conversation.
I tell girls at the bar, like,
on a call as well.
No, if we turn down the volume, we can all speak at the same time. Yeah. But Alex, you're very good at interrupting, I must say. You're very good at interrupting. Like, you're very good at interrupting, and you're also very good at protecting yourself from being interrupted, because it's like you turn off your ears and you just continue talking like nothing happened, you know?
Practice makes perfect, mate.
Yeah. All right, Griff. Welcome to our slightly less professional live stream where we talk about most other things that has no relation to trading. But yeah, you're a swing trader, and you're trading based on the 1 hour. And last time you were on, we talked about you. Have you thought about that? We talked about maybe perhaps trading or stop loss based on higher time frames and things like that. And you said, maybe that would be something to try. And that got me interested, because when you talk to someone that's been trading for many years, usually they have one system and they follow that system religiously. But you came in and you're like, that's a good idea. I might test that. I really like that, being open to changes to one system.
Yeah, it's important. And I did go back and I went through my EU data, because that's where I've got the biggest data set going from 2018 to 2024. So I went through all of my trades, which it still isn't enough of a sample size, to be honest. Even from what's that, 2018 to 2024, that's like 6 years. I've only got like 60 trades in those 6 years, so I still kind of need more data. But yeah, I tried it out trailing on the 4-hour, and my results pretty much stayed the same, which you'll find interesting. And that's because a lot of the smaller trades kind of got lost out on. So yes, the big trades got bigger, but the smaller trades just ended up being break even or losses, because on the 4-hour, I didn't actually have an opportunity to lock in profit, if that makes sense. If you guys were here last week, you'll have more context. But basically, Jonatan suggested that I look at trailing my stop loss on the 4-hour instead of the 1-hour, so that I can stay in my positions for longer. And my results, it was very interesting. My results didn't change, but on one of my 4 entries, my results did improve. So I could definitely consider implementing it there. And it was for reversals, if you recall, Jonatan. I was doing like a channel and then a break of the low or break of the high, which is obviously the very beginning of a trend. And yeah, my just using a flat 12 pip stop loss over my 11 reversal trades from 2018 to 2024, it made 41% profit, and that's with a 72% win rate. And then trying it with a 2 ATR stop loss and a 4-hour trailing, my profit went up to 59.29% and an 81% win rate. So the win rate improved slightly, and I made an extra 20% profit. And I reckon I can probably try this without an ATR stop loss. So just the same 12 pip stop loss and a 4-hour trailing. And I reckon the results can improve even more. But yeah, that's maybe by next week, I'll have some more results to share on that.
I love how we're all watching Victor's screen here, and he's not even here.
Yeah, he's not here.
So let's pull up my screen, because I am long on gold, and I want to show you all what my position is. Okay, where's my entry at? I think I actually went long somewhere here. I got my TP stop loss down here, and okay, so here's the fun part. If this TP gets hit, I will pass this first stage. I'm up 4%. I got 4% left to, but I got quite a high TP. Let me actually. Why don't I show MetaTrader instead? Let me switch to MetaTrader
in its natural habitat.
Oh my god,
it's funny because I remember doing an interview with Griff probably 2 years ago now, I think.
Yeah, it was a long time ago. Yeah, I think it was nearly 2 years ago.
Yeah, it was same strategy that you're still using now, isn't it?
Yeah, it is. It's evolved somewhat, but the principles are the same, like the management and the entries.
Yeah. No, wicked, mate. Honestly, it's funny. You say about like 60 trades over 6 years, and I'm like, man, I do that in like 2 weeks. It's so bad.
Yeah.
Got cut down my trades, definitely. But
yeah, honestly, it's just because of the market conditions. Sorry to cut in.
Yeah.
My first ever month live trading, which was 2021, I took like 40 trades in my first month, and I made like 16% profit, which was fantastic. But nowadays, I think I've taken like 3 trades this year, and I'm like negative 3%. So it's funny. It's literally just the market conditions. Some years I can be super aggressive, and other years I have to be really conservative. And at the moment, I'm having to be careful.
Sorry, whose family? Whose family? I am more profitable than whose family?
It's actually interesting though, because I feel like there's so much volatility, and the structure of price action is super predictable or easy to project at the moment. So it's quite interesting, Griff, because you use a lot of market structure to get into your trade. So it's interesting that you haven't seen as many trades. Have you got an idea why that is? Or
I think the market has been quite, I'd say there's definitely there's good market structure. I've definitely seen that, but there just haven't been any trends for me to capitalize on, at least on the 6 pairs that I'm trading. And the few times there is a trend, I don't get an entry, so I just have to wait, which is annoying. I have explored potentially introducing more entries, just so that I can get into those good market conditions, because I can spot the price action that's going to work. I can see high probability opportunities, but I just don't have an entry to get into that market condition. So I have been experimenting with like more liquidity sweep concepts, but that's like introducing a new entry at the moment, like could potentially just increase my drawdown even more. So yeah, I'm always open to new ideas and exploring new ideas. But yeah, at the moment for me, long-winded answer, it's just because there haven't been any huge clear trends. Market's just been more sideways on my pairs.
I love how patient you are, mate. Honestly, if you could give me a little bit of that patience, that would actually, I would be very grateful, to be honest. Oof. Stephen looks.
By the way, guys, I just want to say that Griff, he's going to come on every week. This is his time slot in the live trading room, so we are going to be seeing a lot of him going forward, which I'm very, very excited about, because what I find very interesting about your way of trading is that you call yourself a swing trader, but you're trading the 1 hour chart. Now I know you call yourself a swing trader, and you are a swing trader, but you're trading the 1 hour. You're trading the 1 hour charts, right?
Yeah.
Yeah. So that is interesting. Okay. Someone's live. Yeah, I can see you in the comment. God, what is this? You're live. You live. Well, congratulations for being live. You're getting out of here. I love the feeling of just banning people. Like it's such a power corrupts,
Griff, so you are mostly looking for reversals, or to identify the bottom and the top, and then looking for the continuation when you get the confirmation that maybe that's the bottom and the top?
Yeah, so reversals are my best entry. They have my best win rate and the best results, but they happen really infrequently. It's kind of like a perfect setup. So most of the time, I'm not able to get in on a reversal, and I'm joining in on the trend for a continuation like later on. But if I can get a reversal, that's my favorite setup.
After you identify that maybe the top or the bottom is in place, try to catch the next leg up in that direction, basically.
Yeah.
I'm gonna move my stops up a little bit here on gold and see what we get here. Now, funny thing is, I'm already up $300 on this account, and the TP is $400 for me to pass the evaluation. We'll see. Hopefully, maybe today.
Yeah, we'll get you there.
It's very interesting what's going on with price at the moment, to be honest.
Griff, maybe you can share your screen and maybe you can share if you're in any trades, if you're looking at anything to perhaps enter.
Yeah, sure.
I think we all just trade price action. Yeah, I don't think any of us really look at maybe fundamentals on a really small scale. Maybe I'm talking to myself, but
I look at it mostly from the fact that I think it's interesting sometimes to know what's going on from a macro point of view. But like, for example, I look at the EUR USD. It might be at like high time frame support, and I'm going into the fundamentals to kind of like find things that might be supporting my idea, but I would be taking the trade anyway based on price action. If I have accumulation at high time frame support, I see that you almost interrupt me, Alex. I can see it in your eyes.
No, honestly,
you did. Your lips started moving.
No, that's my twitch. I got a twitch when I'm going back into profit. It's like getting back into profit finally.
Guys, I gotta take a quick break. And
you're in the middle of a sentence.
Were I? What was I talking about then?
Don't matter. It's totally fine. So we're looking at EG. You're in the middle of a sentence, and then you said something about me interrupting you.
Yeah, you
And
see,
then
even the thought of you interrupting is interrupting me sometimes. Okay, I will be back in I'll be back in a bit. I have to record a video for Alex. He's been bugging me about this for weeks and weeks, and I can't believe that he won't let go. So I'll have to
So while you go and do
like-
that, then I'll play the little ABL promotion video that I've got.
yeah, look at that, Vinny, the interrupting trader. That's right. All right, see you soon.
Traders, stop going at it alone. Now join the AlphaBeta Labs, a free online community built by traders for traders. Share your insights, drop value, and get rewarded for all of your contributions. Now there's no limits, there's no gatekeeping, all traders, all markets at all levels. So click in the description below and join us right now.
Yeah, literally no idea what happened to my microphone then. So just ignore the fact that there is a microphone just didn't work. But yeah, there you go. It's only us three now. We can actually have a normal conversation.
It's funny. You guys get along. It's awesome. Awesome to see.
Yeah, it's good to have like banter. You know, I miss that. In England, the English are really good at banter. Like we've got good banter. It's probably like the only thing that I appreciate England for at the moment.
Yeah, there's not a lot going for it.
Is the fact that we have good banter. But it's good definitely to have a little bit of banter on the stream.
Always.
But I saw your video, Griff, about your old community. What was it? Gorilla? It was what was it?
Yeah.
Go on, give us the goss, man. Why they closed down? Give us the gossip, man.
Yeah, okay, go on. So essentially they filed for insolvency in April. This is a couple months after I left. They were mainly big in like 2021. Yeah, but they filed for insolvency April last year, but they kept selling the course and actually pushed the course more than ever, started increasing their prices, moved to a one-time payment model, and then eventually the insolvency people heard about it because they got emails and letters from like the insolvency team, so not even directly from like the community owners, and by then it had all shut down. And so for the last like year they've been taking one-time payments, still selling to their community members even though they knew that they were shutting down. So that's basically, yeah, that's the scam.
Wow,
that's terrible.
That is pretty bad. But it's like I thought they were actually supposed to be pretty, because I remember back in, you told me about that community when we had that interview. You said that you were in a community and then you left and you were doing your own kind of thing. But that was the community, obviously. So how come it just broke down then? What was
Well, I think the issue was they had received so many members throughout 2021 and 2022. And then from that point onwards, they started just losing members. It started declining. And I think they just had an unpayable tax bill. So you can imagine with numbers declining, they obviously didn't plan for that. I suppose they were planning for it to stay the same or keep growing. And then, a year later or 2 years later, they can't afford to pay their tax bill from when they were doing their best. The money they made that year wasn't enough to pay the bill for how much they made the previous year because they'd had such a big spike.
Were you there in the beginning, like when they started to grow? Because the main thing is if there is a difference on the quality that we're providing when there were kind of less people comparing with when there was a lot of people. But sometimes that's a problem as well. People don't plan for all of a sudden having, I don't know, many hundreds of members when they maybe were prepared maybe just to get like 50 or 100. It's different to provide value for so many people comparing with less people.
Yeah, I agree. Yeah, they really went downhill, unfortunately. It's a shame to see because the strategy works. It works really well. In fact, Alex, around the same time you interviewed me, you interviewed another person in GT called Jesse Emerton, American chap.
Yeah, I thought he was ICT type of stuff.
I think he just started doing that. But yeah, a few of the entries he was trading were the same as me. and he just had introduced these new kind of liquidity concepts recently. So yeah, he's a friend of mine, and he's gone off and done his own thing as well. But yeah, another person, so that you have an idea of who were kind of in that community.
So it's like how you've got something good, it's making money, it's making, it's doing well. How could you make such a mistake? Obviously, tax is a big thing, obviously, and I think something that we don't talk about as well in prop trading is actually paying taxes on the stuff that you actually make, and it's super important because eventually they will clock on if you're not paying taxes. And if you've already spent all the money, then you're gonna have to get it from somewhere else. And
I think it
taking a
comes
loan
down
or
to,
anything like that, and it's not really.
I think just like greed and inexperience. That obviously thought that they'd made it, and they hadn't had experience with anything like this before, so they hadn't planned for. They didn't have any contingencies, I guess, is what happened ultimately. It's a shame because a lot of people were really optimistic, and they were paying thousands of pounds for this new exciting course, which ended up just being a really, really rubbish bit of content that was made in like an afternoon, and then it's all gone. Like some people bought the course like at the end of 2024, and then they're gone in January 2025, so they didn't even get to fully use it, even if it was a good course.
Wow, so the course got taken away as well?
Oh, the whole website, the social media, everything got deleted. Yeah. I left in like 2023, but I thought people kind of need to hear about that just for, I guess, to be aware that there are some shady people in the industry, and I don't want
any industry,
to feel like isolated. Oh, for sure, but especially in the finance industry where people want to make money.
But you have it in kind of all of these types of make money online type of things.
Yeah,
they are fantastic. Don't get me wrong. There's make money online. You've got your e-com, you've got the Amazon FBA, you've got all of these different things, and you can make serious cash if it's done correctly. But within there, you have sharks that are not necessarily there because they actually want to provide any type of value, because they get value from giving people value. They're there just to take money, really. But again, I don't think it's like exclusive just to finance. You have it all over the place. You have it in government, you have it in absolutely everywhere. Wherever there's money involved, I think you'll find it. So it's just a shame that people bought a course and they didn't actually get it. Question, Alex, please, Alex, with the 5K one-step account, do you have to use a stop loss, please? I don't think so, mate. I can double check for you, but I don't think you do.
It looks like Yasin responded to them below.
Nice. Stop loss is not mandatory yet. So what is with you now, Griff? Like, what are you trading? Have you just got loads of accounts on with a copier? Because I actually use the trade copier that you recommended. Because you recommended to me ages ago, and I'm only just starting to use it. It's really good.
Oh, ideal. Well, if you come to support, you'll actually find me there. That's what I picked up a job there. I don't know if you tuned in on the last, it was 2 weeks ago now, I was on the live stream. I was speaking about how I have so few trades that I've got nothing to do all day. So I had a job offer. I thought, may as well. And then I was able to, get myself, main reason I wanted to get a job was for financial stability, because I have like 1 or 2 trades a year that make me the year's profit, which you can't depend on month to month. So it kind of gives me that baseline. And then I was also able to get a mortgage in 3 months, because you just need 3 pay slips. So yeah, I work at Traders Connect. So you might see me there in support sometimes.
Mm-hmm. So that's a good question then. It's like, should you make trading your full time? Like, I keep playing around this idea, should trading just be like full time, or just having like that income, like a main job, and then having trading on the side? I'm always playing with that idea, but I think that is like the optimal thing, having that a solid kind of paycheck, and the trading on the side is just to
supplementary
add to that. Yeah.
That's my belief, but that's also that also aligns with the strategy that I trade, where I've got very few trades month to month. I might not even have some trades. I can't depend on it. I'd need a very big safety net, which is what I did for my first few years of trading, and it worked fine. But I thought, if I want to be able to buy a house in the future and I have regular monthly payments, I can't depend on trading, and it's actually going to put a lot of psychological pressure on me, because I'd be paying for my house, my family, my bills, my food, and you don't need that stress, and especially I'm fortunate with the strategy that I trade. I've got so much free time, so it just made sense for me. Even though I told myself for years I'd never get a job ever, but I had to kind of bite the bullet, and because that's what was ultimately the safest and best decision for me. But I think if you're trading maybe intraday and you have multiple trades per month, then I think that you can probably get a more reliable income, like a smoother equity curve. Let's say my equity curve is quite choppy. I have big highs and then trickle down big highs because I have few large trades. That's how my strategy runs. Yeah, I don't know.
I think this is smarter way, because the thing is with trading as well, you can have such a good run, and then it can fizzle out, and you can be in not so good run if you have got your mortgage and stuff. Well, it's
it's pressure, and it's a necessary pressure that you start dealing with. I think the idea, of course, it depends as well on what you are doing. Many people maybe are doing jobs that they don't really like, so they are always with this idea of transitioning into full-time, because mostly it's that because they don't like what they are doing on the side. I think eventually, for example, I think all of us, basically, we are doing jobs related to trading. So it's actually still related to the topic, where we can continue to evolve and to grow and to speak with other traders. So we are always growing within the same industry. Opposite, if you are doing completely something different that's not related to trading, that could be maybe a bit harder to combine. But then it goes always down to your own plan. How do you schedule your day? Like what kind of strategy you have, your lifestyle. All of that needs to be in place. But eventually, maybe that's actually the transition, go from maybe doing something else, making it in trading. And then when you start realizing that you have so much free time, then you're actually going to start looking for something else that maybe can give you that stability in terms of source of income. But still related to trading. Eventually can be mentoring, can be creating content, can be working in a company related to trading, can be many options in there. I don't think there's any problem with that. There is not any problem with that. Because even if you think about
doing all of those things,
even in the biggest prop firms, for example, if you look at the S&P Capital or something like that, the guys are getting a salary, like they get paid kind of a wage as well, a monthly wage. And then they get the percentage of the returns that they get, but they still get they want to, like those big prop firms, they want to make sure that you are not concerned about paying your rent. Otherwise, you are never going to be at your peak performance if you are worried about paying your bills at home. Like there's no
and it may make you as well not actually execute properly, because you'll be like, let's say if you make a certain amount of money and then suddenly you don't want to give that back and you don't want to enter into a trade when you should enter. I had I had that yesterday. I made some really nice profits, and I don't know why, but even this morning I was fearful about even entering because I didn't want to give that back, and I'm trying to get over that for because it's creeping into the trading. Now think of if you didn't have that base income to support you and you were just focusing on your trading, it can make it even harder. And that leads on to this kind of
I was just reading that
situation.
Question.
So it's like you left your job, you started trading, which fair play to you, mate, because you took something that you wanted to do and you went all in. But it is a big risk. You've got to also think about, in trading terms, what's the risk to reward on something like this? So you took a huge loan as well, but you're still in a loss. How do you get out of this? Well, only you really know, and it's probably not. It's going to be very difficult for us to give advice, but I would suggest getting a job and clearing that loan, having the mental free space in your head without having any loans, without worrying about having money in your pocket, then go back to trading. I really wouldn't start trading properly because you're just going to be focused, like Griff said, on just making money. And the thing is, when you're just focused on making money in trading, you don't make money in trading. It's only when you start focusing on process that it actually starts coming out.
Well said. Yeah, 100%. I agree.
And usually, like the way unfortunately trading, the way it works is the more you need trading to work, the harder it's going to be, and the least you need kind of trading to work, it's kind of the easiest way to actually finally start making it. That the situation that you decided to go in, like sometimes, like there is a process that we could maybe talk about in terms of how to transition into live trading. You need to kind of check your bills, kind of what kind of expenses you have on a monthly basis. If you have a job, for example, you can make it in a funny way. You don't need to transition straight away, stop everything that you are doing, and try to jump into become a full-time trader if you are not still in a level where you think that you're going to be consistent and maybe have at least maybe past a few funded accounts, so you have at least a little bit of a backup. But if you are working if you have another job, you can make it a game. Like you want to make sure that you start kind of earning the same money that you're earning in your other job on a monthly basis, then doubling it and maybe making 3 or 4 times more while you are trading. So the profits from trading starting to equal at least 2 times more the money that you are making from your job. So that becomes a little bit of a game. Then maybe you can start reducing finally the job and go into and start focusing even more on trading. Then you can maybe become part-time and then continue. And then maybe have 6 months or 12 months of savings before even thinking about transitioning into full-time. Because it's not going to be easy.
I'm going to bring on a guy that has got a really nice concept or way of doing this, because he's been doing it. He's the first person that I've ever heard actually do it in a way that I'm just going to bring him on. This is Stephen. He's one of the mods or ABL. Sorry, I butchered all of that, Stephen. But
great intro. Thanks, Alex.
Hi, Stephen.
What's your opinion What's your opinion on this, though? Because you've been trading and doing a full-time job, and slowly over the years, you've been able to up the trading and be less time at work.
Yeah.
So
I still need to do video, don't I, for the ABL site. I'll get around to it. Yeah, all I do each year is instead of having a pay rise from the bosses, I say keep the pay the same, and I knock an hour and a half off each week. And then in addition to that, I'll go to like the mortgage or something, pay a chunk off, save the equivalent of an hour a week, and then I end up reducing my hours by a couple of hours every week for the last few years, and that's what I've done each year. So I'm barely in the office anymore. I'm in the office for 20 hours a week, 20 hours a week, something like that now. I used to do 42.5 hours in the office every week, Monday to Friday. Doesn't leave much time for trading. So that's all I do. Every year, all I do, offset, as long as you're getting the same income each year, something you can survive off, pay some off, offset something, move something around, and then reduce your hours. And I've had the same pay every year for the last few years with less hours each year.
See, I love that way. It's like compounding all of your time and just putting it into trading. And
it is. So I live a trader's life without the trader's money.
You know what else?
The wife seems to think I've got the trader's money the way she spends, but that's okay.
Oh, God.
I'd say the way that you've done that as well shows a lot of discipline, which is another element that is required to be a good trader. If you are tempted, you make a bit of money and then you want to dive into being a full-time trader, that shows a lack of discipline in many ways.
I've seen a lot of people, they'll get 10K a month and a 5K a month, they quit the job, and then those payments stop, and they're
the way you did it is literally optimal. That's the perfect way to do it, and the safest way to do it as well, and shows a lot of patience.
Everyone always asks, how would you become a trader from full-time and stuff? But it's not a click and swap from one to another. You need to transition, I think. That's what I'm doing anyway. So
I think that way also it's a little bit, because it also, when you go from not having a job into full time, there's that initial maybe excitement or that initial kind of emotion behind it. And by the way that you've slowly transitioned, by the time that you probably will end up just full-time trading, it's not going to feel like anything different.
No, it's like the trade size you put on your trades. You know, you start off at 50 quid a trade. Actually, I started off £2 a trade a few years back, and then I worked my way up to 20, I think it was, and then 50, and then 125, I think. You got to work your way up to it, haven't you? If you went from £2 a trade to £600 trade like I do now, your mind would just be, you wouldn't cope. But same for work transition life, like you said, Alex.
That is literally though the new guys coming into prop. That is what they have to go through, because they have to go through the fact that they start maybe trading on a small demo, or they learn about trading, and then they see that these like funding companies will give them an account which is a bigger account than their actual ability, and then they get so used to trading these big numbers that sometimes it can actually hurt their progression. Doing it that way and slowly progression and adding to risk slowly really does fortify your skill. Whereas if you get used to using lots of leverage and you get used to big positions, it's quite a hard habit to get yourself out of, to be honest. And that's something that I see with lots of new traders blowing accounts very easy, because those big numbers really work against them. So
they all want to rush in, don't they? But trading's a patience game.
Yeah.
Like Griff was saying, but there's like 3 trades this year, did you say?
Yeah, I think I just took my 4th trade yesterday evening, I think.
Hey, we're up to 4.
Yeah.
Going wild. But people don't learn to wait. I used to, if I went a day without trade,
we lost you, Stephen. We've lost your mic, mate.
Lost my mic?
There you go, better now.
I was just saying, if I used to go one day without a trade, I'd be like on edge and then looking for a trade next day, and then you're just entering anything just so you're in. But I can go one day now, I can go 2 days. I have to admit, if I get to that 3rd day, I'm twitching. I'm looking for a trade, because I intraday trade mainly. Yeah, because I like to trade. I trade intraday, so how long can change did it take you before you were confident, successful enough to do it full time?
Interesting question. Go on. I think each one of us probably have our own answer to that. And so, Pedro, you can answer that, and we'll take it in turns, because I think it's very individual.
Yeah, it took a few years, maybe 3 or 4. My main reason as well is because the first 2 years I was doing something completely different. I was trading harmonic patterns, Fibonacci, RSIs, and stuff like that. And only after that, that's when I decided, or I found out about the naked price action, basically supply demand and more market structure. So it took me quite a while after that to start becoming a bit more profitable or consistent. I'm kind of a perfectionist person, so I spend a lot of time actually studying it and not really trading. So my knowledge, it was kind of getting much better, but because I was not exactly executing, there was a big gap, which led to a lot of frustration for a few years, unfortunately. So it was basically, I could predict the moves, but then I was not able to produce the same on my performance. Either I missed the trades that I should have taken, either I entered in the wrong ones. So there was always that frustration, and that was one of my main problems within my own trading, until eventually everything started to click a little bit. A lot of journaling. Journaling was really important, as well as one of my processes to start improving in my own trading, to start become more consistent in my own analysis or my performance. And then after that, it was not true. I never really had any problems with risk management. I can never really risk too much. So at least gladly from day one, I was kind of steady with 1% risk back in the days. So yeah, that was one of my main problems. Focusing too much on the knowledge of acquiring, understanding the market, and not really matching with the execution, and that gap leads into a lot of frustration in between, because you feel that you could be so much better, but your performance is not showing that. So yeah, that was the hardest part to overcome on my own process.
Yeah, I think my problem was I was way too confident to start off with, and I've always been a little bit overly confident, and I was always boom and bust for many years. For the good first 5 years, I was really boom and bust, and that was due to overconfidence. And it's only these last couple of years where I've kind of like calmed down a little bit and been more process driven, that I've actually seen a lot more consistency. But it takes however long it takes for you to stop making the mistakes that you're going to be making and actually start doing the proper things, because most traders know that they're making the certain mistakes that they're making, but they still continue to do them. So once you get rid of that, then it's all rainbows and sunflowers and lots of money.
Don't forget the
Lambos. My answer to this question, I think my circumstances are a little bit different to most, because I spent like 2 years learning to trade while I was at uni. So I didn't need an income or anything. I was in a great opportunity to do that. And by the time that I'd graduated university, I had saved up enough money that I could sustain myself without any income for, I think, like a year, maybe 2 years. So I was just able to trade and trade and trade and trade for a long time before I would have to get a job. But yeah, I spent those first 2 years just preparing. Over preparing is probably a bad thing of mine. But thankfully, when I first started, I was profitable right from the get-go, and I've had every year I've been trading since, I've made money, which is great. I'd say eventually I really wanted a house, and that's pretty much the only reason that I stopped being full-time. Otherwise I'd still be full-time now, probably. Yeah, I guess, yeah, just being really prepared and having a big pot of savings, making sure you've always got a backup plan, and being disciplined and patient and not getting overexcited and diving right into it would be my advice for somebody looking to go full-time, because obviously that's the dream. That's what we're all looking for. But I do now feel that trading is more of a supplementary income. That's the luxury of trading, the fact that it takes no time. I think if you give most people, say you give them £1 million, and all the time in the world, they're not, at month 2, they're going to be really bored and looking for things to do. And it's the same with trading in many ways. If you're consistently profitable every month, eventually you're going to have all this free time, which you've strived for by becoming full-time, and then you're just going to be bored. You're going to have nothing to do, and you're going to wish you had some more things to do. So I do now view trading as more of a secondary income, and a secondary income can be bigger than your primary income. But yeah, there's my take on this question. Sorry, that's long-winded.
No, super valuable.
Stephen, what do you think?
He's just smiling because he's got out of a nice trade. He took my stop loss.
I just WhatsApped him the image. I've closed mine in profit. Sorry, Alex. I did the opposite of him. Yeah, I think I've kind of already answered mine. I was in work full-time, and then I've slowly transitioned into trading, so I run both alongside. But like you were saying then, if I was suddenly to snap my fingers and be full-time trading, you've got to have something to do at home. You've got to have a hobby. It's like retiring. There's no point retiring unless you've got something to do at home. Otherwise, you're just going to end up bored, aren't you, eventually? So I agree there. I mean, I think even if I was pretty much full-time trading, I'd probably still offer to do the phone calls for my workplace, to phone my customers each day. So I had that routine and sort of a bit of a work life still. I think I'd probably still do that. It was interesting what Pedro said about you've got to go through your whole learning process. And he mentioned the RSI. Yeah, I did all the RSI. If it's over 85, sell, and if it's under 20, buy, and all that stuff.
More as a divergence RSI. I never really look at overbought, oversold. It was more of that
Overbought, oversold, yeah.
kind of
But, you know,
RSI going down, price going up, so kind of start showing
Yeah.
some divergence. I was always more into that view. I like
So-
RSI actually. If there is an indicator I like, it's actually RSI. I don't use it,
Yeah.
but I like it.
No, the strange thing is, I think most of us now, looking at us for, we don't use indicators and things like that
Mhm.
much on the chart. Got an EMA or whatever, you know, but that's not really the same. But I used to program every different EMA on TradingView in PineScript, and I programmed some in MT5, programmed a trading bot and everything. So this from the guy who programs indicators, I don't even use indicators. I have my session breaks marked up, and that's it. I don't have RSIs or stochastic thingamajiggens or bolly bands or anything like that on my charts anymore, which is really weird because I used to program them all the time. But it's part of the learning process and the journey you got to go through. Like Pedro said, first of all, you think if you chuck a few indicators on, that's your magic bullet, job done. But you've got to go through that process, and you eventually end up, I think, pretty much like us four, where you've just got price action, and you're looking at the chart and reading the price action of it. If not even just for your entries, for where to get out and know when it's moving against you and pull your stops or close your trades, and protect your balance, really. But I think that would be my long-winded answer.
Fair play. I like so your stop loss is 3 to 4 pips away. If it's that case, you've got more risk closing the trade early than it is just hitting your stop loss and taking the loss that you already calculated before taking the trade. So just leave it. Though that's my opinion. I don't know what anybody else thinks, but
so he's saying if his trade is 3 or 4 pips away from his stop loss, should he close
exactly.
it early or just leave
Are you ready? Are you ready?
Yeah. It depends what his initial stop loss distance was, doesn't it?
Yeah.
Hi, Jonathan.
Have you seen gold?
Seen gold? Have you seen?
Have you seen EG? He doesn't want to look
Yeah,
at EG.
I'm $50 from passing it. I'm $50 from passing the elevation. I'm gonna do live. I'm gonna do live. I'm gonna do live. I'm gonna pass it live.
Oh
my God.
We were having such a great professional conversation, helping traders, giving value.
What are we looking at? Gold.
Well, I got some value for you. Buy gold.
Wow,
Yeah, I don't know. This is not financial advice. Anybody? So
No,
It's not financial. I saw a comment. What have you? Did you bring that up? The comment about taking a loan to go full-time trading.
Yes.
Did you talk about that?
Yeah, we talked about it.
It is.
Please never do that. Like
it's a very important subject.
Yeah, I wouldn't take a loan to go full-time trading. It would put
like you
way
gotta
too much pressure on.
you gotta talk with a financial advisor about that. That is a bad situation to be in, man. You gotta talk to a financial advisor.
Glad that you're helping his situation ever so much. I'm sure that everything will be fine. You know, get
Yeah,
back
if he gets the help that he needs, you need to talk to a financial advisor, dude. That is, it's not good. Not good.
There you go.
All right.
We do have Rich as well. Rich is a fantastic performance coach in the
Yeah,
5ers.
we got the whole family. Oh, I thought you meant he was coming on stream.
Oh, no. Not yet.
Rich has been great recently. He's been messaging me and encouraging me and helping me with my little YouTube channel and stuff on my trades and
I
joining
just
you guys on
subscribed,
the stream.
Stephen.
Did you? Oh wow! Cheers,
Yeah,
mate.
I noticed that your Stephen V Trades. I was like, that's got to be a YouTube username. Like, surely his last name isn't Trades.
It might be.
You were born for this role, Stephen.
That's it.
Okay, can I? I'm so sorry, guys. Just come in here and just take it over like I always do. But we do actually have an evaluation about to be passed here live. So you can see here we got 5,347. I got $50 away from passing this right now.
We have
And
in its
2 weeks
natural
ago I was what? Alex, come on. 2 weeks ago I was 1% from losing this account. And I remember saying, I'm going to show you guys how we can risk small and then, start compounding that risk to eventually pass this account. Yeah, you seem very excited. I'm very excited.
It's got to get to the take profit for you to pass.
No, it just has to move slightly more to the upside. I'm in AUD, Euro AD here, the short. I reckon it needs to be moved down here, and gold just needs to push a little bit higher for me to. Oh shit, Euro AUD is not looking very good. Should I close this? I need your professional. I need your professional opinion on Euro AUD ASAP.
Well, we do not give financial advice here.
Well, you're in a short.
Yeah, we're short on Euro AUD.
It's only pulled back from the midnight open.
I think that looks good.
Yeah, I'd say.
Okay,
around 1 minute.
Great, I'm gonna keep.
Oh wait, I'm on the 1 hour time frame.
That
looks good.
Yeah, definitely. Yeah. It looks amazing.
It looks okay in my M15.
Yeah, I think that's
all right.
Well,
M15.
Okay, good.
Still.
If nothing looks good, always go down a time frame until it looks good.
Yeah.
Big
That
brain.
is the trick.
Professional advice.
Professional advice.
Zone
Looks about
Trader
10,
says
15,
close the
10,
short now. I am never gonna close this short. I don't know what you're talking about. That's terrible advice. I would much rather take Griff's advice.
There we go.
We are 50, less than 50 pounds away, yeah?
I come on the live stream and everyone's just shaking their head when I come in interrupting. But look at the views. We're at all-time highs. Apparently, people like me interrupting you, Alex. We should do a whole segment of that.
I'm still looking at EG. Like, how did that beautiful setup that I wanted to get into this morning ended up getting taken out by Steven, the market maker, taking the opposite side of my position?
I did. Sorry. But I did tell you this morning to patience.
Fair play, mate. Fair play. No, to be fair, I'll give myself. I was patient to get into that position. To be fair.
You know what I entered it on? Remember I was talking about my support and resistance and the break of the H1, H4 zones, and then following the breaker structures down. That's what I entered it on with a 50% retrace.
Jonathan, could we bring up? If that's okay, Stephen, your chart on TradingView for you just to show us what you were looking at to get into that opposite trade.
Let me have a look for you now. 1 second. As long as
I assume I have to close these trades to pass the evaluation, right?
Yes.
It's balance, it's not equity. Yes.
Just let them run.
Yeah, that would.
If you have Traders Connect set up, you can get it to close out automatically at the profit target.
Oh, did you just shill a really good trading copy trader platform? Oh, wow, that's smooth.
That's what I do.
Like that.
That's what I do. I don't even know my profit targets. I just let the trade. I enter them once and I let them run, and then it will close out all my positions when I hit the profit target.
Oh, so it's gonna close them automatically when you pass an evaluation.
Yeah, you just write in your profit target, and you choose what you want to happen when that equity level is reached, and you can choose for it to close out all your trades at, in your case 5,400, and you'd leave a little buffer, because market conditions. You'd put like 5,420 or something just to make sure you're definitely over the line, and then you can just forget about it and trade as normal.
That's beautiful. Great question here. How did you restore this count in these 2 weeks? Risk a lot. That's what I did.
More financial advice.
Do you know what, Stephen? I'm wondering right now, the fact that I pulled in my stop loss underneath that low, I could have been still in that trade. I think.
Underwear down there.
Yeah, let me pull up because I pulled the trade. I pulled the stop loss in, so the stop loss was originally here.
Yeah, I saw you trade because you posted it on the ABL, didn't you?
Yeah.
You were sharing on the ABL.
Oh shit, that looks horrible, Alex. Are you still in there?
No, I'm out now. I'm out.
Oh,
we're gonna listen to Stephen's.
Oh,
We're gonna look at the reason why Stephen got in.
Oh, okay. Are we? All right then. Okay.
Sorry, mate. Sorry, I keep doing this morning. We got onto stream, and I was like, "Hi guys, yeah, I hope it's everything."
Yeah.
Steven's here to basically
Steven's going to show his
show
setups
you
now.
his stuff.
Am I? Okay. Yeah. Okay. So support resistance setup. So H4 and H1 support resistance zones, which everybody knows. Don't need to explain them to you guys. But then just dropping down to M15 once we're in that zone. Here we go. There we go. So on the M15 chart, and then we're just looking for the breaker structure cycles. There's one. Boom, boom.
Wait, did Alex long that?
Alex was long in this, yeah.
Yeah, it was a very decent long. It was a decent trade long.
It was touch and go for a little bit, wasn't it? Between which way it was going to go. Yeah, so that's fine.
I think soon as the strength came in a little bit into the Dixie, because the Dixie was pushing down, but soon as the retracement came and
once it did this and it popped back up, and then you messaged me going ha 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 ha. It was like, I think I messaged you back, didn't I? I think it will refill that wick, which down there, which obviously it did. Yeah, so all I did was, once it's in this zone, looking for these breaker structure, and then I whacked on a fib here for the 50% retracement. My targets were lower down, but I closed them, wherever it was, somewhere down there, was it? I had two entries because one was there and then one was a bit further up. That's all. That's simple. Nothing complicated, really. This is one of the indicators I used to program. Look, and this one down there. It shows you a little table with all the little the MACD for the weekly, the daily, and everything all in one little table, and shows you nicely there.
That's
I
awesome.
used to program all sorts of cool stuff. Just don't use them much anymore.
Yeah, I was going to say, didn't you say you don't trade with any indicators, but then you've got loads of things drawn on your chart?
Yeah, these are mine now. Look, see, Steve's MACD. I coded that myself, so it's
That's
staying
awesome.
there. So I don't
Okay.
use it anymore, but it just gives you. Well, I don't really
A confluence.
to be honest. Yeah,
I'm getting a bit worried. Close down the charts.
on your
I'll
gold.
take this. No, I think gold. I'm liking gold. I think it's euro 80 that I'm not liking.
Euro 80.
I think it's
Euro.
I'd wait for
potentially
this next
has
candle to
created the
close.
bottom here. Yeah,
Yeah, you see, it's
decent wick in the 1 hour.
it's rejecting off the Asian high over there, isn't it?
Yeah.
Oops, wrong button. Asian high, and then it's wicked off that, which off the midnight open at 12 o'clock New York as well. But we still have got a general downtrend, so I think it depends what this next candle does for me.
Yeah, Zone Trader told me. Should have listened. EA is in SMR of MMB. What is that? Like,
That's a lot of
what are
letters.
we doing? What are we doing, guys? Like, are we trading price action, technical analysis? Like, what is this? Please explain yourself. Alex, you look confused. Are you long EU?
I'm not confused at all. No, I was looking at EG still.
Reminiscing.
All of those lovely profits could have been, but Stephen.
So you only told me to push the button. You didn't tell me
makers.
which way to push the button.
That is true. That is true. That is true.
And I did post a sell button in the ABL.
Yeah. No, we've got quite a good few traders that post in the ABR that have got some really good setups. To be fair, I've made some nice profits just from people showing their charts. I'm like, oh, that's a nice setup there. That's a nice setup.
It's interesting. You don't think to look at something like gold. I rarely look at, but since ABL, and everyone always asks gold, I'm looking at it all the time now. So you never know. And I've been talking to Daniel. He's a good guy, so I'm sure I can learn a lot from him about gold. So watch this space. We might end up trading gold. But like I said, Alex, never would have even looked at that before, really. But you pick things up. Always a bit like Griff. I'm always happy to pick things up from people, learn new things. In fact, Jonathan, hold on. Can I show Jonathan what I'm ripping his setup off? He might not like me afterwards. There you go. Oh, where have I gone?
Oh yeah, that. Have you watched my video?
Yeah, completely ripping you off. I do apologize.
Yeah.
All profits will go your way.
I'll send you my bank details when you hit that TP.
Send me your bank details. I do apologize, but I've been looking for swing setups, and you did the master risk 6-hour event the other day, and I loved your charts on that. So I was speaking to Mike. I started looking at 12 o'clock at night. I was up till 1 in the morning, going through all my daily charts, setting these up. So you owe me a few hours sleep as well.
Yeah.
Yeah, blatantly.
That's actually, I like that. GBP and CD is that does look good. Yeah.
Yeah. Both of those are doing quite well. We've got AUD, JPY for long. These are all daily charts.
Right. Okay. But the question is then, like, why am I not in these? You know.
Well, it's your setup, so I don't know.
Yeah. Oh wow. Blue Dash is asking, what do we think about ICT? We don't really think about ICT.
The strategy or the man?
Yeah, that's the thing, because the concepts really give good frameworks to a lot of new traders. I do think the frameworks are really good.
There's some good points about liquidity sweeps and stuff. It just depends how you take it. Or, I mean, you could look at some of my session breaks and think there's liquidity sweeps and things like that. You just pick up what you need to pick up. But I don't know about the overall whole thing, though.
Yeah, I mean, there's a lot of great books on technical analysis out there.
Hello, is there another space for me as well?
There is. I'm gonna leave. It was lovely.
You a little one.
Yeah, lovely relaxing with you guys. I'll see you in the next one.
Yeah, it was perfect. Thank you, guys.
Yeah, Alex.
It was lovely.
Bye-bye.
I'll see you everyone that speaks Portuguese at 5 p.m. So enjoy the session.
Take care, Pedro. Okay,
you,
so
I
don't know, like, should I close UAD?
I think you should leave it. And it's my time to go as well now. So
it is.
I'll see you next Tuesday. Okay?
Yeah, thanks, Griff. Thanks for hopping in here.
See you, Griff. I'll subscribe to you as soon as this finishes.
Thanks, Stephen. Nice to meet you. See you guys.
You too, mate. Bye-bye.
See you, man. Take care.
Stephen, it's the first time we meet.
Hi, Victor. Yeah, nice it's fine. You too. You okay?
This is the very, very first time we have any interaction whatsoever. So I'm excited.
Yeah.
I'm excited to get to know you.
I've seen you loads of times before with your order blocks and all this stuff, and watched loads of them, and sort of in the chat there, but not face to face, so to speak.
Perfect.
Oh my God, gold is just continuing higher. This is absolutely incredible.
Gold. Where's it going to stop?
At 3050.
3037. Have you got a target level on there?
Yeah, I got. I don't know. Like, I need $40 left, and this account is past the evaluation. It's nerve wracking. Because gold is breaking to the upside, while AUD is kind of like not really sure what it's doing. So if my equity goes above 5,400, I should close all my trades at market. But I'm sure that I will close them, and then it's going to say like 5,399 or something like that.
Yeah, I've had that. You're like $5 or $10 short after commission.
Yeah. That's something what Griff does. I do as well. I have an EA that closes based on equity level, and you can set anything, and it's the best thing. You shouldn't be worrying about your P&L, because that's what a target is. It's a P&L thing. We shouldn't be having that as a factor in your decision making. You should be focusing on whatever made you enter that trade, and only that.
Yeah, but I'm passing the evaluation. You know, if I get $50 extra, $40 now.
$40. See, I'd be tempted and close it and then just scalp a few dollars afterwards, but that's not the right thing to do.
I understand.
We know how that's going to end.
Yeah.
Jonathan, I understand that for you, it's important that the price does something because you're gonna pass that evaluation. But if you're going to, for everyone, this applies. If you want to assess, the probabilities of the price in the market doing one thing or the other, personal reasons or values we ascribe to anything happens shouldn't be a factor, and it typically can be. Maybe not for you, Jonathan, because you have a lot of experience. You may not let that blind you, but if for someone who is new to the market, focusing on the passing or a P&L or anything that is personal, that has nothing to do with the market, is not a good thing to do. Someone asked if how to do that. Vinicius, they are free even. They are premium EAs you can get, but there are free EAs on the MetaTrader market you can get that will close the position or do any number of things with the trades that are on once it reaches a certain equity. So you can set that equity to be just beyond your target, as Griff had explained. And when it reaches that EA automatically will do whatever you set it to do, which would be, close the position and then stop trading, maybe even close the terminal. I think once of you can do that. So
you could
that
code
would be
one up
something
yourself as well. It's quite easy. MT5 uses basically C#, so it wouldn't be easy. It wouldn't be hard to program that as well. I programmed a few things on MT5.
I believe that EarnForex does have one, a quite elaborate one, I think, which is very nice. I don't use that specific one, but I, if I'm not mistaken, EarnForex does have one. I think it's called something like Trade Manager, something like that. It does many things, among other close your positions based on equity rules, which is so great because you can focus on your strategy, your execution, your trade plan, and not having to worry about
Forex for placing every one of my trades on MT5. The
Forex,
whatever it's
PCS,
called. Yeah,
PSC.
Forex one. It's ace. You just enter the levels, type in the amount you risk in. It does lots for you. Really good indicator.
It's the position size calculator.
That's the one. That's what's called. That's it.
Yeah. It's used to be an indicator before, but now it's an EA. And I have it set with hotkeys. Did you too?
No, I haven't got hotkeys. No, I have sort of. I go into the code and mod it a little bit just to change the color of the lines and stuff, just in the setups, but nothing too extreme. And then you can set the default risk for it to like $600 or whatever you want. It's really good. Anyone with MT5.
Yeah, we recommend it very often on our streams. It's such a big difference. Actually, I've measured. This is important. I've measured my execution when I do it manually without that EA or indicator, and with the indicator, I can actually measure more profit. The strategy didn't change. My execution, at least my part, I'm doing everything I can, but because it's so precise, I can actually make more money just by using it. It's amazing.
Remember when the 5ers did that competition the other week? Was it the 5K, the 9-year birthday celebration competition? You weren't allowed to use EAs, so you couldn't use the EarnForex to place your trade. It was so annoying. I had to mark it up on my other chart and then manually enter it on the birthday celebration trade because you couldn't use an EA to place your trades. That was a learning experience for me because I've never really manually placed trades on MT5 before.
Yeah, I very rarely do that as well.
No, exactly. But although it was annoying, it was a really good learning experience because then I learned how to do the new position, enter the positions. I've never done that.
Yeah, you need to have backups, right? You need to be able to have backups. Like for me, for example, I had to learn how to enter positions on my phone and calculate position size on my browser.
Today.
Yeah, because what if the power cuts at home, or what if my broadband internet is just disconnected? I got to do everything on my phone,
Or
so super,
like
super
me
important
today,
to be
you were
able to
sat
have
in Morrison's cafe with a missus, and she wouldn't let you trade, so you have to go on your phone. And
Yeah, exactly. Yeah,
like
you're out traveling, and you're like, God damn it, I forgot. You get a signal on your phone, like I got to enter this trade, or you forgot to put in the stop loss or something like that.
I was trying to set a long on AUD JPY whilst in Morrison's Cafe this morning with a missus.
Yeah, but that is stressful though, and it's so easy to make mistakes.
Yeah, so it's really good to learn the other things, like I said, because you never know when you need them or whatever. So if EA disappears, you've got to be able to do it yourself as a backup. So
yeah, you gotta have those backups for sure.
Yeah.
I mean, they're very mundane things, right? Not having access to your computer, anything can happen. Can happen.
Like Jonathan says, the broadband goes, and you want to enter AUD JPY like me this morning. You've not got no PC. What are you going to do? You know?
Exactly.
Yeah.
Exactly. That is totally right. And as traders, because we have a lot of freedom of time, it's important that you are able to execute your trade plan, even if you're traveling, if you're outside of the house, out of your home office, if you work at home, because that's one of the goals of a trader, right? We don't want to be 12 hours sitting in front of the screens. We want to be doing things as well. Now we're successful. We have profit. You want to enjoy it as well, and not only on the weekends, but also during the day. So it becomes also important to maintaining continuity in your trading plan. If you're able to, you have multiple ways to do whatever that is that you need to do according to your trade plan.
Yeah, exactly, 100%. I only trade the sort of London session up until about 12 o'clock because I don't want to be sat here all day long. Although I am sat here all day long today. That's because I've got a week off work because it's the wife's birthday.
Oh wait, you get a whole week? When is your wife's birthday?
She gets me home for a whole week for her birthday. Isn't that nice?
Oh wow. Okay, nice.
And I get to spoil her by taking her to Morrison's Cafe for breakfast.
And trading on the table.
That's
a good one.
Yeah, well, she gives me evil looks.
Yeah.
Isn't that
woman?
Isn't that also relatable for every trader who wants to catch another look at the charts while they're away and supposedly sharing quality time,
exactly.
but
it's like what are you doing on your phone? I'm like, I'm making money. It's like, you're just on social media. No, I'm actually working. I'm actually making money. You see that TV right there? That's from this. That's because I'm doing this. That's
this breakfast doesn't pay for itself. I'm trying to put £7 trade on.
Look at this. This is Euro USD on the 1 minute. Do you get how stressful this is? My stop loss is 5 pips.
Put your phone down.
All right, calm down. Yeah.
But
that's actually not what I do. I try to stay a long way from trading on mobile and
mobile's a backup. Mobile's a backup only, and only to enter setup you're already analyzed and ready to.
And a pro trip, like don't talk about trading. Like don't talk about trading. Nobody cares. Like she won't care if you're in a short on EU.
or I say, if I ever try and say anything to mine, or she says, if I say like, $1,000 in profit, she'll go halves and then walk away. That's it. It's like, what?
Oh, amazing. All right, are we? Oh my God, it's retracing. I'm giving.
Go ahead. You're talking about gold.
I'm talking about Euro 80 and gold. It's I'm you know what? I'm just gonna ignore this for gold looks good though. It might break out, and Euro 80 is still at that resistance. I mean, it's definitely at a indecision point.
I'm not liking that one as much anymore.
For short.
Euro AUD. But it's not to say it won't reject off a 200 EMA on the 15-minute, even if it comes back up to that. There's good support there. But I don't know. How much do you need to pass now? You're around 40.
Well, it fluctuates. That's all I can say.
Actually, gold. today we don't have any news coming up on EU on euro dollar. I mean, the only on the dollar, I should say. The only news we still have, actually, it's already gone, right? That's the CAD CPI, the Canadian dollar CPI. That already.
Oh, I forgot about that. Yeah, 12:30. Yeah.
Yeah, that already passed the. That's already gone. But what we do have is at 36 on gold. Let me see if I'm sharing that with you guys. Yes, I am. That's the daily ATR. So I know gold is very bullish and might perfectly fine continue to go higher. But as soon as we start getting above 100% ATR, you should, if you're going to be in this trade only for today, you start considering how much more can it go, right? Because yes, it can go 120, 130, even 140 or 50, but those days typically come when there is something big happening, like NFP, rate cut decisions, or not rate cut, interest rate decisions. But today we don't have any news, any other than that CAD news that I just mentioned, that CPI. So is today, that's the question, is today going to be a day that is going to go much further than 100%? I'm not so sure.
Oh, look at your AD. Holy macaroni, it's breaking down. That is a beautiful reaction to that level. Exactly.
There you go.
You wanna show your screen for that?
Nope, I'm not gonna jinx it. No way. Keeping it private.
In any case, it is the daily ATR has already been hit, D1 ATR. So that means that everyone who is long gold should at least consider perhaps how long more they want to be holding this trade. I know it can continue, but just a precautionary advice. Consider that it already reached 100%.
I watched a trader do that once on YouTube, Victor. All he did was he was just showing an example like that. He went for all the trades. If it was above whatever 85% of the ATR, he just sold, and if it was below, he bought. That's all he did, just as an example, which is what you're saying now.
And that's actually a good strategy. I mean, it works, and it's very logical as well.
As a starting point, yeah, it makes sense, doesn't it? If the normal is 100 pips and it's at 85 pips, why not just start selling? It makes sense, but yeah, it's exactly what Victor's saying now.
It's the basis
on
of
average,
reversion.
But it's on average, remember, isn't it? So yeah.
It's the thing is, there's so much power in the average. We tend to focus on individual cases, and yes, on individual cases can go more than 100. But on average, it's not going to. That's the power of the average. On average, it's still going to be within a certain
I guess the
range.
clue's in the name, isn't it? Average 2 range. Average.
Of course, yes. Yeah, that's exactly right. So but it's I think that's actually not a bad idea at all for a strategy. Just look at the ATR, and once it reaches some level you think is a it's almost 100 or 100 or over 100, you can start going the other way.
Looking to sell,
more often than not, you will be just fine. It will correct either. And the beautiful thing is, when you're using this for the daily, you actually have a time stop for your trade, which is the end of the day, which is very comfortable for a day trader, because it's going to work or not, but you're going to find out at the end of the day. It has a automatic stop to that trade, which is tomorrow you can start afresh and do it all over again. But it's a
good base idea. And now imagine if you add your order blocks on top of that, layer it up, and then add something else on, like an M15 blanket structure on the short, layer the free. You've got yourself a trade plan within minutes.
Exactly.
So go
You're
back
talking my language.
Yeah, exactly.
if you have just a daily ATR already puts things in your, just knowing what direction you want to be in, right? Without having price action, without having anything else, indicators, just by knowing that, okay, from here, the likelihood of it continuing are becoming increasingly slimmer.
Less and less, yeah.
Exactly. That already has so much
edge in your favor. Yeah.
Exactly. And even if it's 60%, That's edge. That's a lot of edge if you can capitalize it, and without even saying or without including or overlaying other things, other concepts that could increase even further, like you said, like quasis and order blocks and things like that.
That's it. Just to layer it up. Because say if your ATR gives you, I don't know, 40% edge, and then you add your order blocks, adds another 20 onto that, and then you add break instruction on M15, adds another 10, you're at 60% I think advantage straight away, aren't you? Just by doing something like that.
Exactly.
Okay, I closed. Sorry, I closed the Euro 80 short here. It's doesn't look like it's, but it's that was good as a 4% win on that one. So that was a good. It's a big trade. It says I believe it's a 6R win on that one. So now
it
all
might
I
come
need
back
to
down,
do,
but it's got a long way to go up before it does come back down. So it would be risky for you to.
So all I need for gold is just to just a one small breakout on the 1 minute here, and I'm good to go on that one.
What level do you need gold to go up to now to pass?
I'm not sure exactly, but I think it's between 30.40 and 30.41.
30.40. Okay, 30.40 is not far away. You haven't got far to go to there.
Right, so it looks like it's potentially breaking out. I'm getting ready to close it here. Happens. Let me. I'm gonna pull up my screen. No, I didn't close gold. I closed Euro AD.
Yeah.
So you can see here.
I know it's late for you, but I'm doing. I was doing in the background my top-down analysis on that trade or that position you just closed.
Oh, Euro AD.
Yes.
You're going to tell him it's going to go short now.
So all I need really is for gold to break out here. You see that I'm $60 from passing, and I need to kind of do the calculation of 200 now. 200 plus 50. So the profit target needs to be 200 around. I could be a little bit lower actually. Could be around that level. I'm trying to do the calculations, and then I want to make sure that I add some also for potential to make sure that I'm actually ending up in profit. Okay.
Henry says drag the line. It's in a bit of a consolidation area at the moment, gold, isn't it? On the 5 minute.
Yeah.
You want it to break above that.
Yeah, but if it breaks below this level, then
Are you going to close it?
Most likely, yeah. If it closes below on the 1 minute, then yeah, I will have to close it.
You can always pass your evaluation tomorrow or later today.
Yeah, I definitely feel like emotions are getting the better of me here. Like I want to pass it now, you know.
Yeah.
But
I had one last week, no, the week before last. It was a half an hour. That's all I needed. It was a smaller finger account. I need half an hour, $25. That was it. And of course, that trade lost, and the next one lost, and then I needed $100 some. It's infuriating.
Yeah, well, if this doesn't work out, then I'm gonna have to take a break rest of the day because I absolutely feel like I could very easily start revenge trading here and end up losing quite a lot.
But it's good that you know that you know yourself.
Exactly.
You know to get out and just relax for the day. Whereas a lot of people won't. They'll just one more trade, one more, and then you're 50 down, then you're 100 down.
Yeah, I could easily give it all back.
Yeah, Chris could.
All right.
Have you pulled your stop below that level so it automatically closes you, or are you relying on your?
No, I'm gonna have to manually close it because it might just be a wick, you know.
Yeah, that's true. That's true. That would be annoying if it wicked you out and then ran up, wouldn't it?
Yeah. Well, looking at this, I really do feel like it wants to break out. The momentum is still here, even though we have consolidation. I feel like the momentum is still here, and I wouldn't be surprised to see a wick below this level before moving higher. But it does look very good.
It's just kind of ranging a bit, isn't it? But it's got to break one way or another.
But it's still showing us. Yeah, but it's still showing us bullish price structure. Yeah, 1 minute now.
I'm looking on the M5 for you. So
this is a good question. Do you ever do set and forget trades to reduce emotional impact? Yeah, in a sense, I kind of do that when swing trading, but when I'm day trading or when I'm scalping, there's so much things that can happen that I feel like I kind of need to be there managing the trade to make sure that I follow volatility, because when I'm swing trading, it's based on daily candles, and I can take one decision. Okay, I gotta stop talking. Gotta break out.
It's going up. It's going up.
Yep. Looks like it's gonna break out.
What is the level it needs to get to for your passing the challenge?
Well, I'm trying to figure it out here. The profit for this one is 273. I'm currently at around 200, which means it would add. So yeah, I think it doesn't even have to come up and test that level. Now it's only $30, $40.
Like Henry said, you can just drag your TP level.
Okay, so
drag it to 260. Drag it to so that the position is around 260.
See, it shows the cash level when you drag it. So you just
drag. So I drag it from here and then to 260.
Yes,
no,
260 profit.
Oh, you haven't set your TP above, yeah.
No, my TP is there. Well, I need to take my profit target minus my balance, right?
Yeah. What you the best day, if you want to do very precise, you don't have to, but is take a screenshot and then you can calculate it, because in the meantime it keeps moving. But if you can drag the TP line you have at
260.
Keep dragging
so it's going to be 260. It's going to be like
set it a bit higher from when you want, in case it wicks and takes you out. Then at least if you're not noticing.
Okay, so that's if it hits that TP, then I'll pass the challenge.
There you go. That's better, because you might get a spike that you don't notice, or you turn away. So at least you're set now, aren't you? So. And I
like Trader Lawrence. Have you used MT5 before? Yeah, only 8 years. Yeah.
It's never too late to learn new things. As that proves.
I'm not sweating. I'm actually not too affected by this. I know that, I was at break even yesterday. So we're talking about 8% profit today. So I'm,
and how did you get really that? What's the secret? What's the secret sauce for that performance?
The secret is just follow your initial idea of what you think price wants to do. So as soon as you see price moving and you get a hint of what you think price might be doing, you follow that. Because all of those hints is based on intuition, right? And that intuition is based on 8 years of experience with technical analysis. So if I see price action and I think that, okay, it looks like price wants to break out, I'm going to buy that breakout. Because if I think it looks like it's going to break out, that's based on everything I know in technical analysis. And that's the intuitive part of me telling me that you know this without having to logically think through the decisions. And the more I think, the less money I make, basically, when trading this way.
It's the years of looking at the chart, isn't it? Because it's almost subconscious to you.
Yeah,
it's second nature, right?
You can look at price action and think that's coming against me, I'm going to close it. But try and explain to someone why you think that is a lot harder.
Yeah.
How did it go with Alex's position in EG? Did he hold it?
EG?
No, he closed it. He was. Who is long on EG?
Yeah.
No.
Oh,
But
that's a good bounce.
It is. That's why I ask. It bounced right on that 15-minute order block, which was, I think, I don't know if Alex actually used or saw that order block, but I think it doesn't matter. I think he did see a demand zone there, and it did exactly what it's supposed to do, which is bounce off of it. So we have.
Yeah, what do we do when it's an all-time high? Do we use psychological levels as targets? That's a good
What
question.
you can do is you can use Fibonacci extensions. I think those are quite good. I think Fibonacci extensions are basically the only thing that I have found reliable for all-time high targets. And then of course the ATR. The ATR is constant throughout a market. So I think Fib extensions if you want like a tool, and then ATR if you want like mathematical calculations on price action.
I always struggle if it's an all-time high, like gold's high now, where to set the TP. It's a tricky one. If you go to daily and weekly, you can often go back a couple of years and see levels and draw a line on, because rarely an all-time high. It's just a most recent all-time high. But yeah, it's definitely a tricky situation. I tend to stay out of them when they're on all-time highs.
We get the US market is opening now, right?
Stock markets, yeah. Stock market in less than a minute.
And in case of gold, it doesn't matter how back you go in history. This is all-time high, actually all-time high. I mean,
is it all-time high? Is it?
It is. Even if you go to, we didn't have. But I mean, not all-time high, as in you got to.
No, that's what I mean. Like all-time high is only all-time high this year or the last couple of years normally.
Exactly. But if you go back, I mean, it doesn't matter how much you go. There isn't anything higher, so it's very difficult, I think.
Yeah, I agree.
We don't have any price charts in the times of the pharaohs, but so we can act upon it.
Yeah, I'll sometimes just set a TP 2 hour above and then sort of trail up behind it because you don't know where it's going.
All right, it's breaking out. Here we go. Okay, we got yeah, this looks really good. We got the momentum coming in.
Put it on 1 minute. Zoom in as it hits your TP.
Yeah, this is the 1 minute.
Zoom in more. We want to see the action. Every tick.
Looks more impressive. Okay. What level is your TP at?
I can't zoom in more than this.
What level is
that? My level is at it's 30, 39, 93. Okay, well we got volatility coming in here. We're breaking into new all-time highs. We have good invalidation levels below. I feel like if this 1 minute candle is going to close like above this level, then we're good to go. But we have a strong candle here on the US market open, and if we retrace all the way back down, like if this is going to close as a bearish engulfing candle, I would be slightly worried. Oh, okay, that's not okay. Now this is not looking good.
Let's go through all the emotions every trade goes when the market is trying to break out, and you're there waiting for that breakout.
Yeah, you should never go down time frames. By the way, everyone needs to go up time frames. Otherwise, it's more stressful.
Yeah, but it's more fun. It's more fun to look at.
More fun, yeah. If you entered on 5 minute, you watch on 15. If you entered on 15, you watch on an hour or half an hour. You don't go from 15 to 1 generally.
Sometimes
it's more fun to watch.
Now, Jonatan, now is the moment you want to go to the seconds.
Yeah, exactly.
You got 30 seconds. It might look better on 30
I don't know
seconds.
if we...
Emotion all over.
No, I think this is all right. I mean, my plan is to close it if it gets below this level, and then I just need one or two good trades tomorrow, which shouldn't be a problem.
What will you need tomorrow then? About 90 quid or something if it goes that level, something like that. Nothing too bad.
No. I mean, this is what it is, you know. This is what trading is all about. We take risks, and as long as you know what you're risking, then you shouldn't be too emotionally
I feel like I'm
affected.
in this trade with you now. We've looked at it so much. I feel like I'm in the trade with you. Don't you?
I do too.
I've got nothing on it at all.
We're invested, Stephen. We're invested.
We are,
in this
yeah. We're gonna be
so now we're
at
the invalidation point here, and the 1 minute candle is closing in 1 minute.
You got 45 seconds for the 5 minute candle to close.
Right, so it's the 5 minute candle as well. So it's the 1 minute and the 5 minute, which
I'd wait 34 seconds, see what the 5 minute candle closes at.
Yeah. So there's obviously selling pressure here. There's momentum to the downside, but the structure is unchanged. The structure is somewhat unchanged on the 1 minute. We do have a broadening pattern here with bullish characteristics. So I do think
just be a little pullback.
So the broadening pattern that I'm speaking of is this. It is a broadening pattern, though not, but you do have like this sort of, so.
Yeah, it's an ascending wedge, do you call that? I'm not sure, yeah. There you go, that's the next move, yeah.
No, this is a broadening pattern. Okay, now we're breaking down. So we got the 5 minute, did close, but it did not close on the level. So now we have to wait, and I have to close this. There's a lot of momentum here to the downside.
Yeah.
I got 30 seconds to perhaps save this. Okay, there's a lot of fighting going on here between the buyers and sellers. A lot of
tug of war.
Yeah.
I think that's when
the volatility coming in here.
Opened 5 minutes ago.
Mm-hmm.
It might just be the initial.
Apparently, Trump said something like a couple of minutes ago. He said that the Trump team explored a simplified plan for reciprocal tariffs. Okay, I'm not going to close it yet. I'm going to give it one more 1 minute candle, because now there's definitely some bullish strength coming in here.
It's rejected off a 20 EMA on the 5 minute candle.
Yeah, I'm not comfortable. I'm not comfortable closing when the trend is still valid. I feel like. I mean, it's true that the one.
I can't see your chart. Trump is in the way.
All right. I mean, it is true. Yeah, Jonatan doing the storytelling we all do when we're in a trade. Yeah, I like that.
So talk yourself into it or out of it.
Yeah. Okay, I'm gonna close it now. That's it. All right, I am out. I need to make $125 next to make it back. But as you can see here, this week we are up $200, and only today. No, this is actually today. So I am up $200 today, which means that's 4%, right? So that's 4% on the day. I cannot be anything else than very happy about that.
What are you risking per trade, Jonathan? How much are you risking per trade?
That's a good question. So, well, it depends on the setup, but I usually start building position with quarter of a risk. But then if I see like for example, a breakout on gold into new all-time highs with momentum, I'm gonna go in with like all of my available profits on the account, like 2%, because then I see if it's like really high probability a breakout, I go in with a wide stop loss and very high risk. But then as soon as I see anything, any type of price movement against me, I'll close the trade. Because on gold, I mean, if you go to the daily on gold, you can see that sometimes you get these breakouts, right? And you get a breakout like this, and maybe that's a bad example, but yeah, so this breakout here, that breakout here, I mean, this is a breakout that I don't even, it's not even retested. Yeah, it's just one big momentum. So going in with large risk on that one, and then just continue with the momentum, and then closing the trade as soon as you see consolidation, is
okay. So you vary your risk per trade depending on the current price action.
On this account, because I'm trying to. So this is the smallest high stakes account, and the plan here is to, push risk to the limit without losing the account.
Got to run them a bit hotter. Got to run them hotter on the smaller accounts, I think.
Yeah, and look at that. It's a good close. I mean,
good job you got out. Yeah.
Yeah, and now we could potentially see a new long opportunity if we do have a bottom structure here.
Let me
show my chart.
London high.
Let me show you my chart where where the ATR how market reacted to that ATR. It seemed like it wanted to break out of it, but in the end it didn't.
Was that the one ATR up there, was it?
I beg your pardon?
That was the one ATR at that level there.
Yes, 100, yes. It doesn't happen all the time, but more often than not, and that's good enough. That's actually very good already.
It did a liquidity sweep on the ATR.
Yes, it did.
Wow, that was a big move on gold now.
Imagine if you held it, what kind of pain you would be feeling, or regret, or how do you call this? This is not FOMO. This is not the fear of not having, not the fear, but the regret of not having closed the profits. How do you call that?
Yeah. I get that most days.
I guess you're missing out.
My day trade.
But honestly, I
finished on 100. It's like, what?
It's FOMO not on the entry, but FOMO on the exit.
Yeah.
I guess because you're missing out.
Yeah.
You look back afterwards. And you ran for 2 hours or something.
I must say though, like there's really no emotion attached to this. I could easily have seen my trade go all the way back down to entry, and because I honestly, like for the last few months, I've been very deep into studying Stoicism, and I'm sure you know about Stoicism, and it's really helped me. Like there's some practical things that I do mentally, like ask myself questions and then try to look at situations like where I do feel like emotions might take control. I do look at it from a like an unbiased perspective. And there's one really good exercise that you should approach every situation like you've done it 1,000 times. So, for example, imagine a doctor cutting someone open and just panicking, like there's blood everywhere. So you gotta think that every situation you're in, you gotta react to that situation, not in a emotionless way, but in a way where you've seen that situation 1,000 times before. And I've seen this 1,000 times before. I know this, like there shouldn't be any difference if I'm in a position or not, because these candles means nothing. Price moves up and down, and there's no emotions attached to these candles. This is candles. This is price data. So the more I think about that, and the more I let go of all emotions that are not based on rational thought, the trading just becomes such a walk in the park. If I'm going to be honest, it becomes easy, effortless.
But that's only
Exactly.
from
And
years of experience of looking at it.
and sort of add to that, doing this on a 5K account is very, very good learning experience. Because I really do not care about the account, you know.
Yeah, I find that on the smaller accounts.
Yeah.
Yeah.
It's like my son. He's just running around all day saying like, you don't care, you don't care.
Victor, Astro was asking if you could briefly explain what the ATR means for him.
Sure. The ATR, it
mind.
means the average true range, and it takes the range, meaning it takes the high, the day, well, actually not a day, because the ATR isn't fixed on just the daily time frame. It's on every time frame you can do that. What it takes is the last couple of candles, that number, I say less few, that number you decide in the input of the indicator, but it takes the high and the low, and it subtracts, right, the high from the low, you get the range. That is
Divided by the
range.
number of days or candles, yeah.
Exactly, and that's the range. But I think the ATR has a different calculation that is slightly different, but it doesn't matter. In the end, it's basically the range that you're looking at. So when you have an indicator, let's say on the daily time frame, that is telling you, let's say on my chart, for example, EU. Doesn't matter what it's doing right now. If you look at the lower bottom of my chart, I will double click it. You will see the ATR right here. Oh, I need to take that off so you can see it, right? You see there's that indicator right here on the lower bottom. Yes, it is visible. And you can see how the not the graph, but the number, the value after that ATR, 3 letters. You can see that right now it's at 79 pips, 0.3. What that means is that given the input that I had, that is the average range that the market has been doing for the last couple of days. The number, whatever number you put in the input. I think I have it right now at 5, if I'm not mistaken. So if it is 5, the last couple of 5 days, the market has been doing 79 pips.
Last 5 days, divide by 5, get the average.
Exactly.
That's about right for euro dollar. Euro dollar is about 70 odd, and then pound dollar is nearer 100, isn't it?
Pound dollar is close to is right now at 760, and euro AUD is at 127. But so it's important because on average, this is what you can expect, unless the market changes completely. That does happen. The market does shift period. Like right now it's at 79, and it a couple of months in the future it might be at 100, or it could be at 50. It does change, but it takes time to change. And in the meantime, it's not going to go there from one day to the other. It can, like the average doesn't go there. It can day from one day to the other. Let's say tomorrow assuming we have something like NFP or interest rate decision, tomorrow the range can be much, much wider, but the average doesn't change on a dime, right? And we take advantage of that, because it means that whenever, and the other thing is, if to think of the ATR as what a normal day, a typical day would do, right? And as long as there isn't anything out of the ordinary, NFP, interest rate, are not typical days, so you shouldn't use them for those days. But on a regular day where there isn't any huge happening going on, then the market should do roughly that 79 pips in a day. So if you already know the direction the market is going, let's say it's very, very bullish, then you already have a great idea or great guess how far it can go, right? Because you already have the direction, and you also have how much on average is going to run. So combining those two is so powerful. That's the basics of ATR. You can use it in different forms. You can use it for take profit, as I'm saying right now, looking at how far the market can go in any direction.
Or our amazing trading plan we knocked up in 5 seconds before. They can use it in that.
Oh, Guys, I gotta run. Victor, you will. Ashley will come on for the last hour, and
before you go, Jonathan, did you see gold rejected off the London high?
Yeah, I did see gold, but right now there's I do see a lot of momentum, a lot of volatility, but also a lot of indecision here. Could be the low, but I'm also seeing a sign of potentially the top. So I'm gonna stay out of it for the rest of the day.
Yep, good choice. I would.
Yeah, I think so too.
All right, guys, I have to run, and I will gather some energy and I gotta take it very easy tomorrow with the trading. Take it very, very easy to make sure that I don't give it all back. That would be nasty.
Yes, yes, indeed.
All right, guys,
I don't know.
See you all tomorrow.
See you,
See you, Jonathan. See you tomorrow. I don't know if Kana was asked this before I start talking about the ATR. But one of the ways you can use it is you can if you take the daily ATR, you can take the current low and add that ATR on top of it. And that number, that value, in the case of euro dollar, it's $79. So 79 pips are, you take the low of the day and you add 79 and you get a rough idea what it is a typical day, what it's supposed to reach today, if it is going to go
if it's in
higher,
a bullish move. Yeah.
If it is in a bullish move, of course. You don't know that for sure, for certain. But a lot of the times, at a certain moment during the day, you get the point where it's going to go, right? You may not at the beginning of the day, but a certain moment is breaking down. Everything is telling you it's going to go down. It's more likely to be putting the low, not anywhere a higher high. So you can already, as the day progresses, you can and it's very useful for when you're already in the trade, because let's say you got in the trade in the morning, and at the end of, or maybe halfway through the day, you're still wondering, is it going to get to my TP or not? And by that time, you had much more price action information, and you can say perhaps more confidently, see, yes, it is likely to get there or not. So
if you're wondering whether to close your trade and it's 6 o'clock in the evening and it's at 1.1 ATR, then maybe that's more of a reason to close it and take your profits and be happy.
That is exactly right. Yes, that's exactly right. That's perfectly said, and that's actually what I do very often. At the end of the day, at the end of not the day, the whole 24-hour day, I see Ashley's in the background. Give us a thumbs up anytime you are ready to. Oh, I see. There you go. Perfect. Let's have Ashley. Let's welcome Ashley. Hi there, Ashley. How are you doing, man?
Good in yourself, Victor. How are you keeping?
Hello there.
Good.
Hi, Stephen.
Hi, Ashley. Nice to meet you.
Good to meet you too.
We were talking about ATR. The indicator.
Good subject.
And we are actually. Jonatan just was looking almost past the challenge on the stream with gold. That's what
right.
we were. Yeah, that's where we were doing. We were saying so. As I was to finishing off on the ATR, that's exactly what I do at the end of the day. Not maybe the midnight. I don't wait till midnight, but at the end of London, basically, what I do is how much more can I expect, reasonably speaking, considering everything that has passed during the day and the ATR that is still left. How much more can I expect reasonably from price action? And a lot of the time, the ATR is telling me that this is as good as you are gonna get with high certainty. You have this in your hand. Go ahead and take the trade-off. Take your profit. It may go another maybe 10 pips, another 5 pips, but is it worth it? And usually, it's not. Right? It's you got the biggest chunk of the move. Be content with it and walk away. And that's proven to be a very sensible rule and to apply in my trading.
I'd agree. Walking away with 90% profits is better than walking away with minus 100. Definitely on any trade.
Yeah, that's exactly true. Yeah, sometimes those extra pips
They will kill you.
They will kill you. Yes, because it's the evolving R, right? How much are you risking to get those 5 or 10 or 15 pips? Are you risking maybe 30 pips?
You
Does
might
it
be
still make
risking
sense?
your 600 profit plus your 600 stop loss. You're now risking $1,200 for 5 pips.
Exactly.
You know?
Exactly. It's something to think about.
But it's a fine line as well, though. Closing your trade too early can also be risky. So it is a fine line, but something to bear in mind.
Yes. Ashley, so what are you looking at in the market today? What setups?
Perfect. Sorry, Victor. Yes, there's plenty. Sorry, I didn't mean to disturb you. I was just wanting to add some insight with what Stephen was saying. It's always a good thing to get balance, and that's a nice thing with the ATR because it expands and contracts as the market becomes more volatile. It expands and contracts as it becomes less volatile. So personally, I use it for my stop loss distance. And then also I'm able to then adjust it adding a multiple to it. So it's a very useful indicator indeed. And then you can adjust for the volatility of the market at any point in time and it automatically adjusts. So that's the nice thing about it.
If you've got your ATR over the last 5 days, it'll adjust based on the last 5 days. If there's been a lot of movement over the last 5 days, your ATR gets bigger. So like Ashley says, it auto adjusts over what time period you've set the ATR to be averaged over. Whether it's 5, 10,
Correct.
14 days.
Correct.
Yeah.
That's correct indeed. And I use that as well all the time for as much as I can for my take profits. You said you use it for your stop loss, right, Ashley?
That's right. I use the ATR. Depending on the strategy, I can adjust the period, but the default is 14. And then I use that to determine the stop loss distance. And then I can even further add add a multiple to it. I call it a multiple. So either added by 10%, 1.1 of the ATR, 1.2, etc. So you can adjust it if just in case you might need to give it a bit more room, etc. Depending on the strategy. So it's a very useful tool indeed for traders out there and viewers to start looking at if they haven't done so already.
Yes, yes, indeed. That's actually, in my opinion, it's my favorite indicator, and perhaps it's my only indicator.
No, it's a good one. It's a good one, Victor.
You know, I'm going to have to add the ATR to my charts now. It's going to be your fault.
Are you a convert now, Stephen?
I'm not sure. It doesn't usually affect me much because I'm not in the trades for that long for it to go past an ATR level. So I'm not today.
What is your typical holding time, Stephen?
On these session breaks, it's not long, couple of hours maybe. Not enough time for it to smash through the ATR, but it depends on the setup as well. One knows if I'm doing a support and resistance rejections, like I showed before, those might last 6 hours or whatever, and I'll close them at 6 o'clock in the evening. But the general M15 session breaks, I think they're about 2 hours maybe, maximum, give or take, around about that. So I try and close them before the New York Open, which is a bit annoying at the moment because it's 12:30 instead of 1:30 here in the UK until the UK catches up. So I'll be looking forward to about 2 weeks' time we got left this week and next week, and the New York Open will be 1:30 again in UK here instead of 12:30.
Yeah, 2 weeks. I think it's the 30th that it's we're getting
into the month, isn't it? Yeah, it's better on the winter change because there's only 1 week in between. 1 week discrepancy between the UK and New York on that, but it's 3 weeks discrepancy. It's a little bit annoying, something to get used to.
It is. It is.
And to be aware of as well. To be honest, I didn't even realize this year until someone posted on my little Discord chat. Oh crap, yeah. So even after years of trading, you still need friends to point the obvious out to you.
Yes, indeed. I think it happens to all of us. We forget about. You
I don't live in America. Why would I be looking at that? Every week. So yeah.
Yep.
So it was a good heads up. Yeah.
Yes, indeed. Well, I'm gonna show the trade. Got a sneeze trying to sneak up to me here, but what I'm looking at on EU, for those who are wondering, we are on a weekly time frame. Let me do it quickly. There, we are in a entry order block on the weekly quasi, not on the weekly, on the daily quasi, I should say. Is it on the weekly as well? Yes, it is on the weekly as well. Which is this is I haven't marked it, but the weekly is right here. That's the weekly neckline. And if I go, so we are in an area where we could expect some major shift in market structure, but it hasn't happened yet. And as long as it hasn't happened, there's nothing to do. If we look at the lower time frames, yes, we do have an order block here, but it's not very significant. It's not fresh, and it's not part of a quasi. And the last order block we have on the daily is way below us. So there's nothing on the daily time frame that tells us to get in either side. On the H4, we do have, we are making higher highs, so the structure is still intact. The trend, we are making, the swings are getting higher, so we are in a very strong uptrend. However, we are, and so that's the basis, right? So this market structure hasn't broken down yet, and we're coming back into some area of demand. That's
Look at
the
candle
H4.
straight up and straight down on H4 then. It's
Yes.
almost a train track, isn't it? Look at that. It retraced the whole candle.
Yes, and actually went even lower. So that's you know, stop hunt, some people will call it, right? Liquidity grab.
Yeah, liquidity sweep, stop hunt, whatever. Everyone's got different terms, haven't they?
Yeah, because everyone, you know, looking at the market structure would have logical place would put their stops below this candle, and then it takes everyone out, and maybe, we don't know that yet, maybe change the direction, continue to the upside. But this is the H4, and we have this order block, and price does exactly what it usually does, which is coming back into the same order block that it created. And so I have my reason to go long, at least look for a long from this area. If we go to the H2, I have an outside bar there as well that refines the area, and that's why I have these yellow horizontal lines, and that's in there that I'm going to be looking for that transition long again. So I'm looking for that transition, and on the lower time frames, I'll look at the 5. The 5 isn't ready. The neckline for the 5 is actually much higher. So we don't have a 5-minute quasi yet. We did have a little on the not a 2-minute, just on the 1. We had a reaction of this order block, which is still within that overlapping area from the H2 and the H5. This area, this is the area. Although price did squeeze it by a lot, it is, as long as it is, you know, mounting the reverse of basing using this area, I'm going to be happy to look for an entry. It doesn't mean it's going to necessarily bounce, but if it is bouncing, then it makes sense that it's doing it from this structure. And the area, as you can see, the area that I would be interested in getting in is on the H2 and H1. It's this area, this exact area. It's a slither of an entry of an area, but that little box there, that's what it tells me. And you can have base, because it's so small, you can have a very tiny stop loss, which is very typical for my trades. Have a tiny stop loss, maybe below that order block or below that wick, whichever you want to do. And then, you know, you can target the top of that structure, you know, not even expecting the whole thing to reverse. Or
so how would you enter that, Victor? Would you just do market order when it reaches that, or would you look for a rejection candle or break a switch on lower time frames?
No, you need to wait for confirmation. If you just enter blindly with a limit order, your win rate will be will suffer quite a lot.
Stop loss, yes.
Yeah. That's not the optimal way to do that. I think you need to wait for price action and read it as price action is. As price is getting there, is it switching back to bullish? Is it what candles is it printing? What either outside bars, pin bars, engulfings, whatever it is that you have confidence, you've seen so many times as a good indicator in price action that it will reverse. That's what I use. and then you can target the top of that area, right? Because this is on this time frame, this is what makes sense. That's going to go back and retest, perhaps maybe not the top, at least this word. And this already is as you can see, is a very handsome risk reward ratio. But if you can get a higher time frame confirming there is a reversal, right? You see the 30 minutes, for example, it also has a bullish order block being created. If we can get a close, and that's why I have this candle here in let's say if we have a close, a bullish, we didn't get that on the H1, right? I put the arrow about 5 minutes ago. If we had a very quick push and close above this blue line, we would have engulfing on the 1 hour. Now that's a reason to think, okay, my structure on the 1 minute may actually have longer legs to it, and I can
increase
actually
your TP.
Exactly. By reading price action, you can start thinking, okay, maybe I can expect reasonably that it's gonna go to, because it would be an H. Well, we don't have anything above us, but you in any case you can start thinking about something higher to target. So that's the trade that I wanted to share, and it is
it's interesting because a lot of people trying to short EU and GU and stuff.
Because I understand
so much. So
yeah, I understand that move, and maybe they're right in their own time frame. I don't with this trade, I'm not saying that it's gonna go way higher. At least this is the first target, the most initial target.
I always think if it's too obvious, it's a trap. So the fact everyone wants to short EU and GU because they've run up makes me wary of it going short. So
not necessarily. If I may add, I think it's always good to be humble and go with the market. So, for example, on euro dollar, I'm currently long, and when certain things occur, that long will come out and I'll enter short. So one can move with the market, placing long and short trades. Just be aware: are you going with or against the trend? So I think that's the.
You just got to be cautious,
again,
not to
risk.
assume, not to. You just got to be cautious, not to assume it's going to drop because it's run up.
No, in trading we don't assume. We look at the charts, we look at the movement, and we trade the movement. It's easier said than done, but that's an understanding of trade as the market moves.
Yeah, 100%. I agree.
But nice. Thank you, Victor. That's great analysis on euro dollar.
No problem. Someone in the chat asked us to look at gold. So as you guys were speaking, I took a headshot, not a headshot, an advance on this analysis. So I started looking at on gold, and let's see, we have a reversal. Someone asked if on the 1 minute we have a quasi. That person didn't say actually if it's a bullish or a bearish one, because on the 1 minute you can have many of those on both. You can have it on both sides easily. But if that person Rafiki would let us know if he meant a bullish or a bearish one. Because we had that 100% ATR, I'm going to be looking before. I will have the tendency to look for a bearish one. Rafiki says yes. Rafiki says bearish. Okay, that makes complete sense. The wick though, on the 30-minute, that wick is quite bullish, I would say. So you gotta watch out. But let's see. We have on the H4, we don't have anything yet. That whatever move is too early. You can see how bullish this is. So you gotta watch out if you're gonna go against this. Let's see, on the H1, I don't have anything yet. So based just on scanning those hourly time frame, I already know that you don't want to be selling this. If you don't try more than just once, and maybe even have a quite low risk on it, because there's very little basis for price reversing exactly here. Based on the ATR, yes, but the ATR is just an average. You should take it with a grain of salt. It doesn't mean that from here it's going to reverse necessarily. So on the lower time frame, of course, we can see that 15-minute reversing. We can see this order block being retested right there, and it looks quite bearish on this time frame. So that makes sense. It's also visible. You're gonna see that on multiple time frames on the 13th as well. And if you go lower time frames, why my
you see it
quasi
came
would be
back. It
here.
came back up to Jonathan's level.
It did
After that rejection. That was interesting. Yeah, I saw that.
Yeah, he would have a FOMO on the exit for sure.
yes, he would.
So that's the quasi. To me, that's the neckline, and it did break it. That supports the idea that we might be going lower, coming the rest of the session, perhaps not necessarily all the way, but that opens the door for lower prices. That the fact that it took that neckline down, and if that is a quasi, then we could trace this down and look for order blocks that are in this area, and that's exactly what it did. You see on the 5 minute, right? I didn't show this, of course, beforehand, but that's the structure based on the order block there. It's actually an outside bar, so it should be actually a little bit longer, like so. That is the area that price came back to, and then move out of. So it makes a lot of sense. That is indeed a Rafiki. That is a quasi. I would have, if I were to be trading this, I would be trying to get an entry in the lower time frames in this area, or as it is going out of it. But the classical head and shoulder would have you get into your trade once it takes out that and breaks down on this. Of course, you're going to be targeting something much more lower, but something like that. As it is getting and completes the quasi, because that's the reversal pattern, meaning it is likely to have some kind of follow through afterwards.
And that would take you back down to the London low as well, where you just marked up then as well, because that little wick was the London high that it went into. So that would be taking you back down towards the London low.
There,
which it might well do.
Actually,
yeah, somewhere down there, around about
potentially London PM
3014. Give or take, yeah.
Yep. That makes a lot of sense. Taps out, takes liquidity on the ATR line, as we joked about, but it's actually something.
It's a good example today. Yeah.
It's a very good example, and then turns around, goes the other way.
Yeah,
all
that the way
could
back
be.
down to London low.
If I may suggest as well to Rafiki, from what Victor's mentioned, also as you go down to the lower time frames, I often see traders going down too low in their time frames. So from a daily, don't mistaken or don't forget about, for example, the 1286 before you get into the more popular time frames. So just a suggestion in terms of the concept of moving down to a lower time frame to get additional structure. One doesn't necessarily need to go all the way down, and understanding if you go all the way down to a 5 minute or 15, you're going to see quite a bit of movement, and you just got to understand the relativity from a 15 minute, 5 minute to a daily, that big jump. Okay, so just a suggestion in terms of the technique, but the technique is sound.
Yes, you want to do you got to know what time frame you're actually trading, right? If you're just looking for a reason to get in or short, get in or not, you can get an argument for your case both ways by going different time frames. So you got to stick to what time frame you're going to be listening to, what time frame you're building your case on, what time frame is your execution on. You got to know your time frames, because it's not you can't just mix them up.
You can always find what you want to see, can't you, if you flick through enough time frames.
Exactly, and that's a trap. That's a trap.
You got to be careful. Yeah,
exactly. It is a trap, and if you don't have strict rules, like in my case, I look at top down all the way from the monthly just to get an idea what's happening. But the basis of the setup starts on the H4. If I don't have anything on the H4, I stop looking. To me, it has been very, very helpful, and have kept me from, thinking and opening all kinds of trades lower, to me, inferior setups, because I don't listen. I stop looking, and it's just, you need to impose that rule on yourself, because no one else will. And you got to take care of your own ship as a captain.
You're your own boss.
It is.
Quite correct.
All right, so that's gold.
Quite correct. Yeah.
I don't have a structure on the H1, so it's not something that I would personally trade. But on the lower time frame, there is that reversal pattern. So we'll revisit this in a little short while. It is accelerating.
It's looking good. Isn't it?
It's looking very good in even though it doesn't have the higher time frames. The fact that it took this, let me mark this out. The fact that it took that neckline right here. And this is so typical, and that's why I love
which was the London high as well. So compound everything. That's the London high.
What I love about taking these trades is after it takes this low. Of course, the signal is I want to go lower. That's what price is telling us when it takes out this neckline. However, it doesn't go in a straight line. What does it do first? It actually goes the other way. And that's so typical of price action. And it tricks you thinking it's telling you something, and it's not lying to you completely, but it's not the way you expect it to go. Most of the time, there is a trick in there, in that bag of tricks. And if you don't watch out, you're gonna step into it and be a trap trader.
Yeah, it's a trap. We're back to being a trap.
Just some further insight from what Victor said, and it's an interesting way Victor put it. Another way you can look at it, if you understand structure and specifically Dow theory, is that area that Victor showed, by default, if you understand the structure, it needs to move up to create that lower high. So the lower low has been created, if you're looking at Victor's chart, and that, according to Dow, was your first half signal in terms of a potential trend in inverted commas reversal. So it does need to move up to actually make that lower high for that structure to complete. So it's one can think of it as a trick, but the other thing to also bear in mind is that is the structure of markets. So understand market's going to ebb and flow, and it's where the highs and the lows get made, and the comparison thereof that you get to understand how the market moves.
Yes, well said.
Very good.
Ashley. Yeah. All right,
Perfect.
so we can. All right, so let's look at EU. Or is there any someone asking dollar yen? Are you guys trading or looking at anything at dollar yen?
No, it's not one.
I currently have a long on dollar yen.
Okay. What time frame are you looking for that long? Because you're on the higher time frames, from what I remember, right?
Well, yes, I have a multi-strategy, and my core strategy is basically on the higher time frames as a swing strategy. So currently, right now, I'm on long on dollar yen. I'm doing a counter trend trade, but I'm long.
Okay, let me see.
Mm.
I'm gonna do it very quickly.
I didn't have a chance earlier just to say hello to the audience as well as I came in. So for those messages, and I apologies I didn't respond or mention, but hello to everyone. Thank you very much.
All right, so we are very technical in terms of on the monthly time frame. You can see how it creates those order blocks, comes back to them, creates it, and is going back to them. Very often, I like when I see this on the market, because it tells me that the market is listening, or the traders are watching these structures as well. On if you go lower, we do have a weekly here, which is bearish within a bullish monthly. So you got to watch out. You have mixing directions in terms of the price action, but it's clearly below that order block. This is a monthly, which is still valid. Yes, it's still valid, but it looks kind of weak right now. Especially with the creation of a weekly order block, a bearish one within that bullish monthly. So I think this is likely to not hold very long. Also, we have another one. If price is leaving this order block and breaking it, it makes sense, because we have another one to stop price. So that may not be the destination, if you will, of what price action wants to achieve. So we have on a weekly time frame a bearish one. You said you're long, Ashley, right?
Correct. I'm long on dollar yen.
Okay. So we have a bearish order block there. There's another one there, but I'm not going to be marking all of them. And what do we see? Well, this is the daily time frame, of course, and there is a quasi on the daily as well, bullish quasi, but it hasn't been activated yet, so it's nothing. Other than that, I don't see anything. On the bullish side, we did have this structure which hasn't been mitigated yet. Let me see what else. That's it. There is this is nothing. Let me see how much. Let me mark this. We have 5, 6, 7, 8. It's not my kind of. It's not as fresh anymore, so I wouldn't be wanting to trade that trade. To me, it's not fresh enough, and by fresh I mean the number of candles that has been created after the order block has been shown to us. But it is there, so we can expect some sellers coming in to the market because of that structure. Not something I want to be trading. It's not a basis of a signal for me, but it's still tradable. So all right. So what else do we see? Of course, we also have a quasi here on the lower time frames. Break of structure, and it already reached its target, which is this, right? So it already hit target. That would have been the initial TP, and you get in with this order block. Let me see if it is an order block. It is, yes. So you'd be getting in. This is the 4 hourly. You'd be getting in this order block. Let me get this straight, and it did very nicely as a trade. It's not something, as I said. Let me make this a little smaller. This would have been the entry order block, right? You get in long from this area, put your stop below it, and target the high of that structure. Very simple, but very effective. All right, so that's it on H4. What else? So this target has been hit, so it's not relevant anymore. What else do we see? This is dollar yen. That's it. I don't see anything. This order block is still valid if price were to come back, but I'll need more structures to be broken here, so it creates a even bigger quasi before I'm able to trade from this lower entry order block.
Just some further insight from the daily time frame. Dollar yen is in a falling trend. We're in a counter phase right now. That falling trend is intact. Right now, I'm long from a couple of days back, and as the structure changes, then I will start be looking at going short, closing that long, going short. So that just gives some further insight in terms of dollar yen's analysis.
I see. That's good. Let me see. Okay, let me close that. So so that's what I see on dollar yen. I could go lower, but it doesn't make a lot of sense to me because I need, as I said, if I want to go short, I want to see that close before I start looking for a short. If the H4 is not opening the door, it doesn't tell me that there is something, it doesn't confirm. I don't want to go lower time frame because it's going to be noise. You're going to see all kinds of reversal patterns that may or may not work. But if you follow the H4, you're on, you're standing on giants, so to speak, on the intraday trades. And I want to be doing that. I want to be standing on giants if I'm going to be going to the battle, basically. So so I don't have any reason to go lower time frames. But if you want me to, let's go to the 15 to see if we have any break of structure. And yes, we do. We could that this could be the beginning of a push further down. If I were to be trading this, I would be considering this as the head, and that would be the left shoulder, this whole complex, but this is the highest point. So this is the head to me, and I would be entering if price were to come back. It doesn't seem like I want to, but hold on. I would be entering something if it comes back to this structure. But as I said, this is not very attractive to me because the hourlies haven't changed yet. So if price were to come back, then I would be entering. I could, fancy a short from that structure and then targeting something that makes sense on the higher time frames, on the hourlies, maybe on the 1 hour below us. But that's it. That's on UJ, that is. Okay.
Thank you, Victor.
Actually, we I didn't see something. Now I have a reason to go short. Oh, I like this. Now I do have a reason to go short. Look at this quasi. Oh, I like this. Look at this quasi. It breaks down, and we're coming back to one entry order block on the. Ooh, I like this. So this is there is another entry order block above us, but that one doesn't have that alignment from the daily time frame. So that makes this one now that I do have the 4 hourly. Now I have permission to go to the H2 and look for reasons. We could have been looking and using that order block already, because that H4 was from the left. This is the H2, and we go to 1. Yeah, this looks very. So that means that you could have been looking, if you were looking from the whole day, you could have been looking for an entry in this candlestick combination, right? Because that's the retest of the H2, right? That's the H. This is the order block on the H2, and these two candles were. Ooh, that would have been a very nice one. Too bad I wasn't looking. Let me see. So if you were to enter, you would be trading this, and it didn't trigger. It didn't trigger in the 5 minute. No, there wasn't anything here. This would have been my trigger to get in. One of my triggers, right? That area, and it squeezed it. So that didn't trigger. So it didn't trigger me to get in. And by the time it did trigger, or you did get that reaction from the market, it had already been invalidated. So that happens often, but that's fine. Let me see on the different time frames if you had any structure. Not really. Actually, on the 1 minute, you could have been. That would be my entry. If I were to be stalking this setup, we would be. This would be the entry.
See, you can always find something. See.
This would be the upper order block for the entry. And it never reached it, but it did. So the trick would be to get the read price action to look for the reversal in here, either a candlestick combination. You could be looking for engulfings, outside bars, that pin bar, that engulfing, or I even see an outside. You had so many reasons to get in. Let me show you this. What is the question? This is very helpful, because I always say you want to see confirmation in order and price action before you get into the entry order block. What do we see here? After the market touches the order block, we see an engulfing. We see another engulfing here, which is also an outside bar. We actually see a pin bar and an engulfing. So you have multiple signs that the market is telling you, I want to go down. I want to go down. Not once, not twice, but 3 times. And in this whole area, let's see, did we get a sign that price wants to go up? Yes, we did find a bullish order block. So you get one sign, one bullish sign, and 3 bearish ones. Isn't that a clear message? It wants to go down. So based on that, just reading using order blocks, you could have seen that it is shifting to going down. And once it starts going down, you can just hop in and take the ride down, target, put your stop above that once, and go ahead and target the whole thing, because the whole structure, the initial will be here, and if you have more reasons, you could be targeting much less. And that's a very simple way of just reading price action and using it in your favor. But very good one. I don't know who it was, but thank you. I think it was Bilawal.
Correct.
All right,
Victor, if I may add to what you said there, and it's a very good point that you made. But just for the audience to understand as well, wait for those structures to break, i.e. the high going higher or the low going lower. So even though the market's painting this particular patterns of the candles, wait for always that understanding that the structure is only complete when it starts breaking. So, etc. If you enter, or if you would like to enter before, I call it an anticipatory trade, which is also okay to do. There's no harm in that. Just be aware of what type of order you execute, anticipatory or confirmation. So just be aware in terms of your own trading regimen and strategy.
Yes, I think it's a fair point. You can see that there is a market went kind of sideways for a little bit, and that's exactly what Ashley is referring to. To don't get chopped up by market structure because there's one candlestick pattern that showed up. The market is constantly creating all kinds of candlesticks. You got to read, you got to have an overview, a bird's eye view, what's happening, not just on one or two candle, but overall, see, is the structure being broken? Are we getting out of the range like we did here? And if we are, that's a very good sign that we're breaking down and we're likely to be going lower. And obviously, you don't want to have your stop something like this, but you want to put it beyond the structure that actually made you want to be in the trade, which is this order block on the quasi. So a very nice one, and this is on the 1 minute, so you can. You can see how, and this would be a very safe, not high risk trade, in the sense that it's not likely, once it breaks this, it's not likely to easily. It can, of course, it's a 1 minute. It can go up and take you out, but it's not going to happen just like that, right? If you were to just enter on just the candlestick and put it beyond the candlestick, that to me would be very high risk, because with nothing, it can, just with the noise of the market, it can tap you out and actually still go in the direction you want it, but you will be left out with that move.
Yeah, I'd like to see the breaker structure and a pullback entry. I bet if you could probably put a fib on that initial push down and get in on the 50% retrace as well.
You mean in here?
Yeah, where your yellow arrows pointing to it, you could probably put a fib on that whole red section. Down to the bottom of that red section there, where your yellow arrow is pointing, and get in around about there on the 50 pullback.
Okay.
So then you've got your breaker structure and a pullback entry as well.
I see. So exactly. You mean something
on that red move down, that whole red move down, yeah.
Something like this. As it breaks out, you get in on the. Oh, you mean this one?
Yeah, yeah.
Okay,
yeah. So
okay.
a fib on that whole red down. I don't know if it's 50 or thereabouts. There you go. Where's that?
Probably closer to a third, just over a third, but yeah, closer to 50%.
So it didn't work out that time, but often it will. So then you've got the breaker structure confirmation and the 50 or whatever pullback on your fib to enter on.
There's so many ways to approach things, and either
that's what I did on my EJ trade before against Alex. I entered on the 50 pullback on the fib on the short after breaker structure.
That was today, you meant?
That was today, yeah. When he was long and I was short, yeah.
Nice. Yeah, it's there are many ways. The importance is to have a consistent approach. Doesn't matter if you use that retrace before you get after a break of structure or break with this range, or whatever you do. It doesn't matter as long as you have something.
Well, like
you
Ashley says, as
apply.
long as you know what reason you're entering. Like Ashley said, you're entering on a, what did you call it, Ashley? A pre-entry or something. As long as you know anticipation entries, as long as you know which one you're doing and why, then you're okay. And consistency, like you said. Yeah.
Indeed.
Or even half and half.
Indeed.
All right. So what are we looking at? And EU has taken out, or not taken out, has been reversing very nicely the entry. Let's see if we have some indication that this is going to go much higher. Remember, Stephen, we were saying if we have something on the H1 or maybe the 30 minutes telling us that it's shifting as well, then we can target something higher. How high is difficult to know, but we could certainly try to.
Yeah,
and
I like the previous day highs and levels like that, places it's been before as targets. Depending on the trade.
In this case, today's high would be the high. Do you use same day's high?
Previous day high. So previous day high 1093.
Oh, you mean like that? Okay.
Yeah. I tend to use those as targets and stuff, or initial targets at least. But I don't think we'd have much room to go to the previous day high. It's like 13 pips from here, 20 pips.
Yeah,
13
something like
pips
that.
away. Yeah. Not a lot of space once you put a stop loss in there. So
You're talking about euro dollar on your previous. We've gone above yesterday's high currently.
Yeah, we have.
So yeah, if you're talking about maybe tomorrow and today's high.
Yeah, so tomorrow up to today's high might be better. But yeah, we've already gone past the previous day high, and we by quite a lot today. In fact, we went past the previous week high as well.
Did we?
Good possibility. Indeed.
We've already gone
Yes, we
past
did.
that, come back.
Yeah.
So you could call that a liquidity sweep of the previous week high if you want, depending on what words you want to use. And it formed a nice M pattern as well, and then a break in the neckline to the short. There's so many things you could do.
On what time frame is that? Because what I see on my screen is it's not an M.
Sorry.
It's not an M. It's a W from the weekly time frame.
See, just to go to a different time frame till you find what you want. Find what you want to see. If you go to M15, there you go, M15. There's a nice little M there.
Okay.
And that M was just above the previous week high. So that was the previous week's high. Broke the previous week's high of an M and broke to the short. If that's what you trade.
Yes, I understand that. All right, good. What do you guys think on this trade? Is it going much higher from this point?
From the current analysis, in my opinion, it appears that, with euro dollar, if we just take a brief pause and understand context, on the daily time frame, it's in a rising trend. It's in progress phase and it is intact. So until that situation changes like inertia, there's more likely chance for it to continue to head higher. But if you have starting to have structural breakdown on certain of the not too lower time frames, we could be then seeing a change of phase from progress phase into counter. So currently I'm long, and that long trade is working nicely in my favor up until it changes, and then I'll exit at whatever potential result, and then it will enter short as well to go against the trend. So currently I'm trading with the trend. But to answer your question, I think so far until the structure changes, anyone's guess. So wait for the structure to change.
I'm unsure on EU and GU and stuff at the moment, so I'm staying out of them. But
really,
yes,
you're short EU and GU.
No, I'm staying out of them.
You're staying out. Okay.
I said I'm unsure. No, I'm
unsure, not sure.
Unsure, so I'm staying out.
Okay.
Oh, you're not sure?
Not 100%. No, not sure. So I'm staying out of them for now. I don't need them.
Understood.
I got
it's okay if you're not sure. Rather stay out. It's always a good.
If in
always
doubt,
a good thing.
stay out. Exactly. If in doubt, stay out.
Indeed.
I'd say it's more bullish and bearish still at the moment until it shows any reason to be going down. But
yeah, and I like how the in case of GU, and I think maybe I don't think it is on EU as well. Did it? Let me check. No.
Cable dollar is a very similar mirror image to euro dollar. So the structure right now, they're potentially correlating very well at the moment. So it's very similar, not identical, but similar.
Yeah.
What, EU and GU?
Yep.
Yeah, they've been falling out of friends a little bit recently, but they're back in track with each other, aren't they? Today. They must have made up.
And what I do like about the price action is look at that wick, how it reacts to that daily order block, because of course that shaded area is that daily structure. So it makes a lot of sense that it's changing direction after reaching this point, right? That tells me something, that maybe it reached, that was what it wanted to reach, and now it can perhaps go do something else, which is perhaps retrace, create either a lower high if it's really going to transition into a bearish mode, or just continue higher, grab liquidity and just going to continue higher. And it did its purpose. It accomplished its purpose, and it's ready to go on to do something else.
The more interesting thing that if you start to read between the lines, if you have a look at the dollar directs and indirects, euro dollar, cable dollar, Aussie, Kiwi, then dollar yen, dollar CAD, dollar Swiss, and you just get a sense of that flow of money where it's shifting from. So right now we've got euro dollar, cable dollar, Aussie dollar, Kiwi dollar quite strong. So general dollar weakness. Dollar yen, though, like we've analyzed, is moving up, which indicates dollar strength, but it could be more yen weakness that's fusing that. And then you got dollar CAD and dollar Swiss as under pressure. So again, indicating dollar weakness. So it's just interesting to see right now what we're seeing is money's flowing out of that dollar right now. And it's probably also an indication of the market indicating that they're not too certain exactly what's happening, obviously, with the macroeconomic outlook going forward. So there's no guidance. There's very little guidance given. So we can just see that coming. So it's going to be an interesting dynamic in the next coming weeks to see how it all plays out going forward.
Yes, it's actually, I think it's the question, right? What is the dollar going to be doing with all the tariffs and the trade war that has been started by our by the president of the United States? We someone in the chat mentioned that the stop loss for gold has been touched or been hit. Let's see where we are. Let's see if we have the message right. It's this one. Yes. And that's the reason why I don't trade the typical head and shoulder, because that entry was the typical head and shoulder. You wait for the neckline to be taken in, and then you assume that it's going to have a follow through movement right after breaking out, right? So the head and shoulder, I don't know if I can show you. Maybe I should go to a lower time frames. You wait for it to break. This would be the head, right? That would be the left shoulder, and this is then the right shoulder. After it breaks, you take the short from here, right? That's the typical way, the traditional way of trading the head and shoulder, which I don't do, especially for this reason. I like to have my entries there, because that's the area that I'm trying to get in before or as it forms that right shoulder, because it gives me, once it gets here, it gets tricky, right? Let me get it. So once it gets it.
Oh, you try and get in on top of the right shoulder. So
yes,
that's okay, yeah.
That's my entry. My entry is actually as the right shoulder is being created. So if in the normal traditional head and shoulder way of looking at the chart, you wait. You're not doing anything at the right shoulder. You just wait for that right shoulder to come back to the basis, and there you start looking for your entry. But I get in at the right shoulder, and whether or not I'm going to hold through past the neckline depends on the higher time frame. But basically, I'm only going to the neckline, right? Going to the neckline, and then
you're
if I don't have
good profits by then, aren't you? So you
exactly
can decide what to do. Would you pull your stop and leave it to break if you think it's going to break? Do you ever put stops, or what would you do if you thought it was going to break lower?
I wouldn't move my stop. No, I wouldn't.
No, just keep it above your shoulder.
Yeah, I wouldn't. Yeah, I don't like. I've actually checked on my data, and it doesn't make sense for my way of trading to move my stop to break even. The only thing is, what I do is, at the end of the day, if I have like the reason on the daily or the weekly to hold my my trade for longer, I will then put my my stop in profit. But that's the end of the day.
If you're leaving overnight or what have you. Yeah.
Yes,
okay.
That's the only thing I do. But when I'm in the trade during the day, my stops don't move. I don't move them.
Got you. Yeah, makes sense.
So So one of the reason is that that I don't move my stops is that price likes to come back and mitigate the structure it just created. For example, when this is the let me show you guys right here. We have to me this is the, let me see, for me too, this is the left shoulder, that is the head, that would be the right shoulder, and I get in as it is as it is being formed, right? So let's say something down there, or maybe up there, maybe even a little bit higher, depending on what signals I put my stop loss above it, and I target initially that low. And if I'm thinking it could go much lower, and I'm gonna leave it, I'm not gonna move my stop, to anything beyond, because what happens a lot of the time is, as the market does what it's supposed to do, it creates other structures, and these structures, they sometimes, not always, sometimes they get retested again before the market continues. So now you have a newly formed order block created. And sometimes, even if the market seems all is going to go down, in a straight line, a lot of the times it comes back, hits it, and then goes lower.
Yeah.
So if isn't that something that happens so often?
Yeah, had that so many times. It's so annoying because then the trade runs in your direction afterwards as well.
Exactly.
And you're not on the train.
Exactly. And that's a reason I don't move my stops, because if I'm right, my entry, the market is going to create structures as it is moving out of my entry, right? At the area that I entered right here. If I'm right, it's going to leave structure behind, which may or may not be mitigated in an hour time, even 2 hour time, before it actually has that follow through movement much, much lower. So one of the things you could do for everyone who is having this is taking partials here and then leaving the rest open for that runner, but knowing that sometimes it comes back to break even, and not moving your break even, not putting your stop loss into break even, because it's just a way for the market to take away that profit, and then go that profit potential, and just leave you behind with a.
There's lots of ways you can manage that. That's a 2-hour trade down today. You could take half off, leave your stop loss where it is. If it takes your stop loss, you've lost nothing, and that way you haven't moved your stop loss to break even either.
Exactly.
Obviously, you're halving your profits if it continues to push, but that'd be a good way to protect your account balance.
Yes,
because that was already past 2 hours, wasn't it? So
exactly, and that is not only your account balance, your mental capital as well, because
yes, it's a free trade.
Exactly,
Everyone loves a free trade. Yeah,
exactly, and at that moment, you're so free to let this run, and you can do other stuff, because you're already in profit with the position, or actually it's a free. If it goes wrong, you're not going to lose anything.
You've lost
and
nothing because you banked half. Exactly. Yeah.
Exactly, and that's such a difference compared to when you're still holding everything from the initial entry, because you're still there. You're not sure if you're going to be a loser or not, and that's a position of that's very uncomfortable to be in that position, right?
Exactly.
You don't have
that trade might be $1,000 up, and you end up leaving a trade with minus 500. If your risk was 500, whereas peace of mind of taking 500 off and you're free it's really relaxing, far better. You're more likely to leave and run.
Exactly. And as Jonatan was talking today, he said something very, very profound, very simple, but I'm sure many can relate to that. A lot of the times, the initial idea is the right idea. If you have enough experience and you know how to read price, the initial idea is probably right, even though it's not going to pan out as exactly the way you think. But if during the trade you may come in doubts and say, no, I'm going to close it, the market has changed, it's not going to continue, just to later on, perhaps tomorrow, see that the initial idea was right all along. You just had to hold on to it. And that's something, it's very difficult, right? Very difficult to keep your head leveled when you're under pressure, because that's what it is. You're uncomfortable. You're not sure if that uncertainty is it going to be against me or not. And taking partials is such a mind hack, in my opinion. All right.
Thank you, Victor.
Let's look at
Victor, we had a request for S&P 500 from Trader Lawrence. So do you want to go through that briefly?
Sure, we can do that.
Most do that fix. I'm just going to pop off for a bit. So nice to see you,
No
Ashley.
problem.
Might pop on
Good
later.
to see you, Stephen. Take care.
See you guys. All the best.
No problem. See you.
Thank you.
See you, Stephen. Thank you for coming by.
You're welcome. See you, chat.
All right. So S&P 500. That is. Let's look at that. What else do we have? I'm going through the chat to see if there's anything else besides the S&P.
I've been trying to keep an eye on it, and we've had some comments around obviously gold and certain other areas, but I recognized that question from Lawrence. So if you want to do that, I'll give you a heads up if I see anything else.
No problem. No problem. All right. So S&P. Let's look top-down analysis. We are closing by. That looks. Of course, the market has been, the market has been very, very bullish, and you wonder when it does that, when it's predominantly going up and up and up. Although it's the equity market and there is positive drift, price will in the end tend to go higher. But if you have extended periods where there's not any significant retracement, you should, as a trader, you should be wary and start thinking, okay, when is it gonna come? Because in an uptrend, you have those counter trend movements. So it's perfectly normal and healthy that the market does this. Just even if it's keep on going on, in the end, it needs those retraces, right? So this looks ugly if you're an investor, and especially if you just enter, at these levels, it looks very ugly, and you might have a fear of height, price going much lower. But if you look at from a broader perspective, this is just healthy. A correction is something normal part of doing business in any market. Okay, but on the monthly time frame, let's dig into it. We have how's your trading going lately, Ashley?
Well, so far. Very well so far, Victor. I have 18 open positions at the moment.
18?
Yep.
Okay. That sounds like a lot. But of course, they are higher time frames. Of course, they're not something you're not actually looking at them all the time, right?
Yes, looking all the time, but also I've got automated systems in the background to manage it, to enter, etc. And then obviously I layer it, like we discussed the last time, with the other strategies that goes lower time frame. But just in terms of sharing with the audience to get a sense of the journey I take, I've got 18 open positions on that bootcamp account I opened with the 5ers, enrolled 2 weeks ago. So that's the current status of the account.
How many you said?
18.
18. Nice. Okay, so we have on the monthly time frame, of course, we are not only retesting, but managing to break that monthly order block, meaning just by the looks of it, it means that this order block isn't very relevant for traders, right? If they're not respecting it, they're not reacting to it, why should you, right? So it's there, it hasn't been invalidated yet, but it doesn't have much significance in price action reading anymore, right? Of course, it hasn't been broken, right? So until it's broken, it's not definitive. But the fact that we have such a squeeze of that structure, it means to me that it tells me that it's not very effective in indicating where the buyers are coming in. Something else is, and it's not telling us on this time frame. Okay, so that's on the monthly. So it looks weak with that. It looks very weak because of that monthly squeeze to the downside. That is the weekly time frame. What do we see? Of course, we actually have a breakup structure here on the weekly, right? So the weeks, it looks very weak because we broke structure on the weekly time frame. Let's see, what else do we have? Okay, so it broke structure. There's no entry order block to go short if it comes up again to do something like this. So we can't use that quasi to help us get in. Let's go look at the daily, right? So we need to understand we are below the neckline, right? So below this line, everyone on the higher time frame thinks we're weak and we're going to continue to go down, and above this line, it's the red line in the sand telling us, okay, are we coming back, or is just a retracement before we continue, right? So that line is pivotal for the reading of price action. All right, so what else can we get out of this? So we do have a two green candles, bullish bars. We did create a bullish order block that might get retested today or maybe tomorrow, this week. That could be a buying opportunity, because we just broke that. Well, not just, but we did break the neckline. So in terms of market structure, to me, the market has indicated, right, this is the weekly structure, not the daily, and it breaks it already. By breaking it, it told us it opened the door to go lower prices, right? But it doesn't go in a straight line. So it is perfectly normal for it to come back and continue, and maybe use something before it can maybe use a bearish structure higher than where we are before it continues to go lower, if that's the plan of eventually what it's going to do. So we do have that bullish order block. That's an opportunity for something to trade from, take a long from, maybe today, maybe tomorrow, but in any case this week. And if we look for a reversal on the daily, this would be the head, and that would be my neckline. Of course, there's going to be different necklines depending on the time frame. And if we take this, that means that you could be looking for this structure on the daily time frame. And I will have to check if it's visible, that little green candle, see if it's visible on multiple time frames. Not time frame, I mean multiple. Yes, it is. I see one there. Maybe I can choose another one, perhaps this one. That one it doesn't show. I'm gonna mark it with this is the 20. Let me see. This is the 26th. Right, so we do have a discrepancy in price feed, creating this candle being a bearish candle on one price feed, but the majority of them do create. You just see there's some discrepancy. When that happens, I start doubting if I should use that, because I want all time frames, all price feeds to be telling me the same thing. If they're not, then I don't want to be using. I don't want to be using that structure, because I want to use something that is visible for everyone, or at least a majority, without a doubt. And what I just shown is that it looks like, depending on the price feed, you might have a different structure there. So I'm going to be using only this one and not the one on top. That's on the daily time frame, and we have another one here, which might be used when price comes back. And if it wants to go down for lower prices, either now or in the future, it could use any of these in its pathway going lower, right? So that's something for a swing trader to be thinking of. Okay, price breaks the structure on the daily, but it doesn't go in a straight line down. Sometimes it does, but a lot of times it doesn't. It goes up, trapping traders to think, okay, that was the low. We're gonna continue and make all-time high again, only to trap them before it continues to go even lower. So that's one idea. So be on the lookout for a possible short from these structures. But right now we have, of course, that daily order block below us, which may offer us some opportunities for a bullish reversal into higher levels. So this is that is a proper. Okay, so this is the H4. Let us know in the chat, guys, if you like our stream, if you want to see more of these streams and tips, tricks, bad jokes, bad jokes. Just let us know. Tell us in the chat and hit the like button. let us know you want more of this so we can continue to deliver to you. So that is the quasi. This is the left shoulder right there, the head, and we there we go. That would be one area that I'll be interested on the H4. If it comes back to that area, I would be interested. There's nothing here and this area as well, right? So as you can see, the order blocks, what are they? They are points in the market where one side to control. As simple as that. Not too complicated. These areas are then, we could be looking for them for buyers to come back and defend these areas. So when price comes back, I would be interested in looking for reasons on other time frames, lower time frames, put your stop below them and target the high of that structure to begin with, right? If you have more reason, you can start thinking, okay, I'm gonna target something higher. Okay, so that's on the H4, H2. We might get some refinement, but we didn't. There is a reason here, but there's no alignment. I think that's good enough for now. When price gets here at these areas, we can, fine tune the entry more. Look for reversal. What I would do is I would go to the lower time frames, maybe the 5, the 15. Actually, I personally don't go to the 15, but you could, and look for reversal patterns. It could be something like this, and then you get in on the the right shoulder, as I do. Put it below that right shoulder, below the head, or below the whole structure that is being retested, and you target happily something higher that makes sense, either the top of the whole structure on the higher time frame or the top of just that lower time frames. This, of course, doesn't make sense in terms of risk reward, or I shouldn't say this. It's a negative risk reward. Sometimes that does make sense. You'll have to consult the data, but I personally, I wouldn't be taking, because of the way I trade, it needs to be something closer to 1. It can be just below 1, but I don't want to be going much lower than that, because I'm trying to catch the reversal. So I'm not only looking for a little pop, I'm actually looking for that follow through reversal and the new trend that is going to be initiated by that reversal. So that's it. That's nice. I like that. I'm gonna leave it on, and maybe tomorrow we'll visit this idea. And of course, I put it there, but it could be the lower one as well. We don't know that in advance, right? These are just areas of interest where it could possibly, and it could not happen. It could just go on and do something like this. Then it's probably not going to happen. It's going to just continue to go lower after this. If it does this, then price action is telling you it doesn't want to reverse. So why do you want to think it will reverse if it's telling you it's not? All right, good stuff.
Agree. Thank you very much, Victor, for that thorough analysis.
No problem. We are getting to the end of our stream. It is the end. There is something happening though in the market. Do you know what happened? Did Trump say something?
I didn't see anything that popped up, but I suspect it doesn't necessarily need a catalyst. I suspect with the international indices that we see in the S&P, if we get below yesterday's low, and specifically we start breaking the low we set about 2 or 3 days ago, we're going to see again risk off. So on my side, it's going to start going short soon on S&P 500.
Someone said that Trump is on the phone. With Putin. I don't know. I don't know. It's according to this viewer. So maybe that's what's moving the market. But in any case, without any news, we can see we have a nice. Well, depends if you're long or short, but we have a big spike in any case. Right here, where market changes completely, and who knows, it might be indeed that phone call from Air Force One, or maybe it's not. It's the Oval Office, that phone call being made. Well, that's it for us 100%. For today. I'd like to thank you, each one of you that click the like button, and if you haven't done so, it's an invitation to do so. For your presence, your interaction, and this stream. It's all about you guys. Ashley, one for last few comments before we wrap things up.
I think for everybody, just manage your risk. That's your main thing you need to do going forward in trading. And again, once again, thank you for everybody for watching. Hit that like button, and thank you very much, Victor, for being such a gracious host and going through all the analysis. Thank you very much. It's much appreciated from everyone, I'm sure.
You're very kind. All right, Ashley. See you guys all tomorrow again.
Bye-bye.
Join us. Bye-bye.